did a few weeks back. Adam Posen of the Peterson Institute making the case that you could see some quite remarkable policy changes on the trade side, on fiscal impulse, that could lead to conditions where this Federal Reserve might have to consider hiking. Now, again, that is super contrarian, but that's a view from Adam Posen, and people are thinking about those kind of things. Things could change a lot in 2025.
This is why I actually think it's rather significant that a lot of business leaders, financial leaders, are meeting with Donald Trump today, because there is this feeling in the market that Donald Trump would be sort of the change agent rather than President Biden, considering that he's already been in office for 4 years, and that if he were to come to the fore, he'd be very cognizant of the market's response to any of his proposals. So that would be sort of the gut check on anything that he would do. I'd be curious to see what the tone is with some of these business leaders, because that's ultimately what a lot of people are saying is keeping a lot of those expectations in check. Ultimately, markets will have the final word. That remains to be seen.
You'll hear from the former president a little bit later on today. Equity futures on the S&P. Your scores look like this on the S&P 500, adding some weight to yesterday's all-time high. We're up another 1/10%. In the bond market, yields just about unchanged at 431. The euro not doing much, a bit weaker over the last hour, 107.83. Coming up this hour, we'll catch up with BlackRock's Gargi Chowdhury with stocks at record highs. Bloomberg's Craig Trudell as Tesla shareholders vote on Elon Musk's $56 billion pay package. And Subhadra Japa of SocGen reacting to PPI and jobless claims data, which drops in about 25 minutes' time. We begin with our top story. Stocks trading at all-time highs after inflation cools and the Fed leaves rate cuts on the table. BlackRock's Gargi Chowdhury staying constructive on equities, saying this: while the macro picture has been a bit uncertain, the strong earnings we've seen from quality companies keeps us convicted. Gargi's with us around the table. Gargi, good morning.
Hi, good morning.
Not going to ask you about the politics. I'm sure you feel good about that. I'm not even going to ask you, first of all, about the Federal Reserve. We'll get to that in a moment. Do you think that some of the trends you see that make you constructive on equities are independent of all those things put together?
I think so. I think when we look at earnings for the entirety of the year, you see the companies that have the strongest balance sheets continue to be able to throw off cash flow. And those are the companies that are leading. Not every day. Obviously, yesterday we had a little bit of a small cap bounce. And I think we can continue to see pockets of weaker balance sheet companies having catch up. But if you look at a sustainable period of time, if you look over the next 3 to 6 months, I think quality wins out.
That's leading to market concentration, as you know. Should I be concerned about that? Should our audience be worried about that?
I think that obviously whenever we see gains led by a few companies, we get scared about what that might sort of allude to. But I think broadly, if those companies also tend to be companies that actually are showing profit margin, that they're actually showing a huge amount of cash flow and very low leverage, we think that's a good sign. Now, what we're telling our clients to do is to have quality at the core of their portfolio, and then go to a few other areas of the market that have not participated as much, be healthcare, some high quality parts of financials. Even right now, we're kind of thinking about, sort of infrastructure and utilities as other ways to play for the catch-up trade.
Did yesterday change anything for you?
So yesterday was a fun day. I think hearing from Chair Powell, seeing the 1 dot was a little bit of a surprise, given that the data hasn't meaningfully shifted in a hawkish direction since we last heard from them. So to see 3 dots in the April meeting and 1 in the June meeting was very surprising. But did it change anything for me? I think what it did change was a recognition that this is a Fed that's going to remain data dependent, just like they didn't overreact to the stronger inflation data in the beginning of the year. They're not going to overreact to the weaker inflation data. And I think what this means is we have a pretty stable Fed chair at the helm, which I think is a good sign.
A lot of people taking this as bullish. We've heard that consistently from a whole host of different guests, that this basically means risk on. They're going to have your back, essentially a Fed put. If there's weakness, they're going to respond to it, just like what you just said. How much do you lean into the idea that once they start with cutting rates, it will be a cycle, it will be deeper, and it will be something that will ratify what Mike Collins just said, which is bonds are cheap?
Bonds are cheap, especially front end of the bond market, definitely throwing you a lot of really amazing income. So I think investors should take opportunity of that. But I'd also say that when we think about broadly what the Fed is trying to tell us, they're trying to tell us that they're keeping all optionality open, and they really want data dependence, whether or not the market believes that. So in 2025, if there, and this is not the base case, but if we begin to see inflation pick up again, will this be a cycle of cutting rate? No, maybe they pause again. They can start this year, they can start as early as September, maybe December, cut rates a few times, and pause again if inflation doesn't allow them. So what I feel very comfortable about is this is a Fed that's going to remain data dependent and not overreact on one side or the other, which with the strong growth that we're seeing is actually very good for markets, both bonds and equities.
You mentioned the front end of the yield curve. Can we talk about the complete yield curve?
Yes.
Still deeply inverted, negative 40-something basis points, the 2-year versus the 10-year. Have you got an argument for why people sitting at the front end right now should consider going further out along the curve for less yield? What is that argument at the moment?
So the argument right now is if you're sitting in cash, do step out of cash and sort of start buying some of these very high quality assets in investment grade credit, in CLOs, in even certain pockets of high quality, high yield and treasuries, but keep your duration to about 3 to 5 years. I think that is the argument. Step out of cash, step out of 6 months, go out to the 3 to 5 year. There isn't really a meaningful argument to extend duration further than that, given, to your point, the shape of the yield curve. Now, the argument could be, in another world, that growth is decelerating meaningfully and you need that flight to quality bid for duration. We're not in that world right now. Further, given the pressures on fiscal that we're going to have regardless of the election outcome, I think that brings into question why don't we have enough term premium in the yield curve? And at some point, if the market begins to price that in, you're better off, again, in that belly of the yield curve.
It kind of is concerning to me that so many people are going to be really reactive to all of the data and the Fed proclamations, not because I think they're wrong. I think that probably that is the way to go. But does that increase the fragility of markets, that there's huge floods of cash that potentially can shift around all at once? That essentially this is a market waiting for a catalyst, and then you will see that just absolute flood of cash that could overwhelm, frankly, markets that look liquid, but a lot of people are arguing are less than under the surface. Does that type of volatility concern you at a time where bond yields already are swinging around quite a bit?
I think that I don't think concern is the right word here. I think it's something that we have to be thoughtful about. I think when you look at the availability of cash, the $6 trillion of cash that's sitting in the sidelines, that's not a risk-off move. That's asset allocation. People are sitting in cash because you're earning 5.375%. It's not what it used to be, where you're sitting in cash because you're worried about some big event that's going to happen. So I do think we have to think about that as asset allocation, and then think about, okay, what are some risk events that might need to get out of the way before people feel good about investing? One is certainly the Fed. What we hear from clients is people love fixed income, waiting to invest, but waiting for Fed to get out of the way. Well, when and if that happens, there's going to be that cash, but I think that's worthy. That makes sense. Similarly, election is a concern, and obviously we can see some volatility going into October. I think once we're done with that event risk, whenever that happens, we can see investors moving out of cash. Again, we think to high quality equities.
I'm so pleased you said that. There's a massive difference between T-bills and chill and T-bills and tin hats. Like, this is T-bills and chills. It might be T-bills and tin hats later on this year. I've got no idea, but that's not where we are at the moment.
I love it. It's an asset allocation choice, and it doesn't look like a terrible choice when it's 5.5%. And you just get fund manager after fund manager trying to argue against that, but saying, like,
reinvestment risk.
I kind of get it, though.
Reinvestment risk.
It's getting harder to make that argument.
And then every time the Fed meets, they just sort of drop the dots a little bit more and push out the rate cut call. It's getting difficult to convince people.
Yeah, although I wonder what happens when that flood of cash happens. I mean, again, how much could yields possibly go down? Are we looking at a 0.5 percentage point decline in one day? I mean, just think about who's going to even let go of their bonds to sell them at that moment, given the sort of rush into fixed income.
So here's the important piece of that. So it's T-bills and chill now, right? Because you get yield. T-bills and tin hats is a very, very different story. You could accept even less yield at the front end of the yield curve and still be in cash because you're worried about what's happening elsewhere.
Yeah.
That's why it's a really difficult call to make. A rate's coming down because things are scary. A rate's coming down because we've got disinflation, that immaculate disinflation story. Then that cash gets distributed elsewhere. It's a very different story.
Notice that no one's going to really try to work that out. They're just sort of saying, you know, in the next 6 months, this is what's working. And it makes sense. I get it.
You just sort of extrapolate out where we've been in the last 5 minutes.
I mean,
push it
what
out.
else can you do?
6 to 12 months. I mean, that's kind of it. Equity futures right now recovering as Bramo speaks, which is rare. Equity futures positive by 0.2%. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. G7 leaders have agreed on a plan to tap frozen Russian assets to provide Ukraine with $50 billion of fresh aid, that according to people familiar. After months of discussion, the plan is set to win the backing of leaders at the summit in Italy this week. The structure of the loans would reportedly be based on the size of individual economies. The nations would then give loans to Ukraine and would be repaid using the profits generated by the roughly $280 billion of blocked funds, most of which are immobilized in Europe. Apple isn't paying OpenAI to use its chatbot. Apple believes that promoting ChatGPT to its users is of equal or greater value than monetary payments, according to people familiar. The iPhone maker revealed a partnership with OpenAI during its Worldwide Developers Conference this week. At the time, they said ChatGPT will be offered for free on Apple's products. Apple's deal with OpenAI isn't exclusive, and the company is already discussing offering Google's Gemini chatbot as an additional option. Manhattan rents slipped for the month of May, according to data from Miller Samuel and Douglas Elliman Real Estate. Rents were down 3.33% year over year. The median rent coming in at $4,250 per month. New leases, though, were up 41% from a year earlier, but helping to keep prices down, inventories also climbed about 28%. And that's your Bloomberg Brief. John.
Danny, thank you. 42.50 is still just ridiculous. I know we said that already this morning, but 42.50 median rent in Manhattan.
Yes. Well, I mean, honestly, this is what you're looking at. The fact that that's actually a step down from what it's been gives you a sense of just how far we've come.
Yeah, and as we said earlier, that's kind of the division right now between policymakers at the Federal Reserve. In the White House, so we're talking about inflation stabilizing and coming down, things are getting better, and everyone's looking around and saying, yeah, it's still expensive. Yeah. Still 42.50.
Well, that's the thing. I mean, when people strip out healthcare costs, they strip out home improvement, and they strip out what you pay at the grocery store, and they strip out what you pay for your kids' education.
All right.
It's like, you know, everything else you're doing great.
Up next on this program, the morning calls and Bloomberg's Craig Trudell on Tesla CEO, Elon Musk's record pay package, and a special thanks to Gargi, because Gargi, I don't think I squeezed that in. It's good to see you. Thank you. Tesla up by 6.5%. You're opening about 1 hour and 15 minutes away.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
The opening bell, 1 hour and 12 minutes away. Equity futures positive by 0.2%, looking to add some weight to that record-breaking rally over the last 3 days or so. Let's get you some morning calls. First up, Deutsche Bank resuming coverage of Nike with a buy rating at 115 price target. The analyst saying the company is ramping up innovation ahead of the Paris Olympics and can gain back shelf space. That stock is just about unchanged in the pre-market. Next up, Barclays boosting its price target on Broadcom to 2K. The analyst keeping an overweight rating, saying it remains one of the best ways to play AI. That stock is up 14% in the pre-market. And finally, Wedbush maintaining an outperform rating and 275 price target on Tesla. Analyst Dan Ives saying the shareholder approval of Elon Musk's pay package and move to Texas removes a $20 to $25 overhang on the stock, with positive in the pre-market by 6.5%. Joining us on that story is Bloomberg's Craig Trudell. Craig, big day for the likes of Elon Musk and Tesla shareholders. What are we likely to hear a little bit later?
Yeah, based on a late night Musk X post, we're going to get good news on the fronts that you just referred to. The most important one really for shareholders has to do specifically with Musk's pay package, which was arranged in 2018. He hit all of these, sort of moonshot achievements that, the payout was incumbent upon him, hitting those goals in order to get the stock options lined up for him. The issue, of course, was that in January, this got thrown out by a judge in Delaware. And so this is an effort to kind of bolster the case for undoing that ruling or challenging it in the courts. It does not mean that, after today, Musk, goes home from this meeting with his stock options. But it is, a shot in the arm for him and potentially for the board as they, fight this and take that fight to Delaware.
Dan Ives mentioned that overhang on the stock. He said it's been a $20 to $25 overhang on the name. Lisa asked this question earlier this morning, Craig, and I think it's the important one to ask. This feels like this morning, as you were, if the votes go his way. What would have changed
time now
if
at
he'd
the
lost
bottom
this
of
vote?
the hour? Do you see the release of the US PPI data for the month of May?
Possibly
Year over year,
put
the forecast is 2.5% on the prior 2.2%. The range is 2.7% to 2.2%. Month over month, the forecast is 0.1%, down from the prior 0.5%. The range is 0.2% to minus 0.1% expected for the month over month read. For the core PPI, the year over year is forecast at 2.5% from the prior 2.4%. The range is 2.6% to 2.3%. Core month over month, forecast 0.3% from the prior 0.5%, with a range of 0.5 to 0.1% expected. With the PPI data, we also get the weekly jobless claims numbers. Initial claims forecast is 225K from the prior 229K, range of 235 to 218K expected, and the continued claims forecast 1.795 million on the prior 1.792 million.
Pre-market in stock trading for Tesla shares. I am curious, though, to that point of where his focus is. How much does this mean that Elon Musk is going to take the chips from X or some of the other companies and try to find a spot for them in the actual Tesla vehicles, which is essentially the great hope of a lot of these bets in this company?
Yeah, I think it's interesting. Tesla IR spent some time recently with JP Morgan, which just put out a report yesterday, trying to address some of these very questions of just what to make of those threats. And there was an attempt on the part of Tesla IR to kind of separate, XAI, the company that is closely tied to X, is working on, stuff more so like chatbots, whereas with Tesla, this is, quote unquote, real world AI of trying to get, cars that are out on the road to a point where they're able to drive themselves, and really trying to kind of, separate those two. But the fact that he's, devoting time and attention to standing up yet another company over the last year or so, after already kind of taking his eye off the ball and acquiring Twitter, and the effect that that had on the company and the stock. This is precisely what leads to some shareholders saying, this pay package didn't work. It didn't ensure that we had his attention, and that was already an issue before he went out and bought Twitter and built up XAI, but it's only been exacerbated as a result of those moves.
Craig, a lot of people might argue it's sort of a distraction that Elon Musk is here fighting whether he can still get his $56 billion pay package. I'm a little surprised he's not in Puglia, in Italy, talking to some of the leaders down there who are talking about potentially putting tariffs on his vehicles that are made in China. At what point does he need to get on a plane and get over there to try to figure out how to get a couple carve-outs to make sure that he's not penalized in tandem with some of the Chinese auto manufacturers?
Well, there's good news on that front in that Tesla was the lone manufacturer called out yesterday when the European Commission announced those tariffs as potentially, being able to be assigned a different tariff rate than other companies. And, it required quite a bit of paperwork, we're told, to try and, make the case to the Commission that they were, that they received less state support than some of these other companies. And, the way in which the Commission arrived at these rates was based on the level of subsidization. So they need to make the case to the EU that, hey, we haven't made as much off of subsidies as, say, a BYD or an SAIC or a Geely, and therefore don't hit us with this 21% rate that will come into play around July 4th. We should be subject to something lower than that, but that would not be relief that they would feel until later this year, around November.
Craig, just quickly, what did you make in the difference of approach from the Commission versus, say, the government here in Washington?
Definitely more surgical and based on
It's been 5 minutes time now at the bottom of the hour. See the release of the US PPI data for the month of May. Year over year, the forecast is 2.5% on the prior 2.2%. Range of 2.7% to 2.2% expected. PPI month over month, forecast 0.1%, prior 0.5%, with a range of 0.2% to minus 0.1% expected. For the core PPI reads, year over year, the forecast is 2.5% on the prior 2.4%, with a range of 2.6% to 2.3% expected. Core PPI month over month, forecast 0.3% on the prior 0.5%, with a range of 0.5 to 0.1% expected. So with this data, we also see the release of the weekly initial jobless claims number. The forecast is 225k on the prior 229k, range of 235k to 218k expected, and the continued claims forecast 1.795 million on the prior 1.792 million.
The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the...
1 minute remaining. I'll lead with US PPI year over year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions. The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
10 seconds.
Seconds away from some economic data in America, 1 hour away from the opening bout. The scores look like this going into PPI and jobless claims. Equities on the S&P 500 positive by 0.25%. A lift on the NASDAQ up by
2.2%, 2.2%, lower than forecast, 2.5%. Month over month, minus 0.2%, minus 0.2%, lower than forecast 0.1%, and lower than the lowest range of minus 0.1% as well. Initial jobless claims at 242k, 242k, which is higher than forecast 225k. Looking to the market, strength in the S&P 500 and weakness in the dollar here following that cooler than expected PPI reads. Also seen the core PPI reads as well. Year over year, 2.3%, 2.3%, which is lower than forecast 2.5%. Month over month, flat at 0%, 0%, lower than forecast 0.3%. Also noting those continued jobless claims at 1.82 million, 1.82 million, which is higher than forecast 1.795 million. So again, it's a quick breakdown here as the employment situation in the jobless claims report shows a higher than expected read in unemployment claims, as well as the PPI read showing a larger than expected cooling off in producer prices, leading to again some upside strength in the S&P 500 and some weakness in the dollar.
Holding at 2.2 is good. 2.3 for core, down from 2.4, and 3.2 for the ex-food, energy, and trade. That's up from 3.1, so we get a little bit of, I guess, a base effect there. But what we're looking at is jobless claims going up, the labor market maybe weakening a little bit, and PPI.
We have posted out the US PPI May report on the feed for anyone interested as well.
I think, the obvious first question to people around the table here is, are you going to change your Fed call again from yesterday? Since now things are meeting Jay Powell's criteria.
What I'd love to know, Mike, is if the FOMC had this data together with yesterday's data, how those forecasts might change. This data just a little bit more freezing cold water to throw over the dot plot we got just yesterday. Check out the price action. Equities positive off the back of this on the S&P 500, on the NASDAQ, on the small caps as well. We're up by 0.4% on the S&P, up by 0.9 on the NASDAQ. In the bond market, quite a move at the front end of the curve this time yesterday following that downside surprise on CPI. Down another 7 basis points now, 467.80 on twos, call it 468 on a 10-year back in the 420s, 425.58. Put it all together, Lisa. Downside surprise on CPI. Downside surprise on PPI, wrong kind of upside surprise on jobless claims, and the tone of that data together with the tone of the outlook from the Federal Reserve is even more difficult to reconcile.
It seems like the Fed certainly being more cautious than anything else.
So the US PPI year over year prior was revised up to 2.3% from 2.2%.
As others, James Athey put it. This is additional confirmation that the disinflationary trend is underway and that the core PCE will, if you just grind it through the sort of data grinder, will come out lower, and that will give the Fed a chance to potentially cut. This, though, is the messiness of this. When you strip out food, when you strip out energy, when you strip out trade, the inflation actually creeped up on a year-over-year basis. So there are some real questions under the hood. That said, definitely some positive progress.
So Treasury yields fall following that PPI. Rates unexpectedly slow down, as well as those jobless claims numbers hitting the highest since August.
Cuts in 24, alongside Team December now, because we had a change over at UBS just yesterday. I want to come to SocGen first. So, Batra, let's talk about this data. What does this data tell you? And put it together with what you heard from the Federal Reserve Chairman yesterday and sort of square that circle for us.
This is, of course, one data point. The fact that the claims number went up is
so in the Eurozone, Germany's 10-year yield falls after the US data as well. It's lost down around 3 basis points at 2.5%.
You tend to see that led by initial jobless claims. It tends to be a leading indicator. But that said, again, one data point doesn't make a trend. We'll be looking to see what happens. What was interesting to me in yesterday's summary of economic projections is the fact that the Fed kept core PCE at 2.8% for this year. So they're expecting about roughly 0.2 increases month over month for the remainder of the year in core PCE. So in that sort of context where inflation is still relatively sticky and the job market is quite strong and growth is in the context of 2 to 2.5%, I don't see any need for the Fed to rush in to cut rates.
I want to couple your inflation outlook with their outlook for unemployment. They see it staying exactly where it is right now, at 4%, year-end 2024. Jonathan, how are you thinking about the incoming information stacked up against what they're projecting for the rest of this year?
Well, that was actually a big reason we went from Team September to Team December. I mean, we were actually forecasting an increase in initial jobless claims today to 235. We were expecting an increase in continuing claims, and we were expecting a downside surprise on PPI, and we were actually one of the few shops expecting a 0.2 on core CPI yesterday. We have been watching the data slow and think there's a slowdown underway, but we got an FOMC that really just seems to think growth's fine, and not just fine, but great. I mean, they didn't even mark down their assessments of the pace of the expansion in the first paragraph of their statement, which is typically where an FOMC would acknowledge some moderation. But they seem extremely comfortable with the current stance of policy. They feel like, you know, the labor market is still healthy. I mean, I will agree that is one place where if it does roll over rather quickly, they might respond. But it really looked to us like an FOMC that seems very comfortable waiting and without a lot of urgency to start dialing back restrictiveness.
Subhadra is sitting here thinking, all right, everybody just keep coming to my way, because I've been saying this for quite a while, or no cuts at all this year. Are we asking the wrong question? Are we basically asking when are they going to start the rate cutting cycle and not what the rate cutting cycle is going to look like?
The Treasury 2-year yields fall to 4.66%. That's the lowest since April 5th on the 2-year yields.
Much more deeply next year in the face of that weakness that Jonathan was talking about and a lot of people are projecting.
I think I would prefer that than being in the situation that the ECB is in, where they've said they've cut rates, and then now it's uncertain if they're going to cut in July. It doesn't look likely that they'll cut they might cut in September. But then after that, they're looking at unit labor costs going up. They're looking at other factors that's going to keep them on hold. I don't see the need for the Fed to cut. I don't see the need for any sort of insurance cuts. Why should they cut and then wait for 6 months to deliver the next cut? Why not just wait for the data to corroborate a need for cuts and then go on some sort of a methodical fashion, or maybe once a meeting or once a quarter when, to ease policy? I just don't see kind of the rush for that first rate cut.
Jonathan, would you agree with that? Are you sympathetic to the view that some have espoused, including Neil Dutta over at Renmac, talking about how this is a rapidly weakening economy, and if the Fed doesn't get ahead of it, that the declines are going to be harder to counter in the future?
I mean, if I were a monetary policymaker, I would probably thinking about some calibration might be needed to ward off worst case outcomes. I think one of the problems is that we're seeing slowing in growth, but we're not really seeing such severe slowing that monetary policymakers seem like they really need to act urgently. But, you know, we have that. That's our expectation, is that growth is going to slow. It's going to take the FOMC time to digest. But next year, they're probably going to want to pick up the pace a little bit, right? I mean, so we have them after they see payroll slow, after they see GDP growth slow, we've got a little bit lower inflation forecast than they do, that they're going to start to feel like, look, maybe policy really is restrictive, something they've been debating a little bit. Maybe we need to get out of this restrictive stance of policy a little bit more quickly than we expect. So we expect them to have the same terminal rate that they have in the S&P, but get there a lot faster next year and into 2026 than their current projections.
John, I don't want this to turn into a therapy session for Wall Street, but I just imagine it must be incredibly frustrating for you to have absolutely nailed the data of the last 24 hours and then been surprised with the way they've responded to it. What are you struggling with right now? Their reaction function or just the way they're seeing the data that you've been forecasting? What is it?
I've been a little surprised at their sort of lack of acknowledgement over the degree of cooling I think that's underway. I mean, non-farm payroll employment looks good, is certainly a headline, and they've sort of walked away with that as sort of a summary statistic for the strength. But even if we look at non-farm payroll employment, I mean, private employment over the last 12 months has slowed to sort of 178.
Can I jump in? You say they walk away with that. And I walked away from the news conference yesterday and I heard Chairman Powell say something like maybe 272 overstates the strength of the labour market. I just wonder who they is on the committee right now. I find it really confusing. 272 for some seems like it's the real deal, hence the dot plot. It's another part of the dot plot that feels like they're in Camp Powell. Maybe it overstates strength. When you say things like they, who are we even talking about in the committee anymore?
I would actually, in terms of this narrative, I'd lump in the vast majority of participants. I think when I hear Governor Waller talk about the strength, think about Philip Jefferson's speech before the quiet period, talking about the strength in private domestic final purchases. I mean, they're all pulling out relatively strong components and cuts of the data at the moment, and I feel like you got an element of that in Chair Powell. Even though he might acknowledge that the 272 was overstating, he's not acting.
Keep in mind, we have also posted out the U.S. initial jobless claims May report on the feed.
At this point, they don't know what they're doing, and so they're going to be honest about that. The difference between Subhadra and John is that you guys have a forecast, and you make a forecast, and they have 19 forecasts, and we, for our convenience, pick out a median and say that's their forecast. It's not their forecast. There's 19 different forecasts, and the range is pretty wide, and especially if you look at 2025. The range is very wide. There's a plurality in the middle, but they don't know what's going to be happening by then. So, and another quarter from now, in September, they'll change their forecasts and their dot plot again, and we'll all recalibrate. I think basically they're in a sort of hold mode, risk management mode, I guess, at this point. We'll see where inflation goes, and we can move, but we don't have to.
John, you didn't want a therapy session. I think that actually
right now, to get one?
A lot of people are looking for a therapy session because there was a lot of uncertainty, and it's been a very challenging year. So, Subhadra, I'm curious how you come up with a projection of there is enough strength. We don't need those sort of cuts to sort of be cosmetic or get ahead of that weakness. What gives you conviction in that? What's your guiding compass at a time of such great uncertainty?
You can listen to the Fed. For instance, when you listen to John Williams from the New York Fed president, what he said was his expectation is for growth in the context of 2 to 2.5%. He's expecting the unemployment rate to be around 4%. And he's expecting core PCE above or at or above 2.5%. So even from what they're saying, just from their own forecast and the summary of economic projections, leave alone our forecast and
so the S&P 500 has now wiped out gains from that PPR report. They're still up spot 1% on the session. A dollar paired back. Some of those losses still up as well, spot 1%.
To our own forecast from our economists, what we're hearing from the Fed is also consistent with the Fed that needs to be on hold for the remainder of the year.
Honestly, I gotta say, John, one thing that people, Jonathan Pinkel, one thing that people keep saying is all of this out there, it sounds bad, it's hard to gauge, whatever, but NVIDIA is going to change the world. We're going to have all these technological advancements. We're going to have fiscal impulses that come down the pike. How do you factor in sort of the nebulous concepts that have driven this market this year, as opposed to sort of overarching macro top-down views?
So we could get an NVIDIA boost. I would say if that really was a productivity boost, we would see lower inflation, and the Fed should probably have lower rates as well. And the fiscal policy obviously has been huge. I mean, it's really done a lot to insulate the economy from the rate hikes and the rapid rate hiking cycle of Fed. And that is an impulse that's fading right now, and we're going to head into 2025 with a year Congress is probably going to spend having to rewrite a substantial amount of the tax code to avoid the fiscal drag at the end of the year. So these are all meaningful influences. I mean, we all just have to sort of do our best, look at the details, aggregate up. But I mean, I would sort of echo this point. It's not necessarily that we can debate how we're thinking about our growth forecast, but if we take the wide swath of FOMC participants, they just don't seem to be internalizing any trade-off between growth and the level of interest rates right now. And that just seems to be a group that is willing to wait. And the other reason we pushed out our call is just, when they get into September, if they're still not facing a trade-off with weaker growth, I think the arguments will carry the day to wait longer.
I have to wonder, Subhadra, August 22nd, August 23rd, I think it's August 23rd that Jay Powell is going to be in the Tetons and he's going to be talking to people, giving a message. At one point, it was a very clear message. Pain. It's all going to be pain. We need to get this under control. What's it going to be this year?
I think it's staying the course. I think it's caution. For the most part, the Fed is going to strike a cautious tone. In my view, at least, I felt like they pivoted too soon towards rate cuts late last year, and I think that they're going to take a much more cautious tone and wait for the data to guide them on policy. So our expectation is that they'll start cutting sometime in the first quarter of next year, and then deliver a steady set of cuts for the remainder of the year. But then the terminal Fed funds rate is probably going to be higher. We think that the R-star is also higher, and you're seeing that in the market pricing for both the Fed as well as for the 10-year yield, which is higher for longer. So the market is ever so slowly calibrating to a much higher R-star. And so I think that the Fed is going to be somewhat cautious. This feels like a little bit of a paradigm shift, if you will, from the period after the great financial crisis when we were bringing down the R-star ever so gradually. Now we're going to go the other way and start recalibrating R-star higher.
Just perfectly said. It feels like post-GFC. In reverse at the moment, that's for sure. A special thanks to Team 2025 and Team December, Subhadra Japa and Jonathan Pingle. Thank you. Just want to summarise some of the data we got about 15 minutes ago. Mike McKee, what's your take on things? PPI, jobless claims.
PPI also surprises the same way that CPI did yesterday, comes in much lower, although it's mostly goods, and within that category, it's mostly energy. So there are a lot of declines in prices at the factory gate, but it is the big surprise came from how bad energy fell. Jobless claims, a surprise because they haven't been going up. Now they did. We'll see if this is more of a one-off, but if it starts a trend or we get into a new trend level, then the Fed has something to talk about.
We've had a few more head fakes on that particular print, jobless claims, over the last few months. So we'll see if this one is a head fake or not. This from Renaissance Macro just moments ago. The growth and inflation trade-offs for the Fed are shifting. It's getting close to time to recalibrate policy. I imagine we'll hear that a few times a little bit later today.
Neil, I hear you pounding the table. I hear it loud.
Yeah,
I get it. You're like, let's go, let's go, let's go. It's interesting, I'm curious why people are not on that page. And why he is on that page, considering that it's sort of unclear at this point.
I didn't hear Neil Data in that news conference yesterday.
No.
At all, that's for sure. Let's give an update on stories elsewhere this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Tesla will likely raise prices for its flagship model, the Model 3, in European markets. That follows the announcement that the EU could impose tariffs on imports of EVs from China, even from Western automakers. Tesla manufacturing does have a large presence in China. The automaker delivered over 900,000 vehicles from its Shanghai factory last year. Tesla said the price increases will likely go into effect on July 1st, and the tariffs would go into effect just a few days later. Donald Trump is back in Washington, D.C. today. The former president is meeting with some leaders of the country's biggest companies, including Jamie Dimon, Jane Fraser, and Tim Cook, according to people familiar with the event. During his one-day return to the Capitol, Trump is also set to meet with congressional Republicans. And Florida is in a state of emergency. Heavy downpours flooded Miami streets and grounded hundreds of flights at the Fort Lauderdale International Airport yesterday. The state has already seen a record amount of rain for the month of June, and more is expected today. Officials projecting that damages will top $1 billion before the rain stops. That's your brief, John.
Danny, thank you. Thanks for this morning. Up next on the program, setting you up for the day ahead and going into the weekend. We'll catch up with Anne-Marie from a beautiful Italy. From New York, this is Bloomberg.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool.
It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power.
This is Bloomberg.
Counting it down to the opening bell, about 14 minutes away. The S&P 500 positive by 0.2%. Equity futures with a bit of a lift. Bond market rally again. We're down by 5 basis points, 4.2655 on a US 10-year. PPI coming in a little bit softer than expected. That's the right kind of downside surprise. This is the wrong kind of upside surprise on jobless claims. Claims come in at 242. The estimate was 225. We've had some head fakes in the past with this read over the last 6 months or so. Let's see if this is another one, but that would be concerning if it continues. 242 on jobless claims. Here's your trading diary for today and tomorrow. President Biden meeting with Ukrainian President Zelensky at the G7. Former President Donald Trump in Washington meeting with lawmakers and CEOs. Treasury Secretary Janet Yellen speaking with Fed President John Williams at the Economic Club of New York. Tomorrow, UMich Consumer Sentiment Survey data and a BOJ rate decision to wrap up a busy week and get you to the weekend. Joining us now before that weekend is AMH at the G7 meeting in the south of Italy. Anne-Marie, set us up for the next 12 hours or so. What are you expecting to hear?
Well, what's really important is going to be Biden's press conference alongside Volodymyr Zelensky. President Biden is really going to want to tout the fact that the Biden administration was able to get over the finish line, really what has been their brainchild for the past few months. And this was the idea of tapping into the future appreciation that net interest that these foreign and frozen and mobilized Russian assets can potentially accrue. So this is a big win for the Biden administration. He's also going to sign up with Zelensky a bilateral security pact. Of course, we also want to keep an ear out for what potentially Larry Fink and Satya Nadella may say. These are 2 executives that are coming here to Puglia at a side event co-hosted by Biden and the Italian Prime Minister Giorgia Meloni. They're not going to mention China by name. I highly doubt it. But this is about critical infrastructure in lower and middle income countries. And I think really what this is going to be about is basically saying sign up for what the West wants to do, not potentially what China wants to do. And then, John, a little bit more lighthearted. Potentially the fanfare, though, won't be light. I'm interested to see, although Biden is skipping tonight's dinner with G7 leaders, I'm interested to see what Meloni decides to put on the menu, but he will be at tomorrow's G7 leaders dinner.
Talking about Giorgia Meloni and how she's really leading this, how much has the tone changed from prior G7s, just simply because she is representing a sort of different swing in the voter base based on where the existing politicians, where they have been representing?
I think a question coming into this after the European parliamentary elections and after the polling we've seen in countries like the United Kingdom that's going to have an election in 3 weeks, and the polling we've seen in France and in Germany, and the fact that AfD lawmakers literally did not show up to President Zelensky's address to the Bundestag, what you can potentially ask going into this is Europe moving to the right towards Meloni, or is Meloni moving towards them? And I think what you see is that Europe is definitely moving more towards Meloni. As John said earlier this week, this G7 is Meloni's G7 in so many ways, because you have a number of leaders coming here as lame ducks that do not have the backing at the moment of their electorate, and potentially, in as soon as 3 weeks, may be out of a job.
There's a great headline on Politico today. 6 lame ducks and Giorgia Meloni meet the G7 class of 2024. Rings true. Anne-Marie, let's have some fun. Let's talk about the menu. I was at a Macron event a couple of months ago, and there was no food. There was no food at all. There was just black coffee. Can you tell us what you think is going to be on the menu later? And can you tell us how they're feeding the journalists on the ground in the south of Italy?
Well, if they're feeding the journalists at any caliber is what they're going to feed the leaders, then the menu is going to be absolutely spectacular. Even for the journalists, someone like me, as I would say, sono celiaca, I have celiac, I don't eat gluten. They had 2 tables set up with pasta, cookies, cornettos, the croissants in Italian, that are gluten-free. So the food has been unbelievable. I'm interested also in the wine list. I don't know, John, do you think they're going to go Negro Amaro? Are they going to go Susu Mignello, Primitivo? We'll have to see. But I will say this, the Italians are definitely showing up on the hospitality front better than any G7 I have attended.
If you're confused, this is not Bloomberg TV. This is the tourism board for the south of Italy. AMH from the G7. Anne-Marie, thank you. We're not jealous at all.
You know, I'm on strike for the rest of the show. That's it. Until you send me there, I'm not speaking.
Such an Italian thing to do. Isn't it amazing?
I know, it's ridiculous.
Just like, you know, lay it all out.
And it's, of course, you know, softball basically pitched for southern Italy.
A security source announces that Hezbollah launches the largest drone attack on Israel since the beginning of the war. So they say that they launched an attack with rockets and drones on 6 Israeli military targets.
They can sort it out next time. They'll learn from that.
Yeah, exactly.
You know, foreign journalists come in. What do they walk away with? They remember what they were fed.
Didn't Alitalia used to have the most amazing food?
They still do. Erita now. Fantastic menu.
Didn't they go bankrupt?
They did, and that's why. Probably. I'm not saying that's why. We need to talk about this market. CPI, softer than expected. PPI, downside surprise. Jobless claims in the wrong direction. Square that with what we heard in that news conference and what we saw in those forecasts from this Federal Reserve.
Andrew Hollenhorst does it by saying, follow the data, not the dots. I really like that idea. Of course, he is still calling for a significant weakening and a significant rate-cutting cycle to begin this year. How you interpret the data, up to you, have fun. But the dots not giving that guidance.
We'll follow that data, and we keep following that data. We'll follow that data into tomorrow. Coming up tomorrow, Jeff Yu of BNY Mellon will catch up with Pooja Sriram of Barclays, Morgan Stanley's Michael Zezas, and PG&E CEO Patty Pope. Looking forward to all of that. Your equity market is positive by 0.3% on the S&P. Your opening bell is about 35 minutes away, and the bond market rally, Bramo, it continues. Yields down 5 basis points.
Shot, chaser, and then another shot with the PPI coming in softer than expected. In the labor market, are we seeing a real softening?
Just need you, Mitch, to come in, going into the weekend, and then the trip's complete.
Oh, is that it? Is that the
Mitch is super important.
It is super important. Forward year.
You take that phone call and tell them how you feel.
Oh, I will. I'll answer online.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
October of 2019, you surprised the business world by stepping down as the CEO of SAP, a very, very large company whose value had more than doubled during your co-CEO position and CEO position. and you took a position with a much smaller, less known company, ServiceNow. Usually people, when they leave a job, they go to a bigger company. Why did you go to a smaller company?
Well, I saw the future and where it was going. First of all, I want to say I had a great run at SAP, and it was a pleasure taking them from 39 billion to 163 and really inspiring lots of people and customers, and it was a wonderful experience. But after 17 years, nearly 10 as CEO, I was ready to do something different. And when I saw ServiceNow in the marketplace, I knew what it was, and I knew what it could do. And I knew with my background, I was a pretty good cultural fit for what ServiceNow needed to scale it.
So let me ask you, what does ServiceNow really do? Tell me in simple English language that everybody can understand. What do they actually do?
40% of the CEOs say today, if I don't digitize my operations, my company will no longer be viable in less than a decade. So we were the IT backbone for companies all over the world. How do they manage their assets, run their operations, secure their operations, all things digital having to do with IT.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
The effective Fed fund rate is unchanged at 5.33% for June the 12th.
This is Bloomberg.
From New York City for our viewers worldwide, I'm Matt Miller. Futures rocket higher after another better than expected inflation print. The countdown to the open starts right now. Coming up, the latest Fed inflation print, the latest inflation print, nothing to do really with the Fed in terms of the data, that's BLS. Coming in lower than expected, sending futures rising and yields falling. And as the Fed signals just one rate cut this year. We begin with a big issue, mounting evidence of disinflation.
We're expecting a downside surprise on PPI, and we were actually one of the few shops expecting a 0.2 on core CPI yesterday. We have been watching the data slow and think there's a slowdown underway, but we got an FOMC that really just seems to think growth's fine, and not just fine, but great. It really looked to us like an FOMC that seems very comfortable waiting and without a lot of urgency to start dialing back restrictiveness.
Joining us now to discuss is Liz Young-Thomas, SoFi Head of Investment Strategy. Liz, great to have you on the program this morning and on a good news is good news day, right? I mean, inflation slowing down for the PPI after the better than expected print yesterday for the CPI. Markets rocket higher again. How much more room does the S&P have to run?
Well, I won't put a target on the S&P, but I do still think that the market is in a mode of celebrating cooler data, celebrating economic data that comes in a little bit slower, but not too cold. And I think we'll stay in this phase for a little while still because we've been waiting for it. We've been waiting for inflation data to give us some decisive moves downward and frankly, been waiting for at least something to have a negative sign in front of it because what we've been talking about for so long is that, yes, inflation stopped growing as quickly, but it was still rising. So what we needed to see in order to actually take some of the pressure off of consumers was for there to be some month-over-month negative prints. Now, many times that gets misinterpreted as a contraction or something that's terribly wrong, but really when we're looking at the cumulative effect of inflation since it started rising, consumers are dealing with over 20% up in prices in many of those non-negotiable items. So this is still being celebrated by the market, as I think it should be. As the year drags on, the question becomes, when does cooler data become too cool, and what will the Fed do as a response?
Well, and which industry groups is it not great news for? I mean, yesterday we were talking to David Rosenberg. Of course, he's a noted bear, but he says, look in the beige books over the past year, and you'll see that pricing power is declining, right? Corporations are having tougher times raising prices. Where do you see the pain from this?
Well, raising prices, that is true. It is true that it's tougher to pass through the pricing increases that have occurred because everybody knows that the story is inflation has come down, or at least the growth of inflation has come down. So those pricing pass-throughs that benefited companies through much of 2023 because it grew the top line, so it grew revenue because prices were being increased by passing them through to consumers, that has slowed down quite a bit. So now it's a matter of, can companies manage their operating margin with revenues that are no longer benefiting from those pass-throughs? And that's going to go to companies that are well capitalized. It's going to go to companies that have a strong competitive position. And it does make things more competitive in certain industries. As inflation falls in the goods sectors first, it's been more difficult for those companies to pass it through, so companies that are very goods intensive. We've still seen quite a bit of sticky services inflation. Now, I don't think that companies are going to be able to pass that through as easily, but there is still pricing pressure on the upside in some of those services components.
All right, hang on a second, Liz, because I do want to talk more with you about the consumer. I think you have a great perspective on the consumer from SoFi, but right now I want to get in a little deeper to the economic data. More signs of slowing inflation here in the U.S. The producer prices, PPI, decline in May, an actual drop, and we were looking for a rise. Let's get over to Michael McKee, Bloomberg Chief Economics and Policy Correspondent. So, Michael, good news is good news.
Well, good news is good news if you're looking for a rate cut. Jay Powell told us a story yesterday. We needed to see weakening labor market and falling prices before we get a rate cut. Well, guess what we got today? You can see what happened with the PPI headline down 0.2 on the month, and the PPI core came in flat. Jobless claims jumped by 13,000. Question is, will that continue? We're going to have to wait a couple weeks and see if this is a new trend in terms of layoffs. But in terms of prices, what happened? Well, we got a way to show you that. If you have a Bloomberg, go to ECAN Go, and it breaks down what happened. And if you don't have a Bloomberg, call us up and we'll get you one. But you can see there, purple is energy in this chart, and you can see the big move was in energy. Liz mentioned that, down 0.8%. It really pushed PPI down overall. That raises a question of whether it will continue, but what we're seeing in retail gasoline prices when you go up the ladder here is that we are still seeing some declines in prices, which would affect consumers and be good news. Now, overall, the Fed is going to be looking at what's happening with inflation more than jobs at this point, because it's only the jobless claims numbers that changed. And when you look at what's happening with inflation, they want 2 or 3 months. Well, they got at least a month here. We now see that the PPI and CPI went down on a headline basis over the last month. PCE is the one we have to wait for at the end of the month. But now with PPI in, we're going to start seeing some people figure things out. And my initial guess is we're going to see PCE come in rather low as well, if not negative by itself. So the story the Fed wants to see has at least started.
Mike, I had a viewer write in yesterday and say, you know, we're adding jobs to this economy. The World Bank is raising its expectations for growth. Markets are at an all-time high, like 27 new all-time highs this year. Why on earth would the Fed cut rates? Who thinks that these rates are restrictive?
You know, it's funny you should mention that, because I asked Jay Powell that exact same thing yesterday. And basically what he points to
Russian energy
is
minister
the
says
impact
Russia
of
will
real
solve the
rates
oil
on the
overproduction
economy.
issues
As
in
inflation
June.
goes down, real rates go up, and so the Fed doesn't get any looser, and that's hurting things like housing. It makes bank lending much weaker, and so at some point they think this is not going to be the 5.5% top, is not going to be the level that's appropriate for the economy. They just want to wait and not move it down until they are certain they aren't going to have to move it up again.
All right, Mike, thanks very much. Michael McKee there, Bloomberg Chief Economics and Policy Correspondent, talking to us about the data. Liz Young-Thomas from SoFi, where she is Head of Investment Strategy, is still with us. And Liz, I think at SoFi you have a really unique perspective on the consumer. And that's probably one area where people are wishing for rate cuts, right? It's more expensive to finance a home than it has been in a generation. It's more expensive to finance a car purchase than it has been in a generation. How is the consumer doing now, especially since we see savings rates just have completely dropped to pretty much zero after the pandemic?
Well, I think one of the most important things that Mike talked about was that energy prices have come down. And we know that just the feeling of energy prices coming down and prices being lower at the gas pump does help consumers' sentiment rise. So when you look at surveys like the University of Michigan Sentiment Survey, that is tilted more towards inflation as a data set. So I would expect there to be some increases in the University of Michigan Sentiment Survey. So I think overall consumers are hearing this news and feeling good about the future. And that's been something that has been a weight on some of those numbers in the past. And I'm talking about the sentiment numbers. Consumers get asked, how do you feel about the present situation? How do you feel about the future situation? And the future had been sort of a drag because people were worried that inflation would not come down or that it would stay this high and they would continue to have this pressure. So I think these are good signs. What we've seen in a lot of the consumer spending data, and this is consumer spending data at large, yes, they've slowed down in some places. Yes, credit card debt is higher, but consumers still want to spend. They're still optimistic that they can continue
Russia
to
say
do
they are
so
to compensate for
because
crude
the labor market has
overproduction
remained
through
strong.
September.
I can really only say that for this moment in time. I do suspect that as the year goes on, the labor market will cool further. And I think it's going to be difficult for the market to get used to something like an unemployment rate above 4%. We only just had our first 4% unemployment reading, and that was after 28 straight months of unemployment below 4%. So I think there's going to be a little bit of a digestion process there. I would expect consumers to pull back a little bit further, but not yet freak out about the data being a bit cooler.
How does the labor market look, especially for your clients? I mean, Gen Z, they're still very young, but they haven't been getting promotions. I think in the last year, it was only 2.1% of respondents to a survey said they'd gotten promotions, and it had been higher, like 2.5%. This year, we've seen the least promotions for the entire workforce in at least 5 years. So even though, people got jobs, they're not quitting and they're not getting raises, or at least the salaried workers aren't getting promotions.
Well, the quitting part of the equation is really just getting back into balance with where we were pre-pandemic. And we know that we had this very, very tight labor market after the pandemic where there weren't nearly enough workers to fill the jobs that were open. And now a lot of those balances are coming back into a more comfortable place, which Jerome Powell has referenced a few times in his press conferences. So we want to see the labor market get back into a better balance that way. If it weren't, and if employees still had quite a bit of that power, we'd see wage pressures rising. And that's when we used to talk so much about the wage price spiral. So those risks have also come down. I would view that as a positive. The voluntary quits rate is a good indication of how people are feeling about whether or not they would get a different job that was better or higher paying. And it seems lately like people are staying in their spots for longer. Again, this is not a concerning thing, perhaps frustrating for people that had expected the labor market to stay in the ways that it was before. But this is not necessarily something that's sending a signal that the economy is in trouble. Unemployment sends a signal that the economy is in trouble. Jobless claims send that signal. That's not what we're seeing right now.
What about debt loads, Liz? I mean, You know, people come to SoFi to consolidate debt. Student debt is a problem that people have been talking about for a long time. Now we see, there was a great story in the Bloomberg yesterday, some companies are helping employees to reduce their student debt along with matching 401k contributions. But you've also got buy now, pay later, which is hard to measure. I mean, how does consumer debt look to you?
Well, if you look at all of the data that's out there about credit card debt, auto loans, and delinquency rates, we have seen an increase in delinquency rates, and it's been pretty steady over the last few quarters, both in auto loans and in personal loans and in credit cards, and that's for the U.S. at large. That's not specific to SoFi, but there has been an uptick. Now, it's easy to look at that data and see the uptick and be concerned with it. And I do think that it's something we need to watch. I do think it's an indication that consumers, particularly on the lower income side of things, are feeling a pinch. But if you look at it over a long period of time and compare it to previous crises, especially financial crises, it's not at a concerning level at this point. But it is something that we do need to watch, and it is something that is increasing the delinquencies in consumer lending.
All right, Liz, thanks very much. Liz Young-Thomas there, SoFi head of investment strategy, talking to us about the economy, the Fed, and the consumer. Joining us now with a look at the stocks, individual stocks moving ahead of the opening bell, is Abigail Doolittle. Abby?
Matt, we're getting pretty used to the S&P 500 and the NASDAQ making new all-time highs, but what we're not used to is Tesla being a part of it. But today that is the case, at least in the pre-market. The stock up nearly 7% as CEO Elon Musk on X said that shareholders had approved his, in theory, $56 billion pay package. Now, this doesn't really carry a lot of legal ramification, but it's more symbolic of trust and faith in the CEO and the fact that he will be staying at Tesla. So again, those shares up sharply. Broadcom, this stock is soaring up more than 13%. They beat. There's a positive forecast. But very importantly, the growth coming from AI really offsetting weakness for some other chips. Investors liking that a lot. And then finally, Roaring Kitty back in the news. GameStop, after plunging 17% yesterday, up 3% in the pre-market today. The calls that he is supposedly involved in that expire next Friday, well, there was tons of trading late in the day, bigger pockets of trading. Those calls were worth $6 or thereabouts at one point, $13. Lots of volatility. We still don't know whether he actually owns them and whether he plans to turn them into stock or if he's part of that trading yesterday, Matt.
All right, interesting, as always, to follow the GameStop story. And also, Tesla is a huge one, Abigail, that we're going to continue to talk about. Those shares jumped this morning, as she just showed you, ahead of the shareholder meeting.
The biggest AI project on Earth is autonomous driving. And of course, Tesla is in the pole position for that.
We'll speak with an analyst who's bullish on the stock of a company that may pay its CEO a package worth $56 billion. Pierre Ferragu of New Street Research joins us next. This is Bloomberg.
I think I was around so many powerful people my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, you know, any given day it would be the head of a studio and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Tesla's annual shareholder meeting kicks off this afternoon. Shares are surging after the CEO, Elon Musk, said shareholders voted, quote, by wide margins, end quote, in favor of reapproving his compensation package, which could be worth as much as $56 billion, and moving the company's legal home to Texas. Joining us now is Pierre Farragut, New Street Research Global Team Head of Technology Infrastructure. He has a buy rating on Tesla and a price target of $245. Pierre, great to get your take on this. First of all, the plan. I don't know the details. You do. That's why we have you on. But if a company's going to pay its CEO a package that could be worth $56 billion, I don't know that I'd want to be invested in that company. It seems like a lot of money.
Yeah, it's a very strange way to think about whether you want to invest in a company or not. Like the $56 billion taking out of any other contract sounds very odd. Think about it a different way. If I promise you for like multiplying by 10 your money, then I'll get paid 10% of the value of the company. And if I don't reach that goal, I'm not going to get paid. Do you feel that my compensation package is well aligned with your interest? And that's the way you should think about this compensation package that was signed in 2018, in which Elon was promised to get vested, the ability to buy shares in the company at the valuation of the time over the years for a total amount that would amount to 10% of the total value of the company over a long period of time. And so that was a very, very well aligned package in terms of aligning the interest of the CEO with the interest of shareholders without any possible doubt.
I totally get that, Pierre, but here's the thing. And, just on principle, fair is fair, right? If you voted back then to give him the prize, if he achieved the targets, now he's achieved them, so he should get the prize. I get that. But now, looking back, it just seems like way too much money to pay someone, and you have a chance not to do that. Plus, you could get rid of a CEO who's busy doing way too many other things, a lot of people would say, and not necessarily great for the brand. It seems like a double whammy. Why wouldn't you vote for that?
Yeah, you're creating a situation that is a bit odd, because you're telling me about a company in which you're invested, but you're telling me you don't like the CEO and you don't like the influence of the CEO on the company. So what are you doing here?
Well, things change, right? I mean, there was a time when he was focused solely on Tesla. Now he's got his focus also on Twitter. He's also focused on SpaceX. He's also focused on Neuralink. He's also focused on the Boring Company. Plus, he's also focused on all of the social and cultural arguments that he seems to get in all day, like how can you spend that much time on Twitter and still get stuff done? This guy has a lot of other stuff to do.
Yes, and he has been doing a lot of other stuff for the last 10 years, so I still don't understand why you would be in this company. You're creating a situation that doesn't exist. Someone who doesn't like Elon Musk, someone who thinks he's too busy. He has been as busy as he is today for the last 15 years, even the last 20 years. So nothing is changing. So you're creating a situation that doesn't make sense. People who are invested in Tesla today, they believe in the mission of Tesla. They believe in the value of having Elon Musk on board. And they voted very rationally in favor of that. And that explains very clearly a very simple fact you see today, which is that shareholders have voted in favor of the package. And that's the reality. So, of course, yes, people who don't like Elon Musk probably would have not voted for that package, people who think he's too busy, people who think he's damaging the brand, all these people would have not voted for the package. But as a matter of fact, they don't have any voting right because they are not shareholders of Tesla.
What about his damage to the brand? I mean, there was a time when he wasn't so outspoken on sensitive issues, and he clearly did the world a favor in bringing electric cars to the market. He achieved something that at the time no one thought was possible, but now I hear more and more consumers say, you know what, I don't want to be associated with Elon Musk, so I'm not going to buy that car. And it does look like they actually have a demand problem in terms of selling their vehicles.
Well, I'd be curious to see where you've heard these consumers telling you that, and if you can put me in touch with them, I'd be interested to see that. So, publicity is publicity, and when you're talking about bad publicity, you can also look at the bottle being half full and not half empty. Elon Musk has like hundreds of millions of followers, is making headlines absolutely every day. And Tesla, as a matter of fact, almost doesn't spend any money on marketing. So just that is gigantic value. Bad publicity is still publicity and is still very, very valuable. And then take a step back. You seem to be very evaluating the situation in a very emotional and subjective way, which is that you think everybody thinks that way, or that like the net effect of the personality of Elon Musk is a negative. But he seems to be a pretty popular guy. And what about all these people who buy a Tesla and are Elon Musk fans? You seem to miss them in your equation. So for one person who is getting upset by like a very polarizing personality, maybe you have another person that is actually very enthusiastic about it. So yes, there is a demand issue for Tesla. You pointed it out. That's right. That's really like the number one controversy on the stock today. I wouldn't associate that to this idea that Elon Musk would be damaging the brand. I think it's a shortcut that doesn't really make sense from like an analytical standpoint.
Right.
The situation that we have today is that Tesla cars were selling so well that at some point, Tesla management, the market, a lot of observers, including me, thought that market could keep growing and more and more people could buy these cars.
Okay.
What we've realized in the last 12 months is that these people are actually not that many, and we need cheaper Teslas for Tesla to keep growing.
Okay. Hey, Pierre, listen, I'm just trying to take a contrarian view with a bullish analyst. I appreciate your time. Pierre Farragut of New Street Research. Coming up, we're going to give you the morning calls, and then later we'll speak to Adam Hetz of Janus Henderson, who's seeing opportunity in U.S. small caps and mid caps. This is Bloomberg.
So just keep in mind now, in 10 minutes time at 9:35 a.m. Eastern Time, we expect comments from Bank of Canada's Kazicki.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality Series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. From the world of politics to the world of business, 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
Time now for our morning calls. First up, Goldman Sachs initiating coverage of the restaurant sector with a selectively constructive view. The firm is establishing 6 buy ratings, including Starbucks. Wolfe Research raising 3M to outperform, saying the new CEO, Bill Brown, has the right stuff to provide confidence in the medium term. And finally, Bank of America upgrading Kimberly-Clark to a buy, citing long-term improvement taking hold. Coming up, we'll speak to Adam Hetz of Janus Henderson.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
This is the countdown to the open. I'm Matt Miller. Moments away from the start of trading, we do see futures higher across the board. Tesla is one of those companies that could drive today's trade, as Elon Musk says shareholders are going to approve his pay package.
So looking out to the market on open in balance, S&P 500 is sell side of 12 million, NASDAQ 100 16 million buy side, the Dow 30 is a 17 million buy side, a Mag 7 13 million buy side.
427 after dropping yesterday. It continues to fall another 5 basis points today, and NYMEX crude up about 15 cents to $78.66. As I said, Tesla, one of the stocks that we're tracking at the open, those shares jumping after Elon Musk said shareholders voted by a wide margin in favor of reapproving his pay package. Bloomberg's Global Autos editor Craig Trudell joins us now. So, Craig, what do we know about the shareholder vote? They did already vote to approve his pay package once, as the last analyst I had on told me. Now they have a do-over, and they still think he deserves that much money.
Yeah, hoping that twice is the charm essentially here, but this is far from a done deal. We know that this was really more of sort of symbolic significance or you know, a case of avoiding what would have been a catastrophe, in the sense that, you know, had Tesla gone from, you know, getting approval for this back in 2018 and tried to go back to shareholders to get them to give the okay over again, had they not gotten the thumbs up, it really would have hurt their case with you know, trying to fight this in the courts. And that's really where this is headed next. This is not a case of, you know, after today's shareholder meeting, Musk you know, leaves with a bag full of stock options. It's very much still going to be dependent on the legal system.
Craig, it's still to me fascinating that Vanguard reportedly votes in favor of this. I mean, Jack Bogle would be rolling over in his grave. He's all about saving money, or was.
Yeah, it's interesting, and that was, of course, a report from DealBook that we've not confirmed just yet. But you know, the amount of support for this on the part of, you know, some big institutional investors, I think of Bailey Gifford, you know, Ron Barron. Some of these names are not necessarily huge surprises, but we did also see some opposition to this, both among you know, big institutional investors and even some retail shareholders who in the past have been big Musk fans. And it is interesting, you know, and sort of unprecedented, not just the scale of the compensation here, but also the fact that it's now sort of, you know, up in the air as to whether or not it will ever be paid out, and you know, shareholders being asked to approve it, you know, sort of retroactively after he achieved, you know, the targets that were laid out for him way back in 2018.
Right, and we should remind people also after they approved it already. Craig, thanks very much. Craig Trudell, our global auto czar, talking about Tesla. Let's turn to chips now. Broadcom has its biggest surge in 4 years after results show huge demand for AI products. Abigail Doolittle has more on Broadcom. Abby?
This is really impressive because it is having its best day, as you mentioned, in more than 4 years, since March of 2020. So that's the degree of buying power that we're seeing. Investors liking a few things. They beat both top and bottom line estimates for the quarter that was. In terms of sales for the full year, the company is now saying that it will be closer to $51 billion. That's versus the street at $50.6 billion, and that's versus their previous projection of $50 billion. So that's basically $1 billion better, and a lot of it, as you're mentioning, having to do with AI. Now, they don't sell the AI chips that NVIDIA does, but lots of components in there. In addition, they did buy that VMware, and they've really integrated it more recently. Lastly, Matt, they're following in NVIDIA's footsteps, doing a 10-for-1 stock split. Investors really liking that a lot. The street very positive. The stock right now up 13%. And you could say that Broadcom today is leading NVIDIA, not the reverse.
Shortly expecting comments from Bank of Canada's Kazuki, who speaks in Ottawa.
Like that definitely makes it more palatable to retail investors who might be thinking $1,700 is too much for me to pay for one share. Abby, thanks very much for that. Let's get a look now at Dave and Buster's, which missed estimates. Alex Semenova has more. Not enough video game customers?
I guess not, Matt. It was a really rough quarter for Dave & Buster's. CEO Chris Morris said in the earnings statement that complex economic conditions continued to weigh on consumer demand. Earnings per share came in well below Wall Street estimates. Revenue fell 1.5% from a year ago, and same-store sales declined 5.6% from the same period last year. That was worse than the decline Wall Street analysts had expected. The company didn't quantify guidance, but they did say that sales and profit did improve during the current quarter, as they improved some of their stores and built out their loyalty program, though they did say that these macro headwinds continue to be a problem. Restaurants, of course, have been grappling with the dilemma of having to raise costs to cover higher food
Bank of Canada's Kazuki says the bar for us to use quantitative easing again is very high. Unwinding quantitative easing through QT has gone smoothly.
Sales initiatives to offset some of these macro headwinds by the fourth quarter.
Kazuki reiterates that if inflation continues to ease, it is reasonable to expect further rate cuts, and we are taking our interest rate decisions one meeting at a time, though.
Have you ever been to a Dave & Buster's, Alex?
I think I may have been like once in my life, certainly not anytime recently.
Well, I'm going to go and check it out again. Definitely haven't been there in 10 years. Alex Semenova on Dave & Buster's, thanks very much. Here's a Virgin Galactic are falling after the board of directors agreed to a 1-for-20 reverse stock split. That's because they're worth almost nothing now. Katie Greifeld is here with more on this penny stock. Katie?
Yeah, we are talking about a literal penny stock here, really trying to hold on to its listing on the New York Stock Exchange. Of course, it's trading for about 79 cents a share right now. And when it comes to staying listed on the NASDAQ, typically stocks have to maintain a minimum average closing price of at least $1 a share for 30 days. So the stock fell below $1 a share for the first time in April. At that point, basically the company proposed this reverse stock split, and now the board has approved it. That is 1-for-20, the reverse stock split there. So we'll see, of course, how that transpires. You can see shares down about 8% right now, but this company is obviously dealing with some very fundamental issues. Just to catch you up here, it performed its last space flight of the year a couple days ago. Now it's taking a hiatus from commercial operations. It plans to pause sending tourists to space in order to focus on developing a new class of space planes known as Delta. You take a look at the reaction in shares, down over 65% year to date. This company obviously has its work cut out for it.
All right, very interesting stuff. I just saw a red headline earlier that Lufthansa is going to invest more money than the entire value of Virgin Galactic in an Italian airline. It's worth in total less than $325 million. So, but we'll continue to keep an eye on Virgin Galactic. Katie Greifeld, thanks very much for that. In the next hour, Katie and I are going to be speaking with the CEOs of Snap-on, the American tool maker, and DHL Supply Chain. That's coming up at 10:30 a.m. New York time, a roundtable interview that you don't want to miss. Now, Adam Hetz, global head of multi-asset at Janus Henderson, weighing in on yesterday's big day, writing, underneath noisy market reactions to nearly every data release, a consistent signal of a resilient and likely improving economy can be heard. He joins us now. Adam, thanks so much for your time. We got yet another sign that inflation is slowing with PPI today. It actually dropped month over month, and we were expecting a gain. Is this really all good news for the economy?
It's a good question, Matt. Thanks for having me on. And maybe the next one of these we can do from Dave & Buster's. Yeah. But I think that's a good start. So the noisy data out there, the supposed good news for the markets, I do think it might be a dangerous game that the markets and investors are doing here is cheering all the bad news for the economy to root for that translation to good market news and good policy news. So it's been really exciting. It's made for this exciting rally, and that's been good, but I do think it's also a neurotic rally. And it does leave me a little bit concerned from here to the rest of the year, thinking about it could be setting us up for potentially a double-digit drawdown at some point between now and the end of the year. But it doesn't mean we can't be up between now and the end of the year. I think that's just as likely. But those double-digit drawdowns are likely any year. On average, we do have a 16% drawdown in the S&P, even in years that don't include recessions. So I think the biggest risk when investors are trying to process all the data out there, the good and the bad and maybe the ugly from time to time, is that if we do have a bit of a reset, given demanding multiples, given demanding earnings projections, that's not necessarily an indictment on the underlying economy. As we wrote, we do see some good, profound, lingering drivers of some economic strength and reacceleration. So we do think investors need to tap into the data there and stay tuned into that, even if there is some near-term volatility in the top-line market levels.
I see that, and I keep going back to the World Bank assessment of the U.S. economy and the global economy, raising their estimates for both this year. On the other hand, we got today initial jobless claims a tick higher than we were looking for at 242,000. That's also higher than the previous week. Continuing claims also ticked higher than they were last year and higher than we were looking for. And then, of course, we got the household survey last month saying that unemployment ticked up to 4% even, and a loss of 400,000 jobs there. Does the labor market worry you at all? Cracks in the labor market?
Maybe we live in interesting times, right? So PPI release, objectively, maybe bad news. You know, it's talking about a slowing economy, jobless claims up, slowing economy. But then you had NFP last week, non-farm payrolls were up. Market sort of shrugged that off. That was good news that needed to be shrugged off to continue the market being good. And so when you put all this together, what I think it really means is that there are potentially some cracks coming, but we have such a strong foundation, it can survive a few cracks. I think underneath it all, more profound drivers we're talking about, like you mentioned, global GDP, US GDP, global manufacturing data, real income data, all very strong and staying strong. So I think if you really focus on that, then take a broader portfolio view, even in the face of potentially near-term volatility, like I mentioned, a potential drawdown in the S&P, you can look at that as more of an opportunity to invest more and hopefully broaden out of what are a lot of concentrated portfolios right now.
You know, you run multi-asset at Janus Henderson. Lou Wang at Bloomberg News wrote a great story about the bear market in diversification a couple of days ago. And I keep thinking about this because, you know, we've been trained that diversity is the safe way to invest. On the other hand, you'd be much better off just buying an S&P 500 index tracking fund for the last 10 years. How do you look at this? I mean, right now, all your eggs in one basket seems to be the winning solution.
Yeah, I've thought about this once or twice over the last decade or so, Matt. And sure, for the most part, if you've been diversifying, you've been defending, and it keeps working in that now everybody has these golden handcuffs, in my view, as far as the concentration, Magnificent Seven, even just the top 5, this historic level of concentration in the S&P. So I think that the delicate piece right now is you're thinking about this economic reacceleration, and we're pointing to some of the objective data that are driving that view, but it's still late cycle. We can stay late cycle for a long time, but it does make it an environment for risk-taking, albeit careful risk-taking. So when we're thinking about getting out of just that concentrated S&P exposure, it means going down in cap in the U.S. It means going ex-U.S. So it's not just the other 493 or even 495 in the U.S. It's also getting ex-U.S., but that's delicate. You have to be careful because when you're getting out of the S&P, you're getting out of these large cap growth exposures, which can be more defensive in nature, and you're taking more cyclical risk in a late cycle. So there are some hedges to that in the sense of we're going down in cap, we're going international, but we're staying active, we're leaning towards growth, we're leaning towards quality, and we're seeking out those margins of safety in case there are some speed bumps ahead, even if we stay late cycle for a long time.
By the way, yesterday I was listening to Bloomberg Business Week on Bloomberg Radio, and I heard a bond investor talk about looking at and getting into uranium. When you look at the different asset classes, I mean, stocks and bonds we talk about all the time, but copper's been an incredible story. Uranium's had an unbelievable run. What do you think about, and you know, on the inverse side, you know, grains have had a tough time. What do you think about commodity investing right now?
From a multi-asset perspective, that ties right into the late cycle thesis here, which is probably what brought you to that. That should be good for commodities. We're talking about still a somewhat inflationary environment, this economic strength, this reacceleration, this demand, that does drive, you know, good demand for commodities. It should be a relatively good market for commodities as a broad asset class. I think if you look at the 3 legs of the stool from an asset allocation perspective, you think about commodities from a capital market assumptions perspective, at least when you look at our long-term capital market assumptions, you're talking about relatively modest returns, relatively high volatility, but typically very low correlation. So going back to the diversification point, that is a valuable source of diversification because it does have that low correlation, and it does tie into the late cycle stage that we're in, which should be helpful for broader commodity prices.
Just to round out with another asset, FX I think has been interesting in that we haven't seen a lot of movement of late for the dollar, but you know, in a strong economy, the Fed shouldn't have to cut rates, especially with stocks at an all-time high. Meanwhile, the ECB just cut, the Bank of Canada just cut. Is there a little bit of a central bank divergence that you think is going to start making waves in FX?
There are a few things to unpack there. So first, as you put it, it's this tug of war with fixed income yields because you've got this strong economy that should be pushing yields up on the 10-year, but then you have the supposed Fed cuts at the end of the year. Although we were rounding to 10 Fed cuts at the beginning of the year, and now we're rounding almost to 0, but still you have that downward pressure on yields. You have this tug of war with traditional fixed income yields in the U.S. The U.S. 10-year right now, of course, treading water around the 4s, kind of mid to low to high 4s. And so if you take that as the premise for U.S. yields, and to your point, you're having this monetary policy divergence from ex-U.S. where you're already seeing cuts and more willingness to cut. So then that is short-term good for the dollar. I think from an asset allocation perspective, zooming out a little bit, that's not necessarily something that I think asset allocators want to trade on right now because it's a very volatile part of the portfolio. When we talk about the fixed income part of a multi-asset portfolio, I think I just leave it as we do stay dollar hedged unequivocally just to limit that currency volatility in the fixed income portion of the portfolio. And then within the equity portfolio, we're broadly unhedged in the equity portion of the portfolio. So maybe to tie that all together with an asset allocation perspective, I don't think that the currency risk is a huge driver right now. But also to your point too, I think that the dollar strength right now, that still should be stable for the foreseeable future.
Adam, great having you on the show. Thanks so much for joining us. We'll meet up at Dave & Buster's after. Adam Hetz there, Global Head of Multi-Asset at Janus Henderson. Coming up, Apple rides the AI wave.
Apple has kind of regained its seat on the throne here, next to the top players. And I think the story there is, pick up in China, and then also some talks of the AI integration and things like this. They're finally on the map with that. We just hadn't heard anything compelling from them in a long time about that.
We'll take a look at the company's record-breaking week next. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management.
We're not be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg.
The NASDAQ hits an intraday record high.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
You saw nothing today that's better than the competition. You saw nothing today that's different from the competition, except marketing and a focus on privacy, right? So that's the difference here. They're not the first, but they're also not the best, and they're not the most advanced. They're here extremely late, and they showed up to the party without a gift.
Apple has been on a wild ride in terms of the stock. Briefly, market cap overtaking Microsoft yesterday. The recent strength coming after the company revealed its long-awaited new AI features earlier this week that didn't really seem to be much at all. Bloomberg's Abigail Doolittle joins us now for more. Abby?
Yeah, this one is a bit puzzling, and it's up again today. Right now, its market cap, at least the last moment I looked, more than Microsoft. It's pretty extraordinary that you think not so long ago this stock was basically in a bear market from its December peak. Yesterday's move higher, I don't think I've ever seen anything like that on a major stock coming out of a range. Up 14% over the last 2 days into today at the highs. That was the most since 2008. It really felt silly given the fact that the AI evaluation not so strong. Although to be fair, I've had some people on X reaching out to me saying that their AI is better than some people are giving it credit to. But what I'm really looking at, valuation at this point, well higher than the group, 30% above, 42% above from a PE standpoint at the high end of their range. Plus, Matt, the numbers, single-digit growth. For this year, their top line is expected to grow 1%. That's after dropping 3% last year. Next year, if they get it together, 6.5%. The bottom line is also single digits. So when you put it all together, does that mean that a stock should basically, over the course of less than 2 months, or basically 2 months at this point, be up? Let's see. I think that it's up, more than 20%. I mean, it's just a massive, massive run in such a short period of time, but especially this week.
Yeah, and I mean, the interesting thing for me about Apple has always been how much cash they have. At times, $200 billion right now. It looks like, more than $100 billion in cash. And yet the dividend is like a quarter a share, right? They do buybacks at some points, but I feel like, yes, we're locked into the ecosystem, those of us who use the iPhone, and this is going to hold us a little tighter to it, but they really need to give back some cash to shareholders to justify not coming out with any new products, canceling the car. I mean, just not really innovating.
Well, right now, I'm not sure that I necessarily agree because the stock is doing pretty well. Investors seem to be fine going in on this massive valuation, even without that justification. Some people actually, Alon Rosen over at Oppenheimer, he was telling me yesterday that there is talk out there that the upgrade cycle that will be revealed in September is going to be huge. But something I would point out, this stock on this move hitting up to the top of a very reliable range. The technicals here are not very supportive. There is the possibility it could break out of the range as it did do about 2 years ago and then come back in. But the RSI or momentum over the last 5 years, Matt, it is weakening. It's really telling you that as the stock hits these all-time highs, it's on less bullish confidence than it had been a few years ago. Something else I would point out, Berkshire had been selling. The way that it has popped out of this range, it feels like it's either a big player or it's just a simple trading vehicle. In terms of when Apple was going down, you had NVIDIA, Microsoft, all these other tech companies going up. Some are saying that it was being used as a funding short for that. And now those investors, almost like a seesaw, they want to be in their big tech that goes higher. It's Apple, but what goes up must come down. That's sort of how it feels like with Apple here, especially given these fundamentals. And also, yeah, what you're talking about in terms of not really increasing that dividend, at least yet.
All right, Abigail, great to get a look at the technicals with you, as well as more on this story. Apple adding just an immense amount of market cap in its run-up this week. Abigail Doolittle there on the stock. Coming up, the market-moving events you need to be watching. That's next in our Trading Diary. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Time now for the Trading Diary. What you need to be watching. Treasury Secretary Janet Yellen will be speaking at the Economic Club of New York at noon Eastern. And then later this afternoon, Tesla will hold its annual shareholder meeting, the big vote on the potentially very big pay package, surely the biggest in history. We'll also get Adobe earnings after the closing bell, so you can continue to watch what tech does in terms of earning money. Overnight, we're going to get a Bank of Japan decision. If you want to follow along on your Bloomberg terminal, type BOJ GO. And tomorrow we have the University of Michigan consumer sentiment data. This was the countdown to the open. I'm Matt Miller. This is Bloomberg.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Good morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, we are 30 minutes into the U.S. trading day on this Thursday, June 13th. Here are the top stories we're following. More evidence sense of cooling inflation with today's U.S. producer price report, which unexpectedly dropped in May for the most of 7 months. That, of course, is good news for the Fed, which held rates steady at yesterday's meeting. A view from the C-suite. We'll talk about inflationary pressures and the on-the-ground economy with Snap-on CEO Nick Pinchuk, as well as DHL Supply Chain CEO Oscar DeBach. And Tesla's shareholder vote is shaping up to be a win for Elon Musk, who tweeted that shareholders are backing reapproval of his $56 billion pay package. But is this just a symbolic victory? We'll discuss with Money Stuff columnist Matt Levine. I'm Katie Greifeld in New York. Welcome to Bloomberg Markets. You take a look at markets right now, and interestingly, some of those gains that you saw yesterday and at the trading bell starting to come back a little bit. The S&P 500 still higher, but only to the tune of about 0.1%. Of course, we had a big rally after CPI and then the Fed meeting yesterday, but gains cooling a little bit here. You can see the NASDAQ 100 is the outperformer right now, currently up about 0.8%. Really a healthy margin there to that win. And of course, you have a big winner and a big loser, and that is your small stocks. The small caps currently down about 0.7%. Certainly not feeling the love today. But let's get back to that eco data, because U.S. producer prices unexpectedly declined in May, seeing the biggest dip since October. Here with more is Bloomberg's Mike McKee. And Mike McKee, unexpected more good news for the Fed.
Well, it appears that way, but maybe we're starting to see some possible flaws in that, and that may be why the markets are pulling back a little bit. We did see jobless claims rise, and remember, Jay Powell yesterday said that if jobless claims, or if jobs start to weaken, if the labor market starts to weaken, it could be a reason for a rate cut. Well, here's the thing, though. The same thing happened last year, this exact same week. And so does it hold that jobless claims stay up, or are we going to repeat last year's slide back down after a couple of weeks? That's going to be something to watch. You can't bet yet on the Fed cutting rates because of that. How about cutting rates because of inflation? Well, maybe there as well. Good news on PPI, down 0.2 on the month. A big surprise there. The core flat, and yet take a look at why it fell. This is the ECAN function on the Bloomberg terminal. Get yourself a Bloomberg terminal if you don't have one. If you do, call up ECAN. You can see what happened there. Purple is energy. Almost all of the drop in last month's PPI comes from a fall in oil and energy prices. So does that continue? That's something else to watch. And where do we find ourselves at this point because of all this? Well, as you mentioned, markets are pulling back a little, but basically they're disregarding what the Fed said. Fed's median yesterday, Katie, was for, of course, one cut this year. Markets are pricing in by January of next year more than 2 cuts, 2.5 cuts basically. So they're looking at 2 this year. We'll see where we end up after we get some more data. Tomorrow we have inflation expectations in the Michigan survey. So some more stuff to hang your hat on.
Yeah, definitely those inflation expectations closely watched by the markets and by the Fed. And quickly, you touched on a question that's starting to work its way around Wall Street, and that is, when does bad news just become bad news? When do we start actually worrying about growth here?
Well, we'd have to see growth indicators start to fall. Bank of America out with their latest consumer spending report this morning said seems to be holding up very well going into June. People are still spending money. So we'll keep an eye on that. And of course, we'll keep an eye on things like the ISM, et cetera. So far, the Atlanta Fed's GDP Now tracker has us over 3% for the quarter. So not yet is the answer.
Not yet. You heard it here first. Bloomberg's Mike McKee, thank you so much. Let's bring this conversation to the markets right now. We're going to do that with Sophie Lunge-Yates. She is Hargreaves Lansdown lead equity analyst. She joins us now. And we'll start, of course, with the macro and with the Fed, because especially if you take a look at the NASDAQ 100, those big tech stocks that you closely track, feels like it has just gone parabolic in the last couple days. And you couch that against the macro environment and maybe all the worrying we did about the Federal Reserve's rate trajectory and their path there, maybe it didn't matter after all when you take a look at the fundamentals.
Hi, great to be back. Yes, I think, to be honest, you've hit the nail on the head there. So much of what we've worried about either hasn't come true. I think we've actually cleared a lot of landmines that the market was really worried about. You know, things like this huge recession that was apparently around the corner, you know, that hasn't appeared. But at the same time, as you're alluding to there, really what these tech stocks have, they're in their IP, in their margin potential, in their cash flow potential, in their growth potential. It is simply on a scale that hasn't, or certainly wasn't, priced in going into this year. And we are starting to see that play off, of course, particularly surrounding Apple in very recent trading days as they try and more clearly map their AI path. But certainly there is a divergence here between the macro and what tech stocks will do. They are on separate paths, which is not normally a story we tell when it comes to stocks.
And we just heard from Mike McKee that it's not yet the time to ask the question, when do we start to worry about growth? The answer is not yet. But when you take that conversation to the tech sector and you plan ahead, I mean, even if we did start to see the economy start to turn, maybe some of the delayed monetary effects get a little bit ahead of the Fed themselves. I mean, how does tech fare in that environment? Because, I mean, looking at its performance over the past couple of years, it just feels all weather at this point.
Sure. Unfortunately, I do agree. I think we're in a situation where, you know, people will say this is a rising tide that's lifted an awful lot of ships, and not all of those ships deserve to be there. So I do think that as this cycle starts to turn, because we know that it will, that's how this goes, I do think there are going to be some names that are caught out. But what I would say as well is that, particularly if we kind of move to other areas of bigger companies, so if we look at things like the S&P 500, we know, for example, that at the moment we're in this situation where the top 50 stocks in the S&P correlation is at really historically low levels. And that tells me that volatility is doing something quite interesting, but also that gains are cancelling out losses, which is not something that we often see. And I do actually see that we're going to be in that situation for some time to come.
And beyond big tech, I thought this note from your notes was really interesting, that you continue to see margin pressure for retailers at the midpoint of the value chain, but you see continued strengths for the likes of travel stocks and luxury. And that's really interesting because even though we are seeing the pace of inflation cool a bit, the bare fact is that prices are a lot higher at an absolute level than they were a couple years ago. And I've heard that to be bearish, basically, on some of those sectors that you named there. But you're obviously taking the other side of that.
I am. I'm choosing the path of positivity for these sectors. Absolutely. So yes, inflation is high. Yes, I don't think that consumer spending power is completely out of the woods yet. But we only need to look at the absolute strength of some of the sectors. You know, the numbers that we got from Delta, for example. That's just one example. Yes, okay, growth in luxury is slowing, but it's still markedly more resilient than other corners of the market. And actually, I think that means that we've seen some of those valuations return to relatively more attractive areas. But yes, inflation is running hotter than it was a year ago, but that has been achieved without major damage to the economy yet. So that means to me that those corners of the market that are more resilient, I think they'll continue to do so, or be so.
So retailers, maybe a little pressure here, but travel stocks, luxury, it sounds like experiences and, of course, the higher end of the food chain still resilient in the type of backdrop that we're talking about.
Yeah, absolutely. We are in a situation where the categorization of spending has been completely upended. Now, that does mean that there's a little bit of trouble still, I do believe, in food retail, as you're suggesting there. And what I mentioned in my notes is I think that households are redistributing where they're spending. So they're going to try and be stricter with a household budget, but so they can still go on that trip. So they might treat themselves to that more expensive bag or whatever it might be at Christmas time. So yes, I think that it's not a case of everybody winning here, but corners of the market, absolutely, I think still stay incredibly resilient.
All right, Sophie, always great to check in with you. Hope to do it again soon. Our thanks, of course, to Sophie Lungi-Yates of Hargreaves Lansdown. Let's take a quick look at what's moving underneath these markets. We're going to do that with Bloomberg's Emily Grafeo, and let's talk about Broadcom having a great day.
Yeah, that's right, Katie. Biggest intraday rise for that stock since March 2020, and it was an all-around earnings beat for the chip supplier. Second quarter revenue and EPS beat, the full year forecast beat, and it was really driven by strong demand for you guessed it, AI. That's really the theme for the year. And we're seeing that even in June, that is still really causing investors to cheer these earnings reports. This is a company that supplies chips for big tech companies like Apple. But we also saw that they're getting a boost from their integration of a cloud company, VMware. They acquired that company back in November. And all around, when you look at what the street is saying, they're saying that that integration of the company was very successful. We saw Piper Sandler and Barclays both raising price targets on Broadcom, and Barclays specifically saying Broadcom remains one of the best ways to play AI.
And I have to say, Broadcom also planning a 10-for-1 stock split.
That's right.
So hot right now. Tell me about next decade. I have to admit, this is not a name that I'm super familiar with.
It wasn't one that I was super familiar with either, but the story caught my eye because this stock is already up 64% year to date. It's a liquefied natural gas company, $2 billion market cap, so kind of on the smaller side. But they signed, or they're planning to sign, a supply deal with Saudi Aramco. Aramco agreed to buy natural gas from NextDecade's planned project in Texas, and this will be the first U.S. purchase deal for the Saudi energy giant. They plan to buy 1.2 million tons of LNG a year, and the contract is looking to be up to 20 years, but they're still working on that being finalized. So we don't talk about energy that much, but it caught my eye. The stock was up as much as 8% in the pre-market, pairing those gains a little bit, but still in the green, Katie.
Yeah, we don't talk about energy because we're so busy talking about AI, but that's a different conversation. Let's talk about Dave & Buster's best ticker play, but it's having a terrible day.
Yeah, when I was listening to your prior guest, you guys were talking about how experiences are somewhat resilient, but it seems like there is some trouble in some food names, and this is definitely one of those. We're seeing those shares down as much as 12%, and it was, you look at the earnings report, a miss on multiple metrics. First quarter revenue, $588 million versus estimates of $615 million. EPS, 99 cents a share versus estimates of 1.76. All around, Truist Securities saying the results were muted by stiff macro headwinds. So I guess less consumers going to these arcade venues and buying the food there. But yeah, I mean, it's a mixed bag when you look at these kind of experience names. Some of them have done really well, and then you have companies like Dave & Buster's that just can't pull it together.
Yeah, definitely a story of have and have-nots. Dave & Buster's shares currently down by the most since September 2022. Emily Rufeo, thank you so much. Now coming up, Tesla is surging after Elon Musk said that shareholders are backing his $56 billion pay package for the second time. More on Tesla's annual meeting next. This is Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
Well, Tesla holds its annual meeting this afternoon, and on the agenda, Elon Musk's pay package. Now, Musk said on Twitter that shareholders approved his pay package and that the move to relocate Tesla's legal home from Delaware to Texas has been approved by, quote, wide margins. Here to discuss his Bloomberg Opinions, Matt Levine, also my co-host of the weekly Money Stuff podcast. So we're basically doing the podcast, but on TV, and let's talk about Elon Musk. We talk about him all the time. Obviously, he tweeted the results, the partial, but looking like full results earlier. But could anything change between now and this afternoon? What's going to happen, Matt?
I mean, I think he's probably tweeted the results. But yeah, I mean, you can change your vote in a shareholder meeting until kind of the time of the meeting. So it's not completely locked in. And the thing he tweeted was this pretty informal Excel graph. So it's not totally clear that his information is correct. But assuming that it is, then he seems to have enough votes for both proposals.
All right. Does this matter, though? Like, even if the shareholders reapprove this, isn't it just symbolic at this point?
I don't think it's just symbolic. I think you can read a lot of lawyers and law professors saying that it is just symbolic and like there's no legal weight to ratifying this decision. But I'm not really sure that's right. I mean, a judge found that the former shareholder vote wasn't well informed. This shareholder vote is probably a little bit better informed, so you do kind of get another bite at it. They're also still appealing the decision on the pay package, and it may not have that much legal weight, but there is a certain, moral weight to say, no, the shareholders really want to do this, and why should the Delaware courts get in the way? The reincorporation to Texas is also interesting. I think that this vote is legally binding. I'm not totally sure of that. I think that there has been talk of the possibility of lawsuits in Delaware to keep Tesla in Delaware despite the shareholder vote. But I think that's a little bit of an uphill fight. And I think that probably if they vote to move to Texas, they're moving to Texas.
If they're moving to Texas, that would certainly be interesting as well. A nice reminder that we're talking about a two-prong shareholder vote here. But I do want to talk about the fact that, you've written about the Elon Musk attention auction, basically. And when it comes to his different companies, they're all competing for his attention. And even if, shareholders reapprove this pay package and he doesn't quit in a huff today, which certainly would have been interesting. I mean, it feels like this doesn't necessarily fix the problem of the attention auction, that his attention is clearly divided and he's spending more time on other things than Tesla right now.
Right. I mean, before the judge struck down his pay package earlier this year, he was asking for another giant pay package to keep his attention on Tesla, to make sure that he had a sufficient ownership stake to do AI at Tesla. And that kind of got pushed aside by this package being struck down. But in theory, he could come back next month and say, I need more money, or I need more shares. He needs this stake in Tesla.
So looking now to the Fear and Greed Index, 45 out of 100.
Sort of
This indicates neutral. The Crypto Fear and Greed Index indicating greed at 70 out of 100. We're keeping an eye on the VIX as well. It is up on the session at 1.66%, so currently at around 12.2.
I'm not sure, and I'm not sure the pay package changes that.
Okay, so Musk needs Tesla in some very real senses there, but does Tesla need Elon Musk at this point? You think about where this company is. It's a mature car company. It's dealing with mature car company problems. The question is out there, is Elon Musk the proper CEO for this company at this point?
Yeah, I don't know. I mean, I think that there is a real belief among some of the shareholders that this company would be better off kind of getting down to business and not chasing around Cybertrucks and doing other Elon Musk projects. So it is possible that some shareholders out there think that. I don't know. I think if you're voting to approve this pay package, you think the other thing, right? You think that Tesla has an Elon Musk premium, that it is not just a car company, that there's something else going on, and that something else going on is inextricably linked to Elon Musk and his attentions and his ability to come up with new ideas. But I'm not sure that's completely right. And I think that some shareholders have kind of changed their minds on that.
And what is the basis for reapproving the pay package? I mean, there's this idea of fair is fair. It was approved in 2018. He met the metrics. He deserves the money.
Noting the S&P 500 currently down 0.22% on the session.
Since unmet those metrics, and it seems hard for me to sort of just block out this history that we know happened.
Well, he hasn't unmet all of the metrics, right? I mean, he was given this pay package when Tesla was like a 50-something billion dollar company, and it seemed highly ambitious to take it to being a $650 billion company. And he did that. And
at 10:30 a.m. Eastern Time, get the EIA natural gas change forecast 72 BCF on the prior build of 98 BCF.
To his top target. Right. I mean, part of it is fair, right? Like, he was given this award in 2018 for the work he was going to do between 2018 and 2022. And the fact that it was taken away, like, some people feel like he should still get to keep his compensation for that past work. But then the other thing is it's just a question of keeping him happy and keeping him at Tesla. And if you think there is an Elon Musk premium, then disapproving this pay package and having him leave in a huff or otherwise pay less attention to Tesla might be bad for the stock or for the company going forward.
All right, Matt Levine, I'll see you at 1 p.m. today because we record our weekly podcast, which is called, of course, Money Stuff. New episodes out every Friday afternoon. And as you might have guessed, we discuss Wall Street, finance, billionaire pay packages, and other stuff. Let's turn now to the Supreme Court, which is out with opinions today. The High Court preserved full access to a widely used abortion pill. It's a case that, of course, carried major stakes for reproductive rights and election year politics. Joining us now with more is Bloomberg Balance of Power co-host Joe Matthew. So, Joe, set the scene here. What do we know so far?
Yeah, we're talking about a unanimous ruling, which is really something, overturning a federal appeals court ruling that would have barred access, mail order access to the so-called abortion pill mifepristone. This is something that's become a very big issue on the campaign trail in American politics across the country in the wake of the Supreme Court's ruling that struck down Roe v. Wade. And this really has to do with the lane, the standing in this case. As we read from Justice Brett Kavanaugh, they essentially said that the anti-abortion doctors and organizations who brought this case didn't have standing because there was no harm. They were not directly affected by the law in this case. He wrote the federal courts are the wrong forum for addressing the plaintiffs' concerns about the FDA's actions. They could take another path. They said go to Congress, go to the FDA, but not the Supreme Court.
All right, Bloomberg Balance of Power co-host Joe Matthew, thank you for that update. Of course, Joe Matthew and team will have full coverage throughout the day. Still ahead on this program, though, we'll take a look at the companies making the most social buzz today in our Social Climber segment. Up next, this is Bloomberg.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special Equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
All right, it's time now for Social Climbers. A look at the
At 10:30 a.m. Eastern Time, we get our weekly EIA natural gas change forecast, a build of 72 BCF on the prior build of 98 BCF.
GPT to its users is of equal or greater value than monetary payments, according to people familiar with the matter. Now, separately, Sam Altman told staff that OpenAI is on pace for $3.4 billion of annual revenue. Next up, the GameStop calls that Keith Gill claimed to own traded huge volumes yesterday as the firm's shares dove in the final stretch of trading. While there's no way to tell if he was directly involved, the sector of his exit could weigh on shares, which closed 17% lower. And finally, Wall Street and politics. Donald Trump will meet with executives today as he's increasingly embraced by the business elite. JP Morgan's Jamie Dimon, Citi's Jane Fraser, Bank of America's Brian Moynihan, and Apple's Tim Cook are said to be among those expected to attend. And of course, you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Meanwhile, you take a look at these markets right now. The S&P 500 actually flipped into negative territory. We're talking about a 1/10% or so lower right now. The NASDAQ 100 still holding on to those gains, but they're not quite as robust as they were just about half an hour ago. Currently still higher by about 0.3%. Meanwhile, small cap losses intensifying. Now coming up, we'll get the C-suite view on the latest inflation read. We're going to speak to Nick Pinchuk of Snap-on and Oscar DeBach of DHL Supply Chain next. This is Bloomberg.
The biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? It's just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness.
1 minute remaining.
Prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Get your your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Ten seconds.
Well, we know that U.S. producer prices actually declined for the first time since October. Definitely a surprise, dropping at about 8:30 this morning. Let's talk about that.
Build 74 BCF, build 74 BCF, higher than the expected build of 72 BCF.
I'm doing terribly well. How are you?
I am so excited to talk about this. So producer prices, of course, we were expecting a very slight increase, a decline actually. And if you break apart the components, it's pretty interesting, a pretty interesting read on the economy.
Well, it's fascinating also that good news continues to be good news, right? I mean, we get a decline in PPI. We also, though, got a jump in initial jobless claims, a jump in continuing claims. Remember last month, the household survey was a little bit disappointing. So we have a deceleration in inflation, but we also may see, because of this, a deceleration in economic growth.
Yeah, I mean, I asked Mike McKee at the top of the hour, can I start to worry about growth? Is now the time? And he told me not yet. But let's actually talk to some executives who run companies who deal with the public. We're going to get the boots on the ground look at how the inflation story is playing out with Nick Pinchuk. He is the CEO of Snap-on. He joins us now. And of course, Snap-on is a manufacturer of high-end tools and equipment. Nick, it's great to have you back with us. Let's start with the PPI, because if you take a look at the components, nearly 60% of the decline was due to gasoline costs. You also saw prices fall for diesel fuel, commercial electric power, and jet fuel. Are your customers seeing those declines?
I don't think they would recognize it as a palpable decline. This is more business as usual. When you're in business, you know, like if you run Snap-on or even if you're running a garage,
US natural gas futures extending losses.
Change all the time. So for us, for example, cold rolled steel is up, hot rolled steel is down, and freight costs, you're going to have DHL on, freight costs are kind of going through the roof. We don't import that much, but ocean freights seem to be pretty high. So you have to manage all of those, but this is sort of everyday business for us. So we don't see any big change.
So no big change, not any that you're feeling and seeing yet. And with that in mind, I mean, I'm curious, you write in your notes that, you know, you're well positioned should we see commercial inflation reignite. And I'm curious how likely of a scenario you see that, and what does well positioned mean here? How do you prepare for that?
Well, we tend to make in the markets where we sell, so we don't have long supply chains, and we tend to be vertically integrated. So Snap-on makes most of its products itself, you know. So that's kind of situation. Plus, when you talk about how we go to market, one of our big components of go to market is right to the end user through our vans or through our direct sales force. So we control the interface with the user and we control the upstream fairly well. So we're kind of balanced for that. The big portion of inflation, I think, here is actually it's about the smaller businesses that are worried more than anybody else. The individuals that are working in the factories and in the garages. I was just with some of them, and they are cash rich. Their businesses are going well, but they are confidence poor and worried about the future.
I have to say, first of all, so I tinker on my motorcycles, and when I can afford to, I always pick up a Snap-on tool. It's like a luxury product for me. If I see the van, I chase it like a kid would with an ice cream truck. But when I go
I can stop it for you. If you'd like it to stop, let me know where you're going to be. I'll have it stop.
Thanks so much, Nick. When I go to, you know, my Ducati dealer, or when I talk to the big car shops around me, they're always having a tough time getting labor. Do you see that slowing down? I mean, do you see those positions filling up? How does the labor market look to you?
Well, the labor market, Snap-on is a little different. You see, we don't have trouble filling jobs because we never laid anybody off in the pandemic. We actually held everybody through the pandemic, even though our volume was down. So people tend to gravitate toward us. We say that, you know, the disadvantage of saying your people are your most important, one of your most important assets are on occasion, you have to act like it. So we try to do that. I do think, though, that there is an ongoing, if you're talking about garages or you're talking about factories, the National Association of Manufacturers say there are today 516,000 jobs open. Before the pandemic, there were 400,000. So that's staying the way it is. Garages are the same thing. There are two reasons for this. One is is that finding the skills, upskilling the American workforce, people are going off and studying other things which they can't translate into those technical jobs. Whether you're talking about welding in a factory or repairing a car, which is pretty intense idea. Secondly, there's kind of a PR problem behind these jobs. People tend to think of them as dark, dumb, and dirty. They are no longer like that. They tend to think that people who enter those careers are settling for the consolation prize of our society.
Currently down 3%.
And this is simply not true. You know, the thing is, when you work in a garage or work in a factory, in a Snap-on factory, but most factories around the world, the NAM will tell you that the average factory worker makes $98,000 a year with benefits. And so you're able to keep your family warm and safe and dry, but you're also able to realize that what you do makes a difference. If you think about it, during the pandemic, when fear was palpable, factories and garages were still working.
Right.
Because what they did was essential. So the essential nature, they don't get paid the most. Patrick McCollums gets paid a lot, but it's not because he's essential. We don't need him. It's because he does something no one else could do. But the people across business that do these technical jobs are essential. And so part of the struggle is to get people trained. Well, first, to get people to believe that these are worthy of an American calling. And secondly, to get them trained. Well, that's the real issue.
But Nick, people will pay also a premium for your products because they are made in America by skilled laborers who really care about their jobs and the product. On the other hand, if I look through, a Home Depot, or if I scroll through Amazon, seemingly everything is made in China. So while you've always produced here, it doesn't seem like anyone else has brought that much manufacturing back. Do you see that from your peers?
Well, I'll tell you this, the National Association of Manufacturers, I was just in Washington with them. And here's the issue, is that the supply chain problems were the children of the pandemic. We had a lot of problems and became clear we wanted to bring things back. Manufacturers were all ready to bring things back. But what happened was, even though the governments, whatever administration, I'm not talking about a particular administration, but generally, if you look at the current one, I will talk about this one. Okay, we have the CHIPS Act, we have the infrastructure, great things, but they don't recognize the broad value of manufacturing. So manufacturers, particularly the small ones, are sitting there saying, well, should I expand? Should I hire more people? Well, we got an election coming up, and you're wondering what the policy is going to be. It's not enough, people are talking about, okay, for those guys, just those small manufacturers, let's raise the individual rates. And the 199A exclusion, deduction for small manufacturers is going to go away. So their prices will go, their costs will go up. They're already paying, according to the NOM, $50,000 per employee in regulation costs. And so they're saying, gee, does America really want manufacturing? It's not just saying I like manufacturing, or I endorse it. When push comes to shove, they actually have to support it without sacrificing the interest of manufacturing, this great endeavor on the altar of other things. And small manufacturers, when you look at their outlooks, are very low. And part of it is because of this.
Well, Nick, I really only have a minute left with you, and I really want to get this question in. I want to talk about auto technicians here, because taking a look at your last earnings release, there was that concern there that maybe the technician audience that you have is starting to pull back here. And I'm curious, if that's the case, what's the catalyst to bring that demand back?
Well, I think some of these things, first of all, they're as I said, the garages are filled. I was just in garages last Friday. So the garages are filled. They have cash. But what they're doing is they're seeing the inflation, and they're seeing that milk is still 31% above pre-pandemic levels. They're hearing about the wars. They're not paying attention to the Fed. They don't pay attention to the man behind the curtain. But they're thinking about wars. They're hearing about the border. It's a migration. They're worried about China, and they're worried about the outcome of the election, what's going to happen. And so those things, they will either have to get used to the inflation, or those things will have to be resolved. What's happening to the technicians is they're still buying, but they're buying shorter payback items, like a hand tool behind me. So they can say, look, I don't know what's going to happen in 15 weeks or 3 months, but I'm sure I can pay for that time. I'm going to buy as much of those that I want, but they're not buying the big boxes behind me because it'll take them longer to pay that off. We've seen this before in the great financial crisis. Anytime things get uncertain, that's what happens with the people of work.
Right. Nick, unfortunately, have to leave it there. Hope to have you back on soon. Feels like every time we're just getting started. Nick Pinchuk of Snap-on, thank you so much. And for another take on inflation, joining us now, I'm pleased to say we have Oscar de Bach. He is the CEO of DHL Supply Chain, of course, a leader in global logistics. And I want to bring you something that Nick just told us.
Seeing from sources on X here, SEC Chair Gensler told Senator Hagerty that he envisions an Ethereum spot ETF likely to be approved by the end of summer.
Well, I think that's always difficult to exactly forecast. But I think what is interesting to see is indeed the freight rates are obviously high, and that's obviously a factor. Although it's good to see that now with the PPI you just presented, that the at the surface cost is actually flat. So that's no longer a cause for price increases. So it's good to see that starts to gradually stabilize. The other element which I think is good to see is that inbound volumes are specifically ocean freight volumes are increasing, have been increasing over a while. So that's also good to see, because that means that's the inbound volume into the economy. So I think that's another positive indicator. So, and you start to see that customers, our customers, start to gradually build up their stocks carefully, and also building on the point that was made in with the earlier speaker, but they're carefully building up their stocks in order to be prepared to let's say a decent peak in Q3, Q4.
I wonder about the freight costs. You know, if I look at the Baltic dry average, we've come what looks like back to normal, slightly elevated, but nothing compared to the pandemic, Oscar. How much are we looking at just a normal freight cost right now, or how elevated is it?
Yeah, it's difficult to say what is normal and what is not normal. What I think is that at least those ridiculous jumps that were there in the past, ups and downs, I think we sort of start to see that gradually that starts to stabilize. And I think what is most important with those rates is that you start to get that they become more predictable, so that companies can build their cases on it, can forecast on that basis, and can price on that basis. And I think we're getting gradually more into that situation.
And Oscar, I'm curious to hear your thoughts on what you're seeing when it comes to onshoring and nearshoring. Like Matt mentioned in our previous conversation, a lot of companies talked a big game coming out of the pandemic that they were going to bring some of their manufacturing and their supply chains closer to home. You haven't necessarily seen as much of it as you might have thought. What are you seeing from your clients when it comes to that impulse?
Yeah, what you clearly see is, and as you know, as I call it, is omnishoring. Because what you see that customers do is that they no longer going to bet at one single market for their strategic components. So they'll make sure that they actually have that from at least two markets to come in from, so that you're never exposed to whatever is going to happen in the near future in the supply chain. And that's actually a trend that you clearly see. So that doesn't mean that they move away from where they were before, but it actually means that their future investments, their next capacity increase of production, they'll make sure that they will do that in a separate market than when they were before. And obviously that would be near to their main markets. So we've seen major growth in Mexico. We've seen major growth in Malaysia. We've seen in the rest of Southeast Asia. We see major growth in countries like India as well, but also to countries close to Europe, like for instance in Turkey and recently also Morocco. So you start to see that trend is happening. Obviously, it doesn't simply happen in a few months' time, right? That is gradually evolving. But what we see is that whatever we've invested in Mexico, whatever we've invested in Malaysia, it fills up right away.
And it's a good perspective there, too, that we're talking about a longer time frame. It's not going to happen overnight. You mentioned some of the countries that are benefiting from that push, Mexico among them. But I'm curious whether your clients are running into any issues that maybe they didn't foresee when it comes to nearshoring, onshoring, omnishoring, as you say.
I mean, the issues that you run into is it's always a capacity game, right? The capacity, it starts obviously with capacity of real estate, but it also is the capacity of attracting people, attracting talented people that actually can do the job. It is also the limitation of some of the infrastructures, because of some of the markets that I mentioned, there are also a limitation of the actual infrastructure in those markets to be able to carry those increased volumes going forward. So those are challenges. We're obviously trying to help our customers as much as possible with, on the one hand, investments in buildings, but on the other hand, also making sure that we have people available, well-trained people available to do those jobs. And on the other hand, what is really important is the investments in digitalization, being collaborative robotics, being having more visibility of data, having more AI or generative AI in order to make sure that you can better forecast your supply chain, and on that basis better forecast your capacity need, therefore your people, therefore your building, therefore your trucks. So the better you can manage capacity, the better you can also
The S&P 500 turns negative,
resources.
last down
Oscar, always great to speak with you.
0.09%.
Really appreciate your time. Our thanks to Oscar DeBach of DHL Supply Chain. And Matt, thank you too for joining me. We should do this more often.
It's been a pleasure. Yeah, we should get together and maybe we should start our own show.
Yeah, maybe in July. We'll see. Anyway, coming up, what happens when failure isn't an option? That's what Ruchir Sharma explores in his new book, What Went Wrong with Capitalism. Wall Street Week is next. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal. The deal.
Huge deal.
Who dug this up? What are y'all's in trouble?
Wow.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Well, Well, it's time now for our daily Wall Street Week conversation. And since the Great Depression, the U.S. government has stepped in to prevent economic and financial fallout from private sector failures. Ruchir Sharma, author of the new book, What Went Wrong with Capitalism, sat down with Wall Street Week's David Weston to talk about whether the government is doing too much rescuing.
On one hand, you have like all this great data that the American economy is relatively resilient. But if you look at the number of people who are happy in America with the state of the economic union, it is at close to record lows according to many polls. There are about 7 in 10 Americans today who want the major change to the economic system, or in the language of the polls, have it completely toned down. That's pretty dramatic. There are only about 35% or so Americans today who feel that they're going to be better off than their parents. 50, 60 years ago, about 70, 80% of Americans felt that they're going to be better off than their parents. So there's a real feeling that something has gone wrong. And I think that it's particularly the fact to do with capitalism, that most young Democrats, in particular in America today, say they would rather have socialism than have capitalism. Now that's such a big statement for this beacon of American capitalism and all that we've spoken about, of global capitalism rather. They are saying that they would rather have socialism, a large cohort of the millennials and the young people, rather than have capitalism. So something has gone wrong. And what I've done in this book is to sort of look at deep down what's gone wrong. Because as they say, the first step to a cure is to first diagnose the problem. But I feel that in America today, we're not even diagnosing what the underlying problem is.
Why does it make sense from your point of view, having studied this now, if you didn't know anything about our society, if you didn't read any of the media, you didn't read any of the polls, and you looked at our growth rate, which is at or above historical trend lines, and you looked at unemployment, which is close to lows of all time, most indications would say this should be a pretty happy economy. So why is it not?
Exactly. So, because after I said that there's a sliver at the top which is doing very well, but we have this two-track economy out here that even now, if you look at it, the bottom 50 to 60%, they don't have any excess savings. They're not being able to spend that much. And as I said, that there's a feeling that they're being squashed by what's happening at the top. That today in America, economic mobility, social mobility, all have declined significantly. Like, this is a country where people would move around a lot, or people would be in search of an opportunity. As I said, there's a real feeling in America today that they don't have equality of opportunity. And I think that, yes, at the top, things look very good. The stock market's doing great. The likes of NVIDIA are barring the entire stock markets of the world, if not just the US. But I think that deep down, there are some very key societal issues, and that's what I've tried to examine in the book, that what's really happening. Because at the end of the day, if you look at the trend over the last 30 to 40 years, our trend growth rate is slowing down, productivity growth rate is slowing down, and at the same time, inequality is rising. And you're right that at the surface, growth appears okay, but a lot of Americans today, their trust in the government is also at record lows. So they know growth is well, but they know that growth is also being funded a lot by an increasing amount of debt. And their faith that the American government will be able to do something about that and to have their future determined by the American government, that leaves people in a very perilous state. That can we really trust the government to make good on their obligations and their promises when they have got so much debt? So even though the economic growth is okay, as I said, economic and social mobility today is at record lows.
Is it the government's fault in this sense? 2008, 2009, we had the great financial crisis. There was concern about a depression, not just a great recession, but a depression. And there was a lot of government intervention, both on the monetary side and the fiscal side. A lot of people thought that was necessary to save us and maybe the world from depression. Then you had a pandemic, and we brought the economy to a stop. And again, it was thought there needed to be a lot of stimulus. Was it the government's fault? Didn't they need to come in and have this level of stimulus and support?
Yeah, as I say in the book, that when we have a crisis, I can understand that the government needs to intervene. I'm not a kind of person who's a liquidationist, that you just let things sort of go and melt away on its own. What I've shown in the book is just look at the progression of capitalism over the last 100 years. We have gone from this liquidationist argument, which caused the Great Depression in the 1930s, to now an impulse where you liquefy. That the moment you have even the slightest crisis like you had last year with the SVB or some. The impulse is that we got to intervene, we got to save. And the problem is that we only have one case point, which is what we use all the time to justify intervention, which is that we think if we don't intervene, we'll have another Great Depression.
From our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching the China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
All right, let's take a look at these markets right now because we're seeing a complete reversal of yesterday's action. You can see the S&P 500 lower on the day. Net big tech is your outperformer, up about 0.4%. And small caps, yesterday's winner, now today's biggest loser. The Russell 2000 down about 1.1%. We'll continue to follow that. Coming up, Bloomberg Technology. That does it for Bloomberg Markets. I'm Katie Greifeld, and this is Bloomberg.
Saturday mornings, I understand you have off.
Yeah, Saturday is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm onto a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
So the US to sell $70 billion in 3-month bills on June 17th to settle on June 20th. And the US to sell $70 billion in 6-month bills on June 17th to settle on June 20th. The US to sell $21 billion reopened 5-year tips on June 20th to settle on June 28th. The US to sell $13 billion reopened 20-year bonds on June 18th to settle on July 1st.
But first, let's check in on these markets because we've got more fuel to this fire. We've got still record high after record high across benchmarks. If you look in the S&P 500, it'd be your 4th straight record high on the day. We're seeing the NASDAQ up another 0.1%. Look, not the big gains that we saw yesterday, but we digest yet another cooling of inflation with the PPI report. The macro picture looks good. The 10-year yield falls down another 3-4 basis points, let's call it. Borrowing costs on the downside. Not so much love for European stocks, though. Still open to trade. We're off by 1.3%. More political anxiety happening in Europe, and perhaps, of course, digesting a big move that we had yesterday. Move on, see what's happening in the world of crypto, Tim. We have been seeing basically us holding pretty steady. We're off by about a percentage point. 67,000, interestingly, coming off of those highs. So that moon music about risk on, not quite flowing into Bitcoin today. But what are you watching on the micro?
Well, speaking of records, I'm watching shares of Broadcom, ticker AVGO. They are just surging by close to 14% right now. The company did report earnings after the bell yesterday. It beat on the top line, it beat on the bottom line. The guidance surpassed analyst expectations. The company also announced a 10-for-1 stock split. It's going to take effect next month. Investors are certainly cheering that news, sending shares higher. Widely seen as sort of a barometer for what's happening in the chip space. So checking in on some other chip companies, NVIDIA also at a new record right now, shares up by more than 2%. And then watching what's happening in the data center hardware networking when it comes to these AI data centers. Arista Networks also right now at a new record, up more than 4%. But speaking of shares surging, let's talk Tesla, because shares are higher this morning. This after Elon Musk sent a tweet early this morning, again, as you mentioned, Caroline, the day of that shareholders meeting, saying that those 2 shareholder issues that were being voted on have passed or will pass by a, quote, wide margin. We're talking, of course, about that 2018 pay package that has been under so much scrutiny. In addition to that, the idea of the company moving its incorporation from Delaware to Texas. Shares higher right now by 3.7%. Not much can be said permanently about what happens with that pay package, but this vote widely seen as sort of a barometer, a test for how people are seeing Elon Musk's leadership at a time when the stock has been under pressure, down going into today's trade, Caroline, around 30%.
Let's get some expertise even further on this, Tim. Dana Hull joins us. And Dana, look, it's not going to have any implications on the court in the here and now. This still is all riding on a judge in the long term, but certainly it holds on Elon Musk from walking too soon.
Yeah, and to be honest, like I was not expecting Elon Musk to front run Tesla's AGM. We thought we were going to get the vote results tonight, but clearly Tesla is keeping very close track of the votes that they do have. And a lot of votes came in yesterday. The deadline to cast a vote was late last night, and they've got the votes. I mean, if you believe Elon's tweet, and I don't think there's a reason not to, they have the votes on both his pay and on the move to Texas. And what this means is that many of the very big shareholders that Tesla was worried about either abstained or voted yes. And that's like a super fascinating dynamic because some of the large funds like Vanguard actually voted no in 2018, and they are the largest shareholder in Tesla after Musk himself.
Dana, that's what surprised me so much about this vote. You had these large asset managers, such as Vanguard that you just mentioned, voting in favor of this. Do you know anything about why they switched or this sort of strange bedfellows here in terms of who's voted for and who's voted against?
Well, to be clear, Vanguard has not said anything yet. We don't know for sure how they voted, but if
I should say this, sorry, the New York Times reporting early this morning, excuse me.
We have not confirmed that ourselves, but if you look at the vote count, just a lot of yes votes came in yesterday, and they have to be the big votes from the shareholders: Vanguard, BlackRock, Geode, State Street. So yeah, and it's interesting too because both ISS and Glass Lewis, the big proxy advisory firms, were no on the pay package. And that's why Tesla was so aggressively courting retail investors. Tesla was worried that they didn't have the votes from the big funds and they were actively courting retail. We know that they were actively courting the large shareholders too, but something's turned their way, and I think they've got it. I mean, so tonight we'll get the final tally, but I mean, you're going to see an ebullient Elon Musk take the stage at the AGM today.
All right, well, we'll certainly look forward to that again, starting at 4:30 Wall Street time today. Bloomberg's Dana Hull, thanks so much for that. Well, turning now to Apple, when CEO Tim Cook announced the company's partnership with OpenAI, they didn't disclose the financial terms of the agreement. For more on what we know about the deal, let's bring in Bloomberg's Lynn Duan. She's here in our studios in New York. What do we know about the financial terms of the agreement? Just zeros all around?
Hi. First, thank you for having me. Second, there are no financial terms, apparently. It's funny because I feel like that was the biggest question on that day when they announced this partnership. It was like, okay, so who's paying who? Who's making money here? It turns out there is no money exchanging hands, at least at the onset, right? What's actually happening is, according to Apple reporter Mark Gurman's sources, is Apple believes that there is enough value, maybe even more value than monetary value, to OpenAI and having its products on a ton of Apple devices across the board. The promotion of their product there offers them a business proposition. If people want to, say, go from the free version of OpenAI to the paid version for $20 a month. So that's the proposition to OpenAI. And for Apple, it's clearly a value add in allowing users like me and you to be able to access OpenAI and all of the tools, the AI-generated, content that it has on our Apple devices.
There has been some cost, apart from Elon Musk's ire and claim that he'll ban Apple iPhones going into any of his companies. But this integration will actually cost OpenAI something, right? Because, well, they've got to pay for the compute if everyone starts using it.
That's right. And the idea behind it is that in the long term, this cost, this investment that they're making will pay off, both for Apple and for OpenAI. For Apple, I think that the long-term advantage here, the reason why they are making partnerships with OpenAI and are trying to make partnerships with other AI developers, by the way, this is not an exclusive arrangement, is that hopefully one day they will be able to monetize it through revenue sharing agreements. So anytime one of these AI developers is able to sell a subscription through an Apple device, hopefully Apple will get a cut from it. That's what Apple hopes. And as far as the AI developers go, they are willing to give this investment in the hopes that it will generate more revenue. And mind you, this is a big push for OpenAI right now. They're under a lot of pressure to show that they can not only generate revenue, but that they can generate enough revenue to turn a profit. And that's what they really need in order to keep all this AI compute going, is more and more money coming into the institution to fund it. It's a lot of data center capacity.
A lot of data center. Maybe they're saving a little bit by Apple not getting a cut on the ChatGPT app for now, but certainly lots of way that this can be earning some bucks. We thank you. That was a perfect summary, Lynn Duan of Bloomberg. Meanwhile, coming up, we're going to break down Broadcom's pretty sensational results, actually. Shares surging, as Tim outlined a little bit earlier. It's all on, guess what? AI demand. But we want to go back, actually, to what's been happening overseas with BYD, Chinese EV maker, of course, actually traded here in the US for some ADRs. We're higher on the day, and that's as we start to digest the EU tariffs, which initially was a shock, but actually we think this perhaps is slightly less of a tariff than had been anticipated, 17% for BYD, and actually they can stomach it if they're going to continue to sell into Europe. This is Bloomberg Technology.
News and tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself, actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Well, shares of chip supplier Broadcom surging after the company reported earnings that were boosted by demand for AI products. Joining us now for more is Kunjan Sabani of Bloomberg Intelligence. Kunjan, these results just exceeded all analyst expectations on the top line, the bottom line, guidance as well. Remind us of the space that Broadcom plays in. A huge Apple supplier, of course, but tell us about the AI element here.
Yeah, so they have two core AI businesses. One is the ASIC accelerators, which is alternative to merchant GPU, what someone like an NVIDIA provides. So mainly focused on the large cloud players and hyperscalers like Google, Meta, Microsoft, etc. And the second is the AI networking or the overall networking business, which until now was the biggest piece, which is where basically the pipeline that runs, the data center runs on. So anything outside of the CPU, GPU, and memory, that's basically all the networking components.
Kunjan, we have clearly some competitor inching into the space when you think of NVIDIA. It's a good, strong number two. But what's also interesting is they're taking a leaf out of NVIDIA's book. They're doing a stock split.
Yeah, I mean, that seems to be the trend these days. You beat on good AI results and do a stock split, and you see what happens, double-digit stock growth. But I think from a competition point of view, from in the near term, in terms of use case, we don't think they're really competing with each other because the use case right now are different, and there is no hurdles to growth for both companies. But I think in the long term, it definitely will compete, not in the use case, but more in the wallet share, because the cloud providers and hyperscalers would have limited budget to spend.
And designing their own chips, slowly but surely. Really interesting, Kunjan Sabani. We thank you so much of Bloomberg Intelligence. Rounding up on what is happening for Broadcom, but let's broaden out. Is all the play in AI about the infrastructure space, the picks and shovels, the actual chips, or what about the applications? What about the large language models? We've got the perfect voice to really dovetail that with Federal Policy Reserve. And it is Joe Zhao. He's Millennia Capital Managing Partner. Joe used to work over at the Fed, so you are the perfect person to sort of outline whether in this environment, where eventually we might get one, maybe even two cuts this year in terms of overall policy, you should be putting yet more money into a Broadcom, into an NVIDIA, into some other AI plays?
Yeah, look, like taking a step back, I think that we're in this huge AI build out. And there's a couple ways you can play this market. You could participate in a semis ETF. You could pick the winners. But I think what I'm thinking in my head is, I think there's some naysayers who are saying, well, this AI build out we're going to see the peak of the curve in the next couple of years. I personally think that this hyper growth phase in the semis will probably go on for years. Just because I think what the street is not saying is that there's going to be a lot of incremental demand from some of the tech laggers that will need to catch up on AI. There's going to be foreign buyers from, let's say, Europe and emerging markets. And lastly, I think what we're also thinking is there's going to be a lot of training and retraining of AI. AI is like software. Every time, on your iPhone, you got to update your software every single week. So in AI, as there are new data becoming available, you have to update the AI, you have to retrain. So I personally think that the AI, the infra trade has a lot of room to go.
Well, Joe, I mean, sticking with your experience on the Federal Reserve, because look, at the end of the day, rates are pretty much everything when we're talking about this stuff. I'm wondering how you're thinking about these high-flying tech companies and what exactly is priced in with regard to rate cuts. Are we going to see still moves higher even after the Fed does cut rates, if it does cut rates this year, or is that already priced in?
Look, as a former staffer and now founder of our firm, I take the view that it's important to look at the long-term directions of interest rates. In economics, there's a saying like, we're 90% confident, we're 95% confident, we're probably 90% confident that there's going to be at least one rate cut sometime in the next 9 months. So whether it starts in July, September, December, or January, I think is not as important to me as an investor, because the directions of the rates are coming down. So what that means is what you can do is to put, I think there's one more thing that I think the street often gets wrong out, and I'll say this like for the record, is I think the street puts a lot of emphasis on the dot plot chart. And I think what I would do is probably put 60% of your weight on the dot plot chart and put 40% of your own research analysis into the thinking. So you come up with your own framework to what you think is going to be the path of interest rates, and then you put that into your financial model, your DCF model on Excel, and then you can sort of figure out what you think is fair value on the S&P, on NASDAQ, and on the stocks. So for me, I just take a step back. I'm less worried about whether the cut starts in September or December, but I think there's a rate coming, so that I'll just put that into my model, and then that'll be able to help me make better decisions as an investor.
You're betting on the trend, and you're
Correct.
betting actually on private companies. I'm thinking of Anthropic you've put money into, some of the large language models. Dissect for us where the money then now is allocated in this space. Is it the large language models? At what point do we start seeing more money allocated to the applications, the use of these large language models?
Fed bids for 4-week bills total $292.5 million.
Themes of this AI value chain in my head. If you start from the very bottom, right, you have electricity, you have data centers, you have cooling centers, and then on top of that, you'll have chips, so it's the semis, and you have the data owners like the Max 7, and then on the top you have the large language models, and then you need human talent, you need smart people to train the AI and work on it, and then lastly you need we're going to build the applications. I think as an investor, you can obviously play this AI trade in public markets by buying public stock to QQQ. But in private markets, what we're doing is we're sort of an ETF in the private markets, in that we're invested in Anthropic, Lambda, Cohere, because these are the innovations companies happening in the private markets. But there's also other ways to play this AI trade, because you could also be investing in utilities, you could be buying data centers. So I think there's different ways, but I think the fundamental thesis in my head is that it's a foregone conclusion whether AI is real. In fact, I think AI is going to be like software squared, the internet cubed, if you will, excuse me. But I think the biggest question in my head is actually AI regulation. But that aside, I think when you take a step back and you look at some of the companies in this AI trade, we're at the very beginning where, you can think of it like a 2-year-old baby. And so the saying is, in plain words, if this baby at 2-year-old can do what it can do, imagine when that baby matures as an adult, how much more that person can do.
Okay, well, as a venture capitalist, you're thinking about that baby as an adult. So very briefly, paint a picture for us about what AI can do when it's 19 years old.
Yeah, then we're talking about the sixth layer, which is the application layer, right? So there's, I guess the industry phrase here is called vertical software, which is you can apply AI in cybersecurity, in automation, in robotics. There's a company called Figure AI that's combining robotics with AI. We're invested in an AI cybersecurity company called Deep Instinct. But you can also apply AI to pharma research, to many other fields that we haven't even thought about. There's one thing I gotta say that's really, really important. When we think back at the major technological innovations of the last 200 years, whether it was electricity, the engine, the internet, how did we as a humanity create that? We did it with human intelligence, people working together. Yeah. But what happens now when you can recreate intelligence, you can recreate many, many Thomas Edisons. So there's many infinite possibilities that we can create. So what I'm trying to say is, it's really, I think, about how we nurture this technology in a way that's going to help us helps humanity move forward and grow in a way that's responsible.
Joe Zhao of Millennia Capital, thanks so much for joining us. Certainly do appreciate it. Coming up next, we push ahead to Adobe's results as the company gears up to report its AI progress after the bell. Caroline.
Let's just dwell on a fintech company currently trading over in Europe as well. I'm afraid not everything's on the up and up today. And in Europe, we're on the downtown. We're off by 11% for Wise, originally TransferWise, basically tumbling the most on record. £2 billion gone, $2 billion. It's the company's outlook for revenue growth disappointed investors. The underlying income expected to climb only 15 to 20%. Not good enough. This is Bloomberg Technology.
At 11:30 a.m. Eastern Time, the US sells $70 billion in 4-week bills, prior high yield 5.27% and a prior bid cover of 2.81.
Politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about
Von der Leyen says global trade is distorted by Chinese overcapacity.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Time now for Talking Tech. First up, startup Aleph Alpha says, look, AI must grow beyond chatbots in order to be profitable. Speaking to Bloomberg, the CEO, Jonas Androulis, says businesses need more specialized models, other than LLMs that power the likes of ChatGPT. He went on to compare the current AI craze to the likes of the dot-com bubble of the late 90s. Plus, Norway hits Meta with a complaint over their plans to use images and posts from Facebook and Instagram to train AI models. Now, the Norwegian Consumer Council says Meta has made it, quote, deliberately cumbersome to opt out of the AI scraping process, which would violate EU data protection rules. Meanwhile, OpenAI CEO Sam Altman says the company is on pace for a $3.4 billion annual revenue. Now, according to a person familiar with the matter, Sam Altman's addressing staff, and in an all-hands meeting Wednesday, he added that the company was on track to generate $200 million from this AI partnership through Microsoft Azure.
Well, sticking with AI, Adobe out with earnings after the bell, where investors will be focusing on the company's AI progress and if customers are spending for it. Joining us now is Bloomberg's Brody Ford. Brody, good to see you this morning. I'm wondering where the context is here, because shares are down more than 20% going into the print later today. And the company plays in an interesting space because it provides AI services, but at the same time, it's software as a service, which has just been beat up this year as companies have shifted their budgets more to hardware. What has beat up the company more going into earnings? Is it competition, or is it a lack of spend when it comes to software and services?
Yeah, Adobe is one of the more interesting AI debates out there because, like all software, it's been the question of, are they benefiting from AI or are they getting replaced by AI? You know, Adobe is famous for their creative portfolio, Photoshop, video editors, and they've introduced new features to be able to generate imagery in there. The key fear for investors is that over time with AI, if I'm able to type in, I don't know, TV show anchors talking about tech. Am I really going to need, Photoshop to do that? Am I going to need a video editor to do that? And are small businesses going to stop using these licenses so much, right? And so Adobe has spoken a big game about AI uplift for probably over a year now. It really hasn't shown up in the numbers. And so investors are starting to feel like, hold up, maybe these numbers aren't going to really come.
But Brody, the numbers ain't that bad in terms of growth of still 10% for revenue expected, and actually consistently going to be about 10, 11% for the next few years. So where is the anxiety eventually going to show up? Where are we going to actually see them eroding some of that revenue gain?
Yeah, it is for sure a long-term risk. I mean, I haven't seen a whole lot of evidence.
At 11:30 a.m. Eastern Time, the US sells $70 billion in 4-week bills, prior high yield 5.27%, and a prior bid to cover of 2.81.
Toward these AI startups, and in theory, that new spending should have been going towards a software incumbent like Adobe. I mean, it is such a small metric investors focus on here with one of the craziest acronyms. It's like net new annual recurring revenue for their digital media segment. And that has gone down bit by bit, again, because there's this sense of like, hey, maybe they are not getting new workloads that are ending up in the hands of Runway or DALL-E or Midjourney.
Hey, Brody, I'm wondering what you see, or analysts see rather, as the biggest competition out there right now from the upstarts that exist. Is it the LLMs, or is it the bigger companies that are starting to adopt what the LLMs kind of started doing earlier?
It's definitely not the bigger companies. I mean, Adobe is the incumbent here. I think the biggest anxiety point is Canva, and has been for a long time. You know, that great Australian startup. They're known for making the templates that you might end up seeing on Instagram, or you might see at your friend's wedding. You know, they've just made it a lot simpler to do quick design. It's a little cheaper. It's all on the web. I mean, that's who Adobe investors have been anxious about for a while.
Yeah.
On the upstart side, it is more of those large language model makers who are generating images.
Brody, thank you for joining us. All eyes on Adobe after the bell. Meanwhile, stay tuned, because coming up, we're going to be joined by Intuit CEO, Sasan Kodadze, to talk about the company's own AI strategy. It's been long term. This is Bloomberg Technology.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffman arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffman also holds the CFO position. He says his two jobs complement each other.
I actually feel
Shortly expecting the results of the 4-week bill auction, I'll lead with the high yield.
Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde.
And I'm Tim Stanovic in for Ed Ludlow.
Let's get a quick check on these markets, Tim, at the moment, because we're currently seeing higher just when you're looking at technology stocks, and US trade more broadly, S&P 500 at a new record, NASDAQ at a new record, two-year yield moved by the fact that PPI is showing once again inflationary pressures dialing back. Stock 600 over in Europe just finished trade, I'm afraid, to the 1.3% downside as we still digest political risk and maybe, you know, a repathing of where Federal Reserve pushes rates and people having some anxiety over that. Move on, have a look at something individual movers, because record high for Broadcom, 13% on the nose higher. They're doing what's rather in vogue at the moment in a stock split by 10, so we'll see perhaps a little bit more retail come into this chip maker that is also on a tear when it comes to AI demand, then revenue really managing to impress, and the guidance too. MicroStrategy off by 6%. Why? More supply coming, but this term in convertible notes. Why is Michael Saylor selling converts? Because he wants to buy more Bitcoin, Tim. And Tesla is currently up by 3%. Look, that AGM is going to be starting later today. We seem as though shareholders are voting in favor, not only of that $56 billion pay package that was withheld from 2018, but also the move to Texas. The question is, will that judge think similarly? We want to get on to another company at the moment, and I want to discuss what's happening over at Intuit. Intuit MailChimp is coming out with a new revenue tool. It's a system of predictive and generative AI models. Basically, it's designed to help marketeers win more revenue. You're going to send the right email at the right SMS at the right time with the right conversion. Intuit CEO is going to talk us through it. Sasan Kodadze joining us for more. And this is about artificial intelligence, really in the here and now, Sasan. You have been talking up AI. You've been reworking your business since the time you came in as CEO. I want to, kudos to you for talking about it before the rest of the market did. But how is it actually going to generate revenue for you?
Well, first of all, thank you so much for having me. What we announced today is a really big deal. Let me first quickly start with context and then talk to what we launched and how over time it will generate revenue for Intuit. Strategically, there are three big things really that we've declared. One is
5.26%, 5.26% bid to cover ratio, 2.95, 2.95. The US sells $70 billion in 4-week bills and awards 92.61% of bids at high.
Human experts within every workflow so that there's never a dead end for customers. When there's a dead end with the technology doing the work, our experts that actually sit on our data and AI platform can be the assistant for consumers and small businesses. And third, to take our game to the mid-market and small enterprises and really serve our customers in ways that they could never imagine possible. Specifically, what we announced today on our Intuit MailChimp platform is what we call revenue intelligence. One of the things that small businesses care about most is revenue growth and profitability growth. And within that, their cash flow matters a lot. And so revenue intelligence does something remarkable. It leverages all of our customers' data across MailChimp and QuickBooks, and in essence helps them with understanding how they can drive customer and revenue growth. So imagine showing up to work every day.
I'm just gonna think about imagining as a consumer here, though, because I can see how this might be music to a marketeer's ears. But me as a consumer, do I want more SMSs? Do I want more emails? Do I want more marketing heading my way?
Well, if I finish the thought around the small business and the impact it will have to the consumer, in essence, the small business can understand which customers they have an opportunity to provide more services to, where they can drive more benefits and profitability. And for a consumer, let's use a couch as an example, or new chairs as an example, as a furniture store that you just came out with. As a consumer of those devices or those couches or chairs, I have an opportunity to know what's available, and I have an opportunity to know where I can modernize my house. And so from a consumer perspective, the benefit is significant. And consumers actually, believe it or not, 95% of consumers love to digest SMSs because they're short, they're sweet, and to the point. And it has an enormous impact for consumers and a big impact for small businesses. And ultimately, to answer your question, the more we can help drive revenue and profitability growth for small businesses, the more we have the capability to monetize and be able to drive growth for Intuit. So we're very excited about what we launched today.
Sasan, I want to talk about the TurboTax business, because you've spoken recently about the idea of looking for more customers who actually use human accountants to adopt TurboTax and not use those accountants anymore. Forgive me for getting personal here, but there's a reason I'm asking this question. I would imagine you have a very, very complicated tax situation as the president and CEO of this company. Do you use TurboTax for your taxes?
A great question. First, let me start with answering your first question, then I'll answer your question about myself. You know, first and foremost, there's a $35 billion total addressable market. And of that $35 billion, $30 billion is consumers and small businesses that actually go to somebody else to have their taxes done. And that's really where we've built out the platform, where it sits on a data and AI platform where we can do your taxes for you. From a governance perspective, I do not use TurboTax because it's important from a governance perspective that somebody else does my taxes for me outside of our platform. So that's the reason why I don't. I would love to do it because we have great experts.
What I was going to say is, do you ever picture a time where somebody with as complicated a tax picture as the executive of a publicly traded company can only use a product like TurboTax for their taxes? Does that day come, and if yes, when?
Well, first of all, we can do that today. If there wasn't a governance issue, I could have one of our experts do all of my taxes today. You know, our experts can today do anybody's taxes for them, and it's all digital, it's all AI powered. And we have multiple second reviews within our platform to ensure that your taxes are done accurately and that you're either getting the largest refund or if you have a balance due, that you're paying the right amount. But today, anybody can do their taxes on our platform and have us do it for them because we have all of the expertise, all of the data and AI capabilities with the best experts in the industry on our platform.
Yeah, we were just seeing, Sasan, how well your share price has been doing of late. And in many ways, of late, we've seen it pop because there's a price increase coming, according to Mizuho analysts in particular, who is outlining what that's going to do for your revenue. Sasan, how big an increase are we going to see for QuickBooks? Can you give us a sort of level revenue, indeed a natural price point?
Yeah, sure. I mean, first of all, I would start by saying that we've had significant innovation on our platform in the last year. Across all of the elements of our platform, whether it's the ability to be able to fuel your success, drive your revenue growth or profitability, and or having our experts help you run your business as a small business. And we always price for value. And so this is very much sort of in line with our pricing strategy and our pricing principles, where we are raising prices all the way from those that today start out to fuel their success as a small business and follow their passion, to mid-market customers. And we've gotten great feedback relative to the innovations that we've delivered in the last year, and we're just simply pricing for value, and we're excited about the possibilities.
I just want to talk about Mint, because there was a lot of sadness when you guys shut Mint down. And I'm wondering if you've seen those customers move over to Credit Karma's products.
Yeah, well, first of all, I'll start with what Mint actually, who it served. It served what we call prime customers, those that generally have credit scores of above 700. And when we thought about our vision as a consumer platform, we want to have a self-driving platform where we can serve you early on in your life to help you build your credit, all the way to how do you build wealth over time. And so given that vision, we actually brought Mint and Credit Karma together so we can serve all of our customers, from those that need to build credit to those that have great credit scores but also have different needs, all on one platform. We actually had more than what we had assumed convert to Credit Karma. In fact, the majority of our customers converted to Credit Karma, particularly because of all the capabilities that we have on Credit Karma to be able to serve our prime customers. There are a very small cohort of customers that did not convert. These are customers that really their love is budgeting tools, budgeting goals, and those are some of the capabilities that over time we're building in Credit Karma but are not available today. I would tell you some cohort of customers were very sad that Mint went away, but actually the majority of our customers are delighted to be on Credit Karma now.
I'm going to ask Tim offset whether he's delighted or heartbroken. But I'm interested, Sasan, lastly, we did just get some recent news out of the IRS. Basically, there's going to be a free tool, the US government in particular, supporting Americans who want the option to file directly with the IRS as ultimately to be in charge of their own taxes. Is this going to be a competitive threat? Are you going to lose people to this free tool?
I mean, the short answer is no, because free is already available to all Americans today. And so with what the IRS has launched, it's just yet another free tool. So it is not a threat to us because free is already available across all private companies. We also don't believe that it's the best use of government money to come out with another tool that's free where free is already available. It's not the best use of money. We'd love to see more money go towards the service that the IRS provides to take very good care of the citizens. But nevertheless, as far as a threat for us, it really is not.
Intuit CEO Sasan Goodarzi. Sasan, thanks so much for joining us. Appreciate it.
Thank you for having me.
Well, coming up, we're going to be joined by Amber Atherton from Patron to talk all things gaming and VC. That's next. This is Bloomberg.
Fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
I think I was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, any given day it would be the head of a studio and, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
Now, in today's VC Spotlight, let's talk about the health of the video game industry, of social networks, of groupings, and whether we might see actually an uptick in investment in the second half of the year into these sorts of processes. Amber Atherton's with us, partner at the early stage venture firm Patron. And Amber, you're all in on sort of networks of people, of thinking, and of gaming interaction online, having been a founder, now a VC. What is artificial intelligence doing to the conversations you're having at the moment?
Yeah, I mean, well, good to be back. Thanks for having me. I think after selling my startup to Discord, I saw firsthand that this younger generation really see gaming not just as entertainment, but as a social network. It's where they hang out with their friends, and I think you're seeing us move towards a more community-driven, multiplayer internet. And so I think when you see AI as part of that story, I mean, if you look at NVIDIA, you look at Microsoft, all of these are companies that started out serving the gaming market, and it's not a surprise that they now have an edge on AI because they start out serving gamers who are very early adopters to new platforms. They have huge demands in terms of graphics and infrastructure. So I think we're very excited about startups that are using gaming as a wedge to further improve AI.
Well, Amber, I want to talk about one of your most recent investments. Caroline and I were talking about it a little earlier. The company Aria just announced yesterday. It's interesting because AI sort of goes into the background there with sort of this AI-powered concierge. Talk a little bit about what exactly this investment is, because it's not completely in the world of gaming, as in you're playing games against somebody else in a virtual world, but it actually takes a real-world approach.
Right, exactly. And I think part of Patron's thesis is that gaming can be a source of good and better goodness for the world. And so I think when we're looking at gaming, it's from a broader lens of, yes, we have bets in studios, but we also look at how gaming is influencing broader consumer technology. And Aria is a good example of this, where AI doesn't have to completely replace human interaction. And in fact, what Aria is doing is helping couples increase their relationship strength, be better partners to each other through this wonderful hybrid of an AI concierge, physical boxes, and a lot of content. So we look at it in a much broader lens, and I think companies like Aria have a really great shot at using AI in a way that doesn't isolate human connection.
Digital human beings is the thesis around Altera, a different portfolio company of yours, and you're investing alongside the likes of Eric Schmidt in this one particular. It's about lab building agents, and how does that fit into a gaming context? Are you going to be gaming alongside agents? Are they going to be in the worlds one's creating?
Yeah, I think it's very rare as an investor to witness a paradigm shift in terms of how humans interact with computers. So when we met the founders of Altera, we were very excited about what they were building. In the initial phases, it's very much you're able to game with an AI agent instead of a friend or with a friend. But where that's ultimately going is toward digital human beings. So I don't think it's inconceivable to think that in the future we will have AI agents and AI friends that provide more than utility, but companionship, friendship, and you're able to play games with them. They're able to assist you in your life. And so I think Altera is a very interesting example of using gaming as a wedge to ultimately serve a much, much broader consumer market.
Look, you wrote a book about online communities, internet. Now we're thinking about how we're going to be playing against totally false agents who are not actually real humans. And we're thinking about building our own intimacy via bets that you're making through the power of AI. Are you feeling comfortable with the direction of travel of artificial intelligence and humanity at the moment? Do you think it's ultimately helping or hindering in some way?
I'm in the business of optimism. So for me, it's that AI is not replacing humans. AI is augmenting humans. AI is bringing a new dimension of fun and personalization into so many different consumer interactions. And I think for us as Patron, we invest across this spectrum of play. And I think it's very difficult to see where consumer technology and AI is going if you don't understand gaming. So for us, we are excited about founders that are operating at the earlier stages, seed stage, and are using AI to really be a force of good in the world.
Amber, who's the platform winner in the world that you envision in the coming years? Is it iOS? Is it Android? Is it Nintendo? Is it Microsoft? Is it Sony? Or is it somebody we're not even talking about?
I think you've mentioned a lot of very interesting names there who are all experimenting at the forefront of, different technological edges, whether it is AR, VR, which we talked a lot about last time, Caroline, or whether it is AI. And so I think that looking at the gaming stocks, particularly, a Discord, if you look at Reddit, one of the most oversubscribed IPOs, and actually even a company like Webtoons that is adjacent to gaming, those types of platforms are very, very interesting in terms of where the next generation is spending their time. They're growing up on games. Half of US 8 to 10-year-olds play Roblox every single day. So I think looking at those stocks and those gaming companies is where you'll see the platform breakouts.
Amber, going to have to leave it there. That's patron partner Amber Atherton joining us from California. Thanks so much. Well, coming up, Elon Musk and his companies are embroiled in dozens of lawsuits, ranging from fatal crashes blamed on Tesla's autopilot system to civil rights complaints over the treatment of employees. We discuss the latest suit after this. This is Bloomberg.
You actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean,
at 12 p.m. Eastern Time, we expect comments from Feds Williams, who will moderate a discussion with Treasury Secretary Yellen at the Plaza Hotel hosted by the Economic Club of New York. No text is expected, but there will be a Q&A.
Because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
Good morning from our world headquarters in New York. I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
Wednesday, fired SpaceX engineers filed a lawsuit against Elon Musk for sexual harassment and retaliation. That was over in a California state court. Now, this escalates their multi-front legal battle with the billionaire chief executive and his aerospace company. Now, the California suit claims that Musk posted sexual photographs, demeaning commentary, and chose to fire employees for speaking up. Josh Idelson joins us now for more to discuss. 8 employees here, and this isn't the first time we've heard from them.
That's right. This is a case from 2022 in which, as you said, workers, engineers say that because they worked on an open letter raising concerns about the company's culture and Musk's behavior, asking whether the company's policies were being applied equally to the chief executive, asking whether this was the kind of culture they wanted to bring to Mars, that as a result, they were fired. They brought a case to the U.S. Labor Board, which issued a complaint saying they were illegally retaliated against in violation of federal labor law. Now, that case at the Labor Board is essentially frozen by a federal court injunction because SpaceX responded by accusing the US Labor Board of having an unconstitutional structure. So now this is a different front where these workers are saying that the company also violated California state law. And in this case, they are able to name Elon Musk personally as a defendant. They're also able to seek damages that the Labor Board can't.
Now, we want to get to the response from SpaceX and Elon Musk. They've not immediately responded to the request to comment on the lawsuit. They've previously denied, though, wrongdoing, as you said, and said the fired employees violated policies and that Musk was actually not involved in their termination. But ultimately, have we seen responses coming from the business, more coordinated fashion, to try and tackle at least some of the issues that are now being circulated amongst citizens as well as those within the company?
Well, we've seen in the Wall Street Journal, for example, Gwen Shotwell, the company's president, saying that allegations that have been made don't reflect the culture at the company. The lawsuit that these fired engineers filed seeks to get a court to force the company to change its policies to address what they say is the company and the CEO knowingly creating a hostile work environment and retaliating against people for bringing it up. They note that Musk has publicly mocked misconduct allegations against him in the past.
What could the implications be for SpaceX if these engineers are successful in their lawsuit, and the implications for Elon Musk as well?
Well, they're seeking damages. They're seeking an injunction that
At 12 p.m. Eastern Time, we expect comments from Feds Williams, who will moderate a discussion with Treasury Secretaries Yellen at the Plaza Hotel, hosted by the Economic Club of New York. No text is expected, but there will be a Q&A.
Elon Musk has shown a lot of tolerance for controversy and for legal battle and for appeals, as we've seen in a number of cases. We will see if the company chooses to change anything in response to this escalating controversy.
Does it have any implications for Tesla or any of Elon Musk's other companies?
Well, people who've come forward with allegations have said that they see patterns at each of these places in terms of the company's behavior and in terms of the CEO's willingness to continue taking the approach that he's taken, even in the face of public embarrassment and allegations. The company, again, is denied wrongdoing.
Bloomberg's Josh Idelson here in New York. Josh, good to see you. Thanks for joining us on this. Do appreciate it.
Thank you.
Great to have him in the studio. Meanwhile, look, that does it for this edition of Bloomberg Technology. You don't want to forget to check out our podcast. You can find it on the terminal as well as online on Apple, on Spotify, on iHeart. Tim, it's been great having you sat next to me, and there's so much more to digest going forward in the rest of the day.
Should we do this again tomorrow?
Yeah, that'd be nice.
Okay, cool.
You could stop by.
Yeah, I'll be here.
Make your day a little bit longer.
Good. Sounds safe.
We're going to be watching the all-important Tesla AGM a little bit later. Stay tuned for it. This is Bloomberg Technology.
Shortly expecting the Freddie Mac mortgage rate statistics for the US.
Was going to keep reading World Cup. This is a three
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
The UK decides. On July 4th, Amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Shortly expecting comments from Feds Williams and Treasury Secretary Yellen.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment, we used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
This is Bloomberg Equality. I'm Caroline Hyde.
And I'm Romaine Bostic. Over the next few weeks, we're broadening our coverage of markets and the economy to take an all-inclusive look at
US 30-year fixed-rate mortgages 6.95% June 13th week versus 6.99% in the prior week.
We're going to go deep today into several key topics, including the impact of the elections in the U.S., the variance and nuance of equality initiatives around the rest of the world, and the corporate retreat from the diversity, equity, and inclusion groundswell from 4 years ago.
Today, Romaine, we start there. The retreat from DEI. It's been nearly 1 year since the US Supreme Court ruled against the use of race-based affirmative action in college admissions. Since then, a push against DEI has spilled into corporate America, where the legal assault on diversity initiatives has actually gathered some steam. Just think billionaires and executives such as Bill Ackman, Elon Musk, launching their own public campaigns against DEI. As conservative groups, they've been ramping up some legal pressure. Now, a group led by Stephen Miller, former advisor to Donald Trump, has filed at least 15 lawsuits, sent over 30 letters to the US Equal Employment Opportunity Commission, arguing that diversity goals have led to discriminatory treatment of white male employees. Now, as criticism grows, corporate America is going quiet on diversity. Just think, Google, Meta slashing DEI budgets, Zoom eliminating its DEI team entirely, Romaine.
Yeah, this has become a big issue, Caroline. You remember what things were like back in 2020 when so many corporations were announcing DEI initiatives and, more importantly, putting money behind it. But as you can see at the chart behind me right now, data from Forrester shows a significant drop-off in that. At around in 2022, we are right around 33%, but you can see that steadily decline into 2023 below 30, and now here in 2024, preliminary data to be sure, Caroline, but now potentially dropping below that 20% mark as well.
Look, the numbers don't lie. Let's talk about the data and the feeling. Ultimately, Bloomberg's Simone Foxman is here covering the topic extensively. And DEI in the workplace, we're right to think it's gone quiet. We're right to think the money's going and reducing. What are the arguments you're hearing that are best placed against having DEI in the workplace?
Well, it's frankly the idea that too much focus on race makes people angry and makes them unwilling to talk to people of a different race, of a different ethnic group, of a different religion. And so that's one of the key arguments against DEI. There's also the idea that companies may be going down in qualifications, in preparation, in aptitude in order to pick someone who falls into a specific category. Now, proponents of DEI say that's not the case. Frankly, discrimination in the workplace is still the overwhelming way that they see the workplace. And therefore, you're just trying to find more Black candidates, more women, more Hispanic candidates, and these programs are still hugely necessary according to these advocates.
Is there any possibility that we could see any middle ground on this? Because anytime we talk about these topics, we're kind of at one extreme or another. The folks who are very pro these DEI initiatives and the folks like Bill Ackman that are using their big megaphones to shout it down.
Well, to be honest, Bill Ackman is focusing very much on DEI on campus. And DEI on campus is very different than DEI in the workplace. And proponents of DEI in the workplace, yes, there's some trainings on unconscious bias and the like that, the folks against DEI say make workers feel guilty. But for the most part, DEI advocates will say, we're just trying to standardize hiring. We're doing like basic stuff to make sure everyone's getting a fair shot. Frankly, I'm just not seeing those voices that are sort of the more centrist voices on this issue come together to talk at all.
What about voices full stop? We were saying how it's gone quiet in corporate America, but actually has it? Is it just that they're talking less in press releases, they're talking less in their earnings statements, but they're still talking about it internally?
Yeah, when you talk to companies, and we do all the time, they say, no, we're still really committed to diversity and we're still really committed to our efforts. Maybe we've had to change them a little bit for the legal ramifications, but we really still care. The problem is, you stop talking about it. What does that mean? Does that mean that there is less desire to bring in diverse candidates? I think that's a big question mark. There are also continuing legal cases that really could have implications.
Well, let's talk about the legal cases, because a big part of this conversation right now isn't just about how companies and people feel, but it's also now about the law of the land. The Supreme Court, of course, striking down the affirmative action issues when it comes to universities, and the fear is that's going to trickle into corporate America. We got another Supreme Court decision just today, which I think is kind of showing the complexity of what's happening in the courts and maybe what folks want to do either in those corporations or in their organizations, and this time surrounding abortion and access to abortion methods, including the pill. Now, they did uphold that ruling today, but there's still concerns here. We can see additional challenges.
Yeah, the Supreme Court essentially said the FDA does have the authority to regulate mifepristone, one of two abortion drugs that's really the one that's specifically for abortion. From corporate America's view, they want employees to stick around. And so they're willing, in many cases, to adopt new policies that will help employees stick around. I was looking at this poll by KFF this morning. Large firms over 5,000 people, 43% of them cover abortion in all or most circumstances, and another 30% in some limited circumstances. But what that means, do you provide travel benefits to employees who need to go out of state to go get an abortion? There's only about 7% that do that. This is putting the onus on companies to try and determine how much do we care about these issues and how much do we care about retaining our employees, how much do we think it's important to them.
Absolutely. Simone Foxman, who's been covering this topic for us here at Bloomberg. And with that focus on the Supreme Court's decision today, we look back to that historic decision just about 1 year ago at that same court that limited the use of affirmative action in college admissions. Corporate America has now found that target on its back as well. Executives really girding for future rulings that could curb corporate hiring practices, specifically those designed to increase employee diversity. We had a chance to catch up with Kenji Yoshino. He's the director of the Meltzer Center for Diversity, Inclusion, and Belonging at NYU Law, and asked him about the implications for corporate DEI programs.
So there's a wide kind of avenue for rebranding or reframing the programs so that they work, almost as well or just as well. In some cases, potentially even better, right? So I don't want to minimize the harm that the decision created, but there are kind of ways in which to proceed forward.
Whether you want to talk about reverse discrimination suits or the ones that are a little bit more targeted towards these specific programs, are we going to get another Supreme Court case out of this, particularly one that specifically addresses corporate America?
Inevitably, yeah. So the thing that I said that we got a clear window into was that the Supreme Court chose between two competing ideas of discrimination. So these are the anti-classification view and the anti-subordination view. The anti-classification view says it is like pernicious to classify individuals on the basis of race, period. No matter what the purpose is, if you classify people on the basis of race, it teaches us to look at each other as members of racial groups, it balkanizes society, and so on and so forth. The anti-subordination view, with which I want to associate myself, says it's actually not classifications in and of themselves that are problematic, it's the end to which they are put. So obviously if you're using a classification to continue the subordination of, say, Jim Crow, that would be horrible. But if you're actually using using the classification, as Harvard's affirmative action program was doing, in order to undo that long history of subordination. That's a different thing entirely. So Justice John Paul Stevens once said, like, to confuse, right, Jim Crow with affirmative action is to confuse a no trespassing sign with a welcome mat, because the goals of these programs are so different.
And it's, you know, I guess the irony shouldn't be lost on anyone that we're talking about doing away with racial classifications in a country that was basically built on racial classifications. How do you sort of address inequalities in society if you don't even acknowledge that those classifications even exist?
Exactly right. So you see me trying to thread the needle here, because on the one hand, I want to say this embrace of the anti-classification view, which is what happened. For 40 years, we've had some version of the anti-subordination view. This kind of YOLO, you know, Supreme Court has embraced the anti-classification view definitively. So now that it's embraced that, it's only a matter of time, again, I would say in the next 5 years, before it takes that over into the employment context, and then we will actually have to be dealing with exactly what Harvard and UNC did. But I also don't want to let go of this point of, you know, this whole country was based on these kinds of racial classifications. You know, Stacey Abrams is really fond of saying the thing that makes her want to spit is when people say, like, diversity, equity, inclusion is un-American, because she said, what could be more American than the idea of trying to expand the ambit of who counts as part of we the people? We were a country that was framed and created by white property men over the course of history, whether that's through the Reconstruction Amendments and civil rights. We extended that to racial minorities. Over the 19th Amendment, which gave women the right to vote, and first, second, third, fourth wave feminism, we extended that to women. The LGBT rights movement, post-Stonewall, we're in Pride Month now, the disability rights movement, Chicana rights movement. Her claim is that every step of the way, we've actually been able to expand who counts in this country, and that DEI is just the newest iteration of that effort. So there couldn't actually be anything more American, right, than this project of DEI in order to overcome exactly what you were saying about the history of subordination on which this country was built.
Our conversation previously with Kenji Yoshino of NYU. Now let's just discuss exactly these legal battles against DEI policies, what they're hoping to accomplish, what they have accomplished. Jonathan Butcher is with us, Senior Research Fellow in the Education Policy at the Heritage Foundation. Now, you have written extensively on the idea that programs aimed at promoting inclusion actually do the opposite. I take a key out of one of your blog posts. DEI does not appeal to our better natures, but accuses anyone who does not see racism everywhere of being racist. How does the legal challenges attack this, Jonathan?
Well, we have to support the Civil Rights Act and what it stands for, and that is that we must do away with racial preferences. Individuals should be treated based on their merit and hard work, not based on the color of their skin. And that is crucially what the Students for Fair Admissions decision represents. It represents that we are not a nation based on racial preferences. I would argue that our founding values have to do with recognizing individual behavior and decisions. And I think that we can establish the Civil Rights Act as a pillar of American law based on preserving that. DEI is doing the opposite.
Well, explain, I guess, how you address some of the issues here, Jonathan. I mean, some folks who have pursued these DEI programs, they specifically point back to the inequities and the inequalities in society. They've decided, for right or wrong, that this is the way to close that gap. If we don't use these programs as a way to address that, do you find that there's anything else there that can do it?
Well, I find that if you treat people based on the color of their skin according to some sort of ratio, you're undermining that individual's ability to demonstrate that they can perform whatever service or job that they've been hired for. We're looking for programs that can show that individuals are based on their choices, their merit, and their decisions. DEI programs are not really diverse. What they're really doing is showing racial preferences, especially in terms of college admissions. That is precisely what DEI offices on college campuses have been doing over the years. That's why they wrote amicus briefs opposing, right, the main argument in Students for Fair Admissions. They were trying to support what Harvard and UNC were trying to do. They were advocating for the idea that we can admit students based on skin color. I would add that there is extensive research showing that these racial preferences cause a mismatch between students and the institutions where they are admitted. It sets students up who are not prepared to succeed in highly selective institutions. When those students, though, are accepted into schools that match the background from the K-12 area where they have been prepared, they are highly successful. If you set them up with racial preferences to attend a school that they are not matched for, it will destroy their confidence. It will set them up for low performance once they are there, and that will kill their job prospects as well as any potential for graduate school later.
Right.
There's clear mismatch literature that represents this.
And yet, we're not seeing merit coming through on an even basis. And yet, because of disadvantages in the very basis of education at the very start, many that should be at some of the highest academic performing institutions aren't able to get there, just whether that be through financial issues, whether their luck or good fortune has been bequeathed to them in early age. So how do you address that if we don't start to look at it from an affirmative action perspective? Where are you thinking allocation of capital could go? How do you ensure that the right people are eventually rising to the top no matter what the color of their skin is?
Well, I agree with you that there's a problem in the education system, and I would argue that the best way to deal with this is to do away with zip code assignment. We should not be assigning students to what school they attend in the K-12 arena based on where they live. We should be allowing parents to make choices based on where their children go to school, based on their unique needs and what school is the best fit for those students. And those schools can then prepare students to be successful either in the workforce or in the college that they choose to attend.
Jonathan Butcher of the Heritage Foundation, we appreciate you joining, outline some of the focus that you have as to why DEI is perhaps not the right focus within corporate America. Coming up, we continue our own, view.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
So just seeing a release of text from Yellen here. It says traditional supply-side economics relies too heavily on tax cuts and ignores the importance of public infrastructure, workforce and research investment. So again, Yellen wasn't expecting to release a text, just does seem we are seeing a text release from Yellen here.
In global affairs, but geopolitical uncertainties, deflationary pressures, and questions about foreign
Says the scale of China's industrial subsidies far exceed those of other countries, and the world cannot absorb huge quantities of excess Chinese production. It says Biden's economic strategy needs both public investment and private sector investment to sustain growth and prosperity. It says industrial production and overcapacity from China may hurt efforts to build a healthy US-China economic relationship.
A special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg Equality. Billionaire fund manager Bill Ackman has made himself one of the most vocal and deep-pocketed opponents of DEI, criticizing diversity offices at universities for not being open to all minority groups. The Pershing Square founder saying, quote, if you're an Asian student at Harvard, the DEI office is not there to help you. If you're a Jewish student at Harvard, the DEI office is not there to help you. Now, while Ackman loudly pushes back on the idea of DEI itself, companies have been quietly pairing their DEI practices as well, seeking to sidestep the culture war. Take a look at the Russell 3000 index of the largest publicly held companies in the U.S. and mentions of diversity and DEI in earnings conference calls. Well, that has drastically declined. Here's a look at how diversity became a controversial word in corporate America.
The Black Lives Matter movement really had a resurgence after the murder of George Floyd. We saw a really big impact on corporate America. Citigroup pledged $1 billion to help close the racial equity gap. Target and Walmart said they wanted to hire and promote 1 million Black workers by 2030.
There's still not parity for people of color in management or any of the top jobs. You can see 6% of top executives as Black. In terms of the population of the United States, that should be 13%.
The U.S. Supreme Court sharply limiting the use of race as a factor in university admission.
The SCOTUS ruling really opened the floodgates of attacks against DEI policies. Last year, more than 20 states across the U.S. either considered or approved laws attacking DEI. Companies are worried that some of those hiring policies might now pose a legal threat.
Edward Bloom is a conservative activist. He was involved in the Harvard lawsuit, a group that he had created, had been trying to get affirmative action banned for some time.
His latest target is a venture capital firm called the Fearless Fund.
We are not the focus here. We're really just the lawsuit.
People think affirmative action is just we're going to hire a Black guy instead of a white guy, or we're going to hire a woman instead of a man. What's really going on here is we're the pool of people being hired to look like America.
One of the biggest worries for corporations is figuring out the way forward.
Now, let's just talk about that ruling in the case against the Fearless Fund, which was just mentioned in the previous report, came in favor of affirmative action foe Edward Bloom. Now, the Federal Appeals Court is blocking the venture fund's grant contest for Black women entrepreneurs. But there is another firm who had a battle, and Hello Alice is a fintech startup offering grants to entrepreneurs from underrepresented groups. The suit was brought on by the America First Legal, with a judge recently actually dismissing the case. We had the chance to talk with Hello Alice co-founder and CEO, Carolyn Rhodes.
It impacted every part of our business. I think one of the things I'm so fortunate about, we advocate a lot for the small businesses in our community, that they have to be healthy, financially strong, and financially fit businesses. And it's something that we always ran our own business under that requirement. And I'm so grateful because it allowed us to bring in the very best legal counsel that we could bring in. When this came through, our company said we want to be on the right side of history. We're going to continue to fight and advocate for the things that we founded this company on, for equity and for inclusion and for opportunity for every entrepreneur. It has been a game changer for us, I think, in terms of how we run the business, how we make sure that we can continue to operate in the face of what I'll call a crisis, because it's a pretty major undertaking for a business to have to take that on, and a lawsuit at this scale. But in the end, I think it's made us much stronger. We've been able to just strengthen our relationships with our partners, strengthen our relationship with our community of 1.5 million business owners who stepped up and really believe in what we do. I think we were able to walk the walk and push for these founders.
Can I ask about the partners? Because it wasn't just you that was focused on with the legal challenge, but it's progressive as well. And there's many a worry that at the moment, big corporations are not wanting to have to make and take a stand, and it's the smaller VCs or startups that are having to do the fighting for them. Is that something you feel like?
Our partners have been incredible for us. I think the reality is when you're a large corporation, there are a lot more cooks in the kitchen. A lot of people have opinions, there's a lot of concerns, there's much broader impact in terms of the decisions. The benefit of us being able to fight this fight is that we are a smaller business. We're very scrappy. We make decisions with a much smaller team, but to have the support of the best legal counsel in our country, to have the support of these major corporations stepping up and saying, how can we help you continue as a business and be the strongest business that you can be so that you can continue to do this, it's been a game changer for us. But I'm happy to fight the fight. It's a fight I believe in to my core. It's why I started this company in the first place. And we'll continue to fight the fight as long as they're out there.
But what does the future hold, particularly for these types of programs, grant programs, ones that specifically target disadvantaged groups? Can you still do that out in the open? I know legally you can still do, at least as a private company, you can still do that out in the open here. But is there maybe a bit of a retrenchment, not so much in the effort, but in the messaging?
I will say saying the effort is strong. I think legally there is question over, is it discriminatory or not? Is it a contract or not? We took a lot of care when we structured our grants programs to ensure that they were not contracts. These are awards. These are private dollars being allocated in ways that private corporations see fit, in the same way that we're able to give our philanthropic dollars anywhere that we choose. It's the beauty of our country and a freedom of us as U.S. citizens. And that's something that we want to work to maintain. All the research shows, again, if we keep on the path that we've been going on, it will be hundreds of years before we see these capital gaps close for Black and Latino founders.
Our conversation there with Hello Alice CEO Carolyn Rods. Coming up here on the program, our takeaways from today's episode and a look ahead to next week's program. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg. Top experts. Great questions.
This is Bloomberg Equality. Look, the biggest takeaways from today's show is that factually, data-wise, DEI is going quieter. There are legal fights that can be won, like with Hello Alice, but ultimately, maybe the focus just cannot be as loud as it was previously.
It can't be as loud here, but you heard from Carolyn. They're still pushing forward. We also heard from Butcher over at the Heritage Institute saying that the legal challenges will probably still be coming as well. We will be continuing our special coverage throughout the entire month of June right here on Bloomberg Equality.
No, and a little bit earlier, we talked about how, for example, that ruling from the Supreme Court is allowing still access to the abortion pill. That'll be something we'll be looking at towards the end on the US election. But for next week, global equality gaps. We're going to focus on how equality differs around the world.
Yeah, please tune in. We'll be back then. From New York, this is Bloomberg.
From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
This is Bloomberg Markets, and I'm Shonali Bassick. Let's get a check here on these markets because we are watching the S&P 500 start the day in the green, now slip into the red. We are near session lows of the day. The S&P 500 down about 0.3%. That NASDAQ 100 still trying to hold on to those gains, essentially flat on the day. AI is still where you see the love. Philadelphia Semiconductor Index, you're still seeing a strong bid there, or at least a 0.6% bid. Of course, Broadcom out with its forecast, stunning investors riding at the highest levels ever and driving that index higher. But you do have cooling in other parts of the market as well. Of course, crude oil now taking a breather after Russia agreed to dial back output. And of course, inflation data really led the way when it came to the story here in terms of what is possible for the engine of this economy. Let's look at the 10-year over 5 days because, of course, with that inflation data, not just yesterday, but of course, producer price data today as well as jobless claims showed a significant cooling. And you can see we are back to where we started about 5 days ago. Just incredible here. You're seeing a stunning move from peak to trough over that 5-day period, with really the 10-year yield hitting almost 450 once again, certainly 447 above that level, back down to about 424. You're looking at another 4 basis point move on the day today after that producer price index data. But again, remember that jump that you saw earlier had a lot to do with the jobs data that you saw late last week, of course reversing after you saw signs of inflation cooling. Now remember, murmurs that the Fed's dot plot is becoming more and more obsolete were further justified this morning with that PPI data coming in substantially lower than expected on both a headline and a core basis. Jobless claims, as we've been talking about, unexpectedly rising much more than expected. Here's what Subhadra Rajappa had to say this morning after that jobless data.
When you tend to see a deterioration in the employment picture, you tend to see that led by initial jobless claims. It tends to be a leading indicator. But that said, again, one data point doesn't make a trend. We'll be looking to see what happens. What was interesting to me in yesterday's summary of economic projections is the fact that the Fed kept core PCE at 2.8% for this year. So they're expecting about roughly 0.2 increases month over month for the remainder of the year in core PCE. So in that sort of context where inflation is still relatively sticky and the job market is quite strong and growth is in the context of 2 to 2.5%, I don't see any need for the Fed to rush into cut rates.
Now, Shevin Yeltakeen is Dean of University of Rochester's Simon Business School and joins me now to discuss the economic and Federal Reserve picture here in light of all the data we're getting. And we were talking just a little bit ago about the round robin in the 10-year yields that we're seeing on the back of the data we saw both last week and then this week. How do you feel about the progress being made in inflation today?
I think definitely the news that we received both today and the CPI index in May is, certainly in the right direction if we're thinking about Federal Reserve cutting interest rates. But I think they're going to be patient, probably more patient than the rest of us in the economy want them to be, in terms of seeing a little bit more data points come in to make sure that the economy is trending towards that 2% target inflation rate.
How patient? You saw that drastic move in the bond market, both in short-term and long-term rates. Do you think that makes sense given what we're seeing in the data?
Absolutely. I mean, I think as the news about both the economy and the price indices come in, we're seeing really a picture where whereas the markets would really like the Fed to start cutting the interest rates, there isn't that much pressure either from the labor market or from economic growth for the Fed to do so. So it has a little bit of room to wait for that inflation to stabilize. And I can see that fluctuation is those sort of a little bit of a, not conflicting, but definitely different data points coming through the economy, giving a little bit of a mixed and a little bit of a complicated picture.
It certainly is a complicated picture, and you think about just how whipsawed bond investors have been over the last couple of months, and a lot of people have piled into that duration trade just to be burned. How do you think the current data creates complications for the future here? Shevin, I really just want to acknowledge that so many investors out there have a different basis for why they think interest rate cuts might come.
Absolutely. I think, maybe a couple of months ago, we were thinking about seeing some interest rates towards the end of the summer, in the fall. Now that might be extended into perhaps into the new year. And again, here, we're going to continue to observe two things. The labor market, despite the jobless claims increase that we just received, continues to be historically very, very strong. Are we seeing a little bit of a softening from maybe a year ago, maybe about 6 or 8 months ago? Yes, but it's really mild. And again, one data point doesn't make a trend. We need to wait to see exactly what kind of information we're getting from the labor market and also, of course, growth. I mean, the U.S. economy has been growing at a steady clip, certainly outpacing a lot of the industrialized countries across the world. So that really does leave more room for the Fed. And I think that means that the bond investors are going to have to be a little bit more patient, waiting for that cut.
You think about how volatile this year could be for circumstances that have nothing to do with the Fed's control, the U.S. election moving forward, the picture for next year, for those that are betting on longer-term bonds right now, the fiscal picture has still been quite dire in a lot of ways. There are a lot of concerns about the U.S. debt load, and it has made it hard for people to make that trade in the longer ends of the yield curve. Do you think that there will be more confidence or more uncertainty ahead?
Elections are always times of uncertainty. We see this not just in the United States, across the globe. So there's going to be a lot more fluctuations coming around, November election time. And of course, depending on what the outcome of the election is, about impending policies and policy changes once the January inauguration hits. So we are going to see a lot more uncertainty. That might, of course, factor into the calculus that the Fed is going to do, although they try not to manage that kind of the fiscal side. On the fiscal side, I've worked on this for a long time in my career. I tend to be a lot more sanguine about the U.S. economy's debt capacity. We hear a lot about sort of the U.S. debt is unsustainable. It's reached over 100% of GDP. Those rules of thumb really actually don't have much basis in theory. The U.S. economy is growing at a steady clip. Both the household and firm indebtedness is at a low level. And the amount of money actually the U.S. government is spending and servicing that debt, especially in real terms, once we take the kind of the inflationary piece out, is not that high. It's actually, again, on the historically low rates. So I tend to be a lot more sanguine about that. That doesn't mean that we should go on a big, spending spree and push fiscal prudence to the side, but it's certainly not the thing that's keeping me up at night. And I hope that that's sort of a little bit of comforting words for the bond investors as well.
Certainly is. Shevin Yeltsin is Dean of University of Rochester's Simon Business School. Thank you so very much for joining us today. Meanwhile, switching over to global politics, because former President Donald Trump is pitching executives this morning at a business roundtable event in Washington, D.C. And at that same time, President Biden is at the G7 summit in Italy with news around Ukraine funding. We're going to bring in Bloomberg's Anne-Marie Hordern in Italy and Bloomberg's Kayleigh Lyons in D.C. Kayleigh, starting with you on this, because we know that roundtable had begun. We had a lot of folks, high-level executives that are sitting in on that roundtable. What is the message from former President Trump to them?
Well, Shonali, the roundtable actually has ended. Donald Trump's motorcade has left the business roundtable here at the wharf in Washington, D.C., and moved on to the NRSC, the Senate building, in which he will be meeting with Senate leaders and other Republican members of the Senate after meeting with House Republicans earlier this morning. But to the CEOs that were in this room, which included the likes of J.P. Morgan CEO Jamie Dimon and Jane Fraser of Citi, others, including Tim Cook of Apple, were expected to be here. It was likely going to be a very pro-business message. Donald Trump got to deliver that himself in person, unlike Joe Biden, who is at the G7 summit in Italy. So his chief of staff, Jeff Zients, instead had to plead the administration's case earlier this morning. But Donald Trump here in Washington has really been talking about a pro-business, lower taxes kind of effort that he would like to see done if he does indeed win another turn in the Oval Office. A number of lawmakers in the House that I spoke with coming out of their meeting with Trump this morning outlined ideas he was floating, including raising tariffs on adversaries and using potentially some of those offsets to lower income taxes on Americans. Congresswoman Marjorie Taylor Greene of Georgia actually told me that Trump suggested perhaps no income tax, although others like Nicole Malliotakis, the congresswoman from New York, suggested she didn't think that was necessarily a serious outline of policy. But the general theme seems to be lower taxes, try to boost the economy, and perhaps less regulation would be an attempt at doing so too.
Kayleigh, thank you so very much. And Marie, I know over in Italy as well, President Biden is speaking to a very different audience. What can we expect from the rest of the day as he addresses the matter of Ukraine?
Well, he's going to be standing alongside Volodymyr Zelensky, and there's two really standout themes happening at this G7. One, in a big win for the United States that has been pressuring the European Union and other allies to get on board with this idea of tapping into the future value, the accrued interest payments of these securities that are frozen, these immobilized Russian frozen assets, $280 billion worth, Shanalia, basically live within the European Union. The United States was able to get a plan in place. So before the end of the year is up, $50 billion, basically alone, the U.S. is going to likely fork over the most of that, will be given to Ukraine. So this was a big win for the Biden administration. They used a lot of political capital in Europe to get it done, and they were able to seal it here on the leaders level at the G7. And then the other big thing, of course, is the fact that while, yes, you have the G7 leaders, President of the United States talking about that they are the most unified in modern times that we've seen, many of these leaders, barring Giorgia Meloni, the Italian prime minister, are struggling for their political survival at home. There's a U.S. election that's basically a coin toss in November. Emmanuel Macron had to give a speech this week to quell these questions about whether or not he would resign after the snap elections he called. Prime Minister Rishi Sunak shows up to Puglia in southern Italy, potentially out of a job in 3 weeks' time, and the list goes on. So while they're trying to show this united front around the G7 leaders' table, clearly they are dealing with a lot of mounting troubles domestically at home.
Certainly, and thank you for addressing what's going on across the pond there. But Anne-Marie, what is Biden's message as well to global leaders at this point in time? You addressed kind of the issue here of the U.S. election as well. There's been a lot of noise in the U.S. as well as the G7 is going on.
Well, this is President Biden's fourth G7, and when he went to this first one in Cornwall, the United Kingdom, his message was America is back. Now, this G7 potentially could be his last. It is the final G7 before the November election. And President Biden is still trying to say that regardless of whether or not where U.S. policy goes in the future, the United States stands forthright supporting Ukraine. That is why they wanted to get this deal done on tapping Russian assets done before the U.S. election. I think that's what many allies of the United States also wanted to see happen as well, because regardless of who comes into the White House next year, Ukraine would have access to that $50 billion of a loan. The second thing also we will see the president do is he's going to be signing a bilateral security agreement with Ukraine. This is to do with deeper cooperation between the United States and Ukraine. Now, it's not a treaty, doesn't have to go through Congress, so a future U.S. president could pull the U.S. out of it, but it is a sign that the United States, for the future, is going to be standing and supporting Ukraine.
Both of you, thank you so much for all of your work out in the field. That is Bloomberg's Kayleigh Lyons in D.C. and Anne-Marie Hordern in Italy, of course, as campaign season starts to heat up. Now, coming up, we're going to talk about Tesla jumping today as shareholders may approve a $56 billion pay package for Elon Musk. That's all up next. Stick with us for it. This is Bloomberg.
In tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. The top names in business are on Bloomberg.
They're kind of predicting a soft landing.
So the Fed bids for 30-year bonds, totaling $711.6 million.
That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
It's time now for the stock of the hour, shares of Tesla riding higher as shareholders are preparing to finish voting on a $56 billion pay package for CEO Elon Musk. Musk posted on X saying shareholders voted in favor of two resolutions, his compensation package and moving Tesla's headquarters to Texas. Bloomberg's Max Chafkin joins us now, and he knows all about the Musk world. If you think about this vote, why does it matter the most? There were some massive investors, of course, that voted against it. He got a lot of support as well, clearly.
Yeah, so the backdrop here is the court decision in Delaware that essentially invalidated this enormous pay package, $56 billion. Delaware judge said, hey, this was illegal. Tesla's board was essentially controlled by Elon Musk, and it was too much money. It was egregious. Now, this vote is part of Tesla's effort essentially to appeal that ruling. So if they win, as we expect them to do based on Musk's tweet, which he included some vote totals, it really looks like they are cruising to victory, at least based on the statements coming from Tesla right now. If he wins, it doesn't mean anything really in the short term. What it means is that Tesla will have additional ammunition going into this appeal. That said, this is a novel legal strategy, not clear that it's going to work. We're talking about probably a lengthy dispute in courts, in probably more than one court, especially with this potential move to Texas, that will be needed to resolve this. So this is going to be going on for a long time.
Bring us behind the scenes here a little bit, because what did it take to get Musk to bring investors beyond the finish line?
So the interesting thing here with Elon Musk is, as people know, he's very popular. He's a popular guy, and Tesla, for a big company, is owned by a lot of retail shareholders, right? It has somewhat meme stocky vibes. And as a result, like traditionally, right, the institutional shareholders play a huge role in this. Here you had retail shareholders playing a bigger role than normal. And what we saw is a campaign, a very aggressive marketing campaign by Elon Musk and some Elon Musk allies to essentially get out the vote, to get as many retail shareholders as possible to vote. There was also a behind-the-scenes campaign to talk to institutional shareholders, bring them around. We've seen some kind of hints of where they fell. I'd say retail shareholders, by and large, were for this because they love Elon Musk. Institutional shareholders,
US Treasury Secretary Yellen says strong US growth is lifting global growth. The labor market remains strong.
Bailey Gifford, Kathy Wood, T. Rowe Price, a bunch of other shareholders voting for. So there's a divide there.
It's always funny when you do see an investor voting against a pay package but staying invested in the stock. Clearly, they still like the stock.
Right. Well, that's what's interesting, right? There are a lot of people who are very critical of this pay package because in a lot of ways it seems crazy. He's getting paid $56 billion after a year in which he's kind of mired in scandals. He's starting other companies. There are a lot of reasons to argue against this. That said, if you are a Tesla investor, especially a Tesla investor at this valuation, which is very high relative to other car companies, you're essentially already said, I believe in Elon Musk. So that's one of the reasons, right, why we were all kind of expecting this to pass.
Max, what about the rest of the Elon Musk world right now? This is all happening against a backdrop in which he's facing multiple lawsuits, isn't it?
Many, many lawsuits across many different companies, the latest being this sexual harassment lawsuit filed by some SpaceX employees. That's his rocket company. But of course, you have class action lawsuits. You have lawsuits involving severance to former employees of X, the social network. This is kind of who Elon Musk is. I mean, for better or worse.
In 10 minutes time now, at the top of the hour, the US is due to sell $22 billion in a 30-year bond sale. Prior bid to cover was 2.41. The prior high yield was 4.635%. A JP Morgan strategist notes the decline in yields and an unappealing curve valuation, as well as still elevated uncertainty around an additional concession needed to absorb easily. Also making note of the latest CFTC position, short 331,000 Ultra Bond futures, are possible sources of covering demand at auction.
Now coming up, we're going to talk about the private credit world joining the bond issuance rush. More on this story in today's Wall Street Beat. This is Bloomberg.
fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. The UK decides. On July 4th, amid debates about tax policy, border security, foreign policy, and more, voters head to the polls to choose the next leader. Bloomberg has full coverage leading up to the election and will bring you the results after all the votes are tallied. Tune in for continuing coverage on Bloomberg Television. Context changes everything.
Morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
U.S. Treasury Secretary Yellen says, I expect to see further progress lowering inflation.
Markets, and I'm Shonali Bassick, and it's time now for my favorite beat, the Wall Street Beat. Today, we're looking at how a group of private credit funds have found a cheap place to raise money, and that is in more public bond markets. Very roundabout. We're going to be joined now by Bloomberg's John Sage, who is very close to this BDC market, business development companies. Why are they now tapping unsecured bond markets in order to raise cash when they have a $500 billion in dry powder sitting around?
Sure, and you mentioned it well. It is kind of a about turn where private credit is going back into maybe its fiercest competitor, the syndicated market, where they're doing this to cut the cost of capital for their liabilities because they are getting so much pressure from the broadly syndicated market where you're seeing the spreads that they're issuing their debt start to come down, and they're also getting a ton of pressure from their private equity partners saying, hey, if you don't bring down the cost of our loans, we're going to go to the broadly syndicated market and take you out. So they're saying, to offer lower pricing, we need to go find cheaper liabilities, and that's what they've been doing for the past year or so.
Now, it's interesting because you're seeing private credit really diversify in a lot of ways. There's a story today as well about Ares looking at a real estate company. We saw Blue Owl do something similar. What's this Ares potential play here?
Sure, I think it's Ares listening to what Blackstone was saying about, hey, come fast. The real estate market is bottoming. So they must have clearly heard that, and they're making a big jump or potential big jump into the space by looking at areas that may be bottoming but also still have some resilience. So infrastructure is a great example.
In 5 minutes time now at the top of the hour, the US is due to sell $22 billion in 30-year bonds. The prior bid to cover was 2.41. The prior high yield was 4.635%.
And Eldridge Industries here. He's starting a new firm called Eldridge. Why is this a big deal in the world of private credit?
Sure. You can kind of see him following what almost every private credit player has been doing, is taking insurance, stable capital, and supercharging it into an investment vehicle where it gives him so much money to go and play. So he now potentially could have billions to go and play with.
He certainly can. We've reported that the asset manager is starting with $65 billion in funds under management, but of course, it could be much, much more. John, thank you so much for your time. That is John Sage of Bloomberg News, of course, on a very, very, very active private credit market. But let's go back to the public markets here for a minute because I want to show you where stocks are headed because we have had green on the screen for the S&P 500 before, but now we are still in the red. It's down more than 0.1% off of session lows, but lower nonetheless. The NASDAQ 100 now firmly in the green, 0.2% higher, and that 2-year yield below 4.70. The 10-year comfortably standing at 4.25 after that PPI and jobless data just this morning. Busy day in markets. I'm Shonali Bassick, and that does it for Bloomberg Markets today. Of course, stick with us through Balance of Power and through the close. Of course, it's been a choppy day of trading. This is Bloomberg.
names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment, we used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes
Shortly
everything.
expecting results of the 30-year bond sale. The Treasury's pre-sale when issued yield is due at the top of the hour.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The split screen is in effect. Welcome to the fastest show in politics as President Biden and Donald Trump schedule competing news conferences for this hour. I'm Joe Matthew in Washington. We're going to have a live update coming up from Kayleigh Lyons, who is following Donald Trump today in Washington, and from Bloomberg's Anne-Marie Hordern, who is traveling with the president in Italy. All this on the day the Supreme Court
Pre-sale when issued yield 4.418% ahead of the auction. That's 30-year pre-sale when issued yield 4.418%.
Right now in the markets, as always, with Charlie Pellet in New York. Hey, Charlie.
Hi, thank you very much, Joe Matthew. Indeed, lots of moving parts in Washington, certainly as well. In U.S. markets today, we are looking at a down day for the most part for the U.S. stock market. The lone bright spot right now is the NASDAQ 100 index, up 0.3%. U.S. stocks, though, for the most part, lower across the board. Right now, we've got NASDAQ. We'll call that unchanged on the day. The S&P down 7 now, drop there of 0.1%. The Dow tumbling 203 points, a drop there of 0.5%. S&P, by the way, retreating from yesterday's record. Treasury yields fell as a cool down in another key measure of inflation this morning. Reinforced the case for the Fed to cut rates this year. 10-year, 4.24%. The 2-year yield, 4.68%. Gold down 1.1%. West Texas Intermediate crude up 0.1%, 78.57 a barrel. Keeping an eye on Tesla shares, up now by 3.5%. Elon Musk says shareholders have voted by wide margins in favor of reapproving his compensation package. Also, Ford shares, keeping an eye on Ford, down right now by 1.2%. Ford will sell its lineup of EVs through all 2,800 of its American dealers in a bid to boost sales of battery-powered models now being shunned by mainstream buyers. Again, Ford lower now by 1.3%. Tesla up 3.5%. Again, recapping, NASDAQ just turning higher now, up by 5 points. S&P down 5, drop there of 0.1%. Certainly lots going on in Washington. Back we go. Balance of Power continues. Once again, your hosts, Joe Matthew and Kayleigh Lyons.
From Washington to Italy, Charlie, you said it. Thank you and welcome to the Thursday edition of Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington, where Donald Trump is addressing Republican senators right now.
2.49, high yield 4.403%, 4.403%.
For the first time since
So the US sells $22 billion in 30-year bonds and awards 8.49% of bids at high. Primary dealers take 13.7%, primary direct 17.8%, and indirect 68.5%.
The literal split screen for us here today on the campaign trail. We want to start in Italy right now at the G7 with Bloomberg's Anne-Marie Hordern, who has been traveling with the president, and it's great to have you with us, Anne-Marie. Important news today on a development that will bring more funding, some $50 billion in help for Ukraine through a new loan syndicate. How's this all going to work?
Yeah, that's right, Joe. The United States has been pushing to try to get this done for months, and finally they were able to get it over the finish line at this G7 Leaders Summit. They're basically front-loading these interest payments that have been accruing and will in the future accrue for these Russian frozen assets, $280 billion worth that are sitting in Europe. Now, the Europeans were game to basically send what was collecting interest this year, say $3 to $6 billion. But the United States didn't think that was enough. So what they're doing is they're taking the future payments up front and sending this loan to Ukraine. Now, some technical details still need to be worked out after the G7, but this is certainly a political win for the administration and also for Ukraine. When I last spoke to the Ukrainian foreign minister in Davos, he said 2024, the main goal is the financial help Ukraine needs and tapping the value of those Russian assets. He said the political will needs to be there. And once the politicians make a decision, then the lawyers and the bankers can get to work. So when President Biden steps up today, Volodymyr Zelensky, he's going to want to tout this deal as well as the bilateral security agreement that the two leaders will sign.
Well, I'm glad you mentioned that. We'll be hearing from the president, if all things stay on time, from both presidents in about 45 minutes. Anne-Marie, you're going to have domestic reporters there from the U.S., from the White House press corps, who want to ask about a Supreme Court ruling today on mifepristone, who want to ask Joe Biden about a potential ceasefire in Israel. The message from the White House today, though, the administration is squarely about Ukraine. What will be Joe Biden's message on some of these other issues from overseas?
Well, he's certainly going to want to talk about Ukraine because he's going to be standing next to Ukrainian leader Volodymyr Zelensky. And the United States has been talking about the fact that they think the G7 is now more unified than ever in modern times. It's interesting you would say that given the fact that most of these leaders besides Giorgia Meloni are coming here with immense amount of political pressure at home. Rishi Sunak, Emmanuel Macron, Olaf Scholz, just to name a few. When it comes to the mifepristone ruling on the Supreme Court, we did get a statement from the president talking about the fact, really pivoting the fact that they're so happy that the Supreme Court upheld women's access to mifepristone. But Joe, they squarely are pointing this to November, saying that more needs to be done to protect women's health care. And we're going to hear probably the same message from the president again this evening. I'm sure he's going to be asked that question when he's faced with a number of domestic reporters in the room.
That's got to be true. Anne-Marie Horduran among them. Great to see you, Anne-Marie. Thank you for joining us from Bari, Italy, as she follows the president at this important summit. Bloomberg's Kayleigh Lyons, meantime, is making her way around the Capitol here following Donald Trump at a series of events that included a speech to the Business Roundtable a short time ago, 90 CEOs in the rooms with some pretty bold names, Jamie Dimon, Tim Cook among them. Kayleigh, what was the message from the former president?
Well, one CEO leaving this meeting, Joe, as they're all getting just shuffled into their SUVs and not really feeling open to speaking with press, just described this meeting as informative. He said it was about 45 minutes of Donald Trump addressing those in the room. But of course, we do know that there were some heavy hitters there, including the CEOs of a number of the largest banks in the country, technology executives as well. And the message is likely to be pretty similar to what Donald Trump was preaching in his meeting with House Republicans earlier today when he was talking
So Treasury
about what
5-year and 7-year yields fall 10 basis points on the day.
Economy. In large part, that seems to be deregulating it in terms of industries like energy, and then also maybe higher tariffs on adversaries in particular, and potentially using the proceeds from those higher tariffs to lower income taxes for Americans. I spoke with Congresswoman Marjorie Taylor Greene of Georgia about what exactly Trump said about tariffs and taxes and how they could interplay together, and this is what she told me.
President Trump said he's floating an idea, and I think it's a wonderful idea. You know, our tax code is expiring this year, and depending on which party controls the House of Representatives will determine Americans and how much they pay in taxes. President Trump said, this is an idea, but I'd love to raise tariffs, and then he said maybe even no income taxes for Americans. Everyone was clapping in the room. I think that's a fantastic idea, and he even later joked and he said, if you guys are going to go vote on something today, vote to lower taxes on Americans.
Now, that was the take from Congresswoman Marjorie Taylor Greene. I did speak as well with Republican Congresswoman Nicole Malliotakis of New York, who seemed to have a bit of a different take on how exactly Trump presented that idea in the room. She said that he didn't think he was, he said he wasn't presenting that as serious policy that he was outlining, but he did speak about the prospect of higher tariffs on adversaries and potentially that being used as a pay for lower taxes. It's just not clear that he actually said that it would mean no income tax at all, Joe.
Well, this is really interesting, Kaylee. We sat here yesterday, you and I, with Kevin Brady, the former chair of the House Ways and Means Committee, now former congressman, who is leaning into this with the group that he's working for now to try to start the argument now about making the Trump tax cuts permanent. They're not waiting to find out who wins this election. What did the folks in the room have to say, if anything, about that? Because they also heard from Jeff Zients, the White House Chief of Staff, today, speaking on behalf of Joe Biden.
Yeah, interesting, of course, that Joe Biden is preoccupied in Italy, where Henry Hordern was joining from just moments ago. Therefore, his chief of staff had to speak on his behalf. But it is, in some sense, a bit of conflicting messaging, because obviously the corporate tax cuts that were put into place under Donald Trump in 2017 aren't necessarily supported at large by Democrats, who think those lower taxes just resulted in higher profits being kept by those companies, whereas Donald Trump is really pitching easier regulation, lower taxes across the board. That seems to be the idea. On the idea of 2017 tax cuts, though, and potentially those being reinstated, when I was speaking with Congresswoman Malliotakis earlier, she said he didn't really talk about that specifically, more so just building upon the success he had in terms of lowering taxes in his first administration. It seems as though this is a conversation that has gotten started, but likely still needs to have a lot of details hammered out. It seemed by and large the meetings that Trump had this morning, at least with the House, were much more overarching than they were getting into the very specific nitty-gritty of policy. And of course, getting any of this policy actually implemented, Joe, will likely require Republicans keeping a hold of the House of Representatives, which a lot of people were talking a big game about leaving the meeting this morning, but we know is far from guaranteed.
That's the sticky part, isn't it? Kaylee, great to see you. Thanks so much for being with us in your travels around the District of Columbia today, from the wharf, then back to Capitol Hill, where Donald Trump
Biden says, I don't expect a ceasefire in the Middle East soon.
And we'll have more from the former president later this hour. He's at the NRSC, the National Republican Senatorial Campaign Committee, and will hold a news conference, or at least deliver remarks, to be more exact, from there. About 20 minutes from now is the schedule. We'll see how on time things stay, along with Joe Biden as well. 15 minutes later, set to hold forth in his news conference from the G7. The idea of extending or making permanent, though, the Trump tax cuts from 2017 is something that's already being debated, as we've made clear here. And Maya McGinnis has some thoughts about this. The president of the Committee for a Responsible Federal Budget, the group has been crunching numbers on this to understand better what the impact would be. Kaylee's talking about offsets. Let's talk to Maya about this. It's great to see you, as always, Maya, on Bloomberg TV and radio. Let's say they get this done. Donald Trump wins the presidency and he manages to get this through Congress, making permanent the 2017 tax cuts. Would do what to our deficit?
Yeah, so it would absolutely explode an already untenable fiscal situation. So just to take stock of where we are already on track to borrow another $20 trillion over the next decade. We are going to be hitting record levels of debt as a share of the economy in just a few years. Interest payments are growing faster than anything in the budget. They are the single largest item in the budget. The fiscal situation is really bad. Part of what got there, obviously some of what we got there was emergencies like COVID, where we should have borrowed. But a big component was that a lot of policies have not been offset in recent years. One of those big ones was the Trump tax cuts. They added $2 trillion to the debt. Many members of Congress were saying, we made a mistake. We should have, and these are the Republicans who supported that, we should have also cut spending. We didn't do that in order to keep this from adding to the debt. But now, if you are talking about really extending these tax cuts, again, the portions that are expiring, we are talking about even larger a price tag, upwards of $4 trillion. And then there are other things they are talking about, including some of the business tax cuts that have expired, could bring you up to $5 trillion. There is absolutely no space in our very dangerous fiscal situation right now to be talking about adding trillions more. And so You just can't talk about this without thinking about how you're going to offset those costs and that lost revenue.
Well, this is really interesting, and this is something that people need to hear, because the argument, Maya, is the tax cuts aren't the problem, the spending is. And we simply need to rein in spending or somehow refigure entitlements like Social Security and Medicare to get through this. But you and I both know that's not about to happen, and neither of the men who are on the verge of becoming president, whether it's Donald Trump or Joe Biden, say they're going to touch the entitlements.
I mean, that's right. I have no problem with the argument. One can be for big government or small government, and they can be fiscally responsible or fiscally reckless, either way. But it is absolutely correct to say that our spending is growing at a massive clip. We're going to have huge amounts of growth in healthcare, retirement, and interest over the coming decades. Defense spending is also likely to increase because there are many more threats around the world. The problem is the people making those arguments then turn around and vote for spending increases. And if you look at what happened under President Trump's tenure, he cut taxes, but he raised spending massively every time they increased the debt ceiling. Whereas most recently, the debt ceiling had a package that helped to reduce borrowing. Every time under President Trump, they actually added more spending to the overall budget and more borrowing. So you can't talk about the importance of cutting spending while you're casting votes to increase spending, just like most of the people who've taken a no new tax pledge also at the same time have voted to increase spending. About 90% of them have. So the hypocrisy in budget, run large, run on all sides, but it's really what's gotten us into this mess of huge, huge mountains of debt and more to come if we don't make changes.
Well, how important is this to the people who are in the room at the Business Roundtable today, Maya? You interact with a lot of them. You know, you don't hear a lot about deficits and debt in a campaign cycle when everybody's trying to grab the brass ring here. And you know there's going to be a big drive to increase Pentagon spending if there's another Trump presidency. And that'll probably happen under a Biden second term if there is one here. So what do the executives in that room think about this? Are they as worried as you are?
So my experience with the business leaders is they are very worried about the national debt, but many of them will put having tax cuts over the concerns about the debt. So we've seen that, in the past, CEOs were some of the best advocates for getting our fiscal situation under
Shortly
control.
expecting the results of the Fed reverse repo operation.
Washington was unable to implement those changes. And so they've turned their attention more towards the tax regime, the regulatory regime. I think they would support, and I'm generalizing, they all have different points of view. Many of them would support those spending cuts that go along with tax cuts. But again, as we've just said, there seems to be no political appetite for that. And the problem is we now have two people running for president competing on giveaways. Who can give more in tax cuts and to which group, and who can increase spending more, and who can protect Social Security and Medicare, which, by the way, are heading towards insolvency. Protecting them means across the board cuts in those programs for recipients and providers. That is a terrible promise to today's seniors and people who will depend on the programs. And yet that's what our politicians are promising. There's very little talk of fiscal responsibility. And I'm sure any CEO who somebody asked, do you think the debt should be lower than it is? They would say yes, because there's no way you can look at this trajectory and think that things are okay. We are in grave, grave danger of weakening our economy and our national security if we don't find a way to bring our borrowing trajectory down.
We're speaking some hard truths here with Maya McGinnis from the Committee for a Responsible Federal Budget. Spent the day yesterday, Maya, talking about inflation.
77 counterparties take $429.864 billion at the Fed reverse repo operation.
Expected, still rising. However, depending on the metric you look at here, the Federal Reserve is higher for longer. What is the impact of ballooning deficits on this very thing, the issue that's driving voters in November, the issue of inflation?
That's right. So inflation is having a huge impact on how people feel about the economy. Clearly, we got to this inflationary moment for a number of factors: supply chains, oil, and one of those factors was excessive fiscal stimulus. At the end of COVID, we put more money in the economy than we should have, and that kicked off inflation. It's turned out that it's been difficult to get control of. The problem that politicians, all of whom want to help alleviate inflation, that they don't recognize is that all the borrowing they're engaging in now makes inflation worse, not better. If you want to help inflation, you need to bring your borrowing down so you are not overstimulating the economy. And you don't hear a lot of talk connecting those two. Because again, right now, this is a political moment of promises of things to give away. We are so far removed from talking about hard truths in the budget. We don't even pass budgets. So we don't even think about what these trade-offs are. But it's really politically dangerous. There's so much pandering and demagoguing, and no one out there saying, here's what we've got to do. We've got to reduce our spending. We've got to raise our revenues. We have to reform our entitlements. Those are all critical if we are going to get out from under this mountain of debt.
Well, that's why we speak the hard truths here on Bloomberg TV and radio. Maybe they should have had Maya in the room today. How would that go at the Business Roundtable? Maya McGinnis, always a pleasure. I'm Joe Matthew in Washington. This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at noon Eastern Time. Bloomberg Equality, celebrating inclusion this Pride Month. The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock prices, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. But I think there are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect. My view is whatever the world is pricing in for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. Producer prices surprised with the biggest decline since October. U.S. stocks trading flat right now. Treasury yields fall as data keeps Fed bets alive. S&P down 0.5 point, virtually flat on the day, retreating from a record. Dow Industrials down 141 now, decline there of 0.4%. NASDAQ, though, building on yesterday's gains. Tech keeps on going. We've got NASDAQ up by another 0.1%. NASDAQ 100 index up by 0.4%. 10-year yield 4.23%, with a 2-year that's now yielding 4.67%. Spot gold is right now trading down 0.9%. West Texas Intermediate crude oil up 0.5%. China's car makers outsold their American counterparts for the first time ever last year, a testament to the shifting power dynamics in the global auto market. That, according to researcher Jato Dynamics. Today, we're looking at Ford shares. They are lower by 1%. General Motors down 2.2%, and Stellantis, it is down by 3.2%. Again, recapping, stocks, little change now with the S&P down by 0.5 point. Balance of power continues now. Back we go to Washington. And once again, your host, here he is on a very busy day, Joe Matthew.
Ah, yes, they all are, Charlie. That's why we're here on Bloomberg TV and radio. It's great to see you. Thank you for joining us on the fastest show in politics. As we wait to hear from the former president and the current president, both set to speak within the next hour here, as we'll bring you remarks from Joe Biden at the G7 in Italy and from former President Donald Trump here in Washington today, making his big return to the U.S. Capitol since the January 6th attack on the Capitol, meeting with not only Republican lawmakers but business leaders. As we heard from Kayleigh Lyons a short time ago, the Business Roundtable here in Washington, it was a who's who of corporate America as Donald Trump talked about his economic agenda, the idea of tariffs, and of course, unifying the party today in Washington. That's what he's up to right now, talking to Republican senators at the NRSC. That's going to be the venue for his remarks when he speaks a bit later on this hour. Everybody showed up. Mitch McConnell, as we told you, in the room. Even Mitt Romney in the room after his flight got canceled. He's there for Donald Trump. Senator Bill Cassidy showing up there. Dan Newhouse on the other side of the hill showing up. Interesting. As we assemble our panel, Rick Davis is with us, Bloomberg Politics contributor, of course, Republican strategist, along with Democratic strategist Brad Howard from Corcoran Street. Rick, you see Mitch McConnell, Mitt Romney, both in the room. And it brings us back to the idea that the transformation is complete here in Washington. Donald Trump in control of the Republican Party. And this is the biggest sign we've seen yet, isn't it?
Yeah, as you described, unity is the theme of the day. That means everybody has to show up. Too bad for Mitt and his canceled flight. But, look, it's going to be interesting because even though all these people have now served with Donald Trump when he was president, and most of them were in the Senate at the time, they're going to see, slightly different version of him. Nobody's been really paying that much attention to him. There's been a busy legislative year. And so this is the day where the Republicans will, basically genuflect and line up behind Donald Trump. And a lot of them who are on the ballot this year, all the House members and some of the Senate members, are going to be distinctly influenced by his campaigns in their states. And so this is really an important time. And we'll see just whether or not Donald Trump uses it to talk about grievances or talk about unity.
That's right. We were talking to Maya McGinnis a short time ago, Brad, about Donald Trump's address to the Business Roundtable. We should note that was not a Donald Trump campaign event. Jeff Zients, the White House chief of staff, spoke on behalf of Joe Biden to that same group of people as the president is traveling today. But the idea of making permanent the Trump tax cuts, as was discussed in that room, the idea of raising tariffs, both of which could be a major challenge to our economy, as Maya just mentioned, ballooning deficits and potentially adding to inflation. Do the CEOs in that room care?
I would hope so, because I think, as Maya would point out, an out-of-control skyrocketing national debt leads to a more unstable economy. And, when you have a situation of rising debts, she pointed out the largest expense of the federal government right now is interest payments on the debt. That's not a good long-term fiscal sustainable path. I think every business will tell you when your debt grows to that extent, it's a precarious position for a business and it's a precarious position for a government. And look, Maya McGinnis, I was a senior staffer to House Democrats when she was in the room warning them about out of control spending and what they were proposing. She is a consistent voice on these concerns, and a powerful one at that. And thankfully, we have someone like that out there raising these concerns. There was even a moment where we had the opportunity this past Congress to implement a bipartisan fiscal commission to look at the debt as a whole and not just these one-offs. Because we have shown if you leave it to politicians, they'll take the easy road every time and give out free stuff rather than make the hard decisions of bringing down the government. But I think Democrats are going to welcome this debate over taxes. We believe that the Trump tax plan benefited the wealthy and the elite, and not the average working voter or the average working American. And so I think Democrats are excited about this debate over taxes, because polling shows that Americans think that the wealthy in this country are not paying their fair share, and the Trump tax cuts just rewarded that. So we call it the Trump tax scheme for a reason. And as you saw, it led to higher deficits and higher national debt, just all around bad news for the economy.
Well, it's interesting, Rick. Maya went further to say it's both parties here promising giveaways and nobody promising to restrain spending, certainly not to reform entitlements. When do we care about debt and deficits again? After the election?
Yeah, where are those deficit hawks that we used to see roaming the Senate and the House of Representatives, reminding that this is, bad for our long-term health of the economy? And look, I mean, it is a political issue. If you poll it, voters care. They know what it's like to go into too much debt and get pinched. And so it does translate into issues that voters care a lot about. The question is, who's on the other side? As Maya points out, when you got profligate spending in both Republican and Democratic administrations, it doesn't really create a contrast. And so maybe by 2028, we'll see the deficit debate, because it's only going to get worse based on what these two candidates are saying they're going to do: cutting taxes, raising tariffs. Tariffs are nothing but a tax on the American people. I don't know how you pay for tax cuts by raising tariffs when you're just raising the price of goods that people have to buy. I think the concept here is to get rid of inflation, not make it worse. And yet I don't see that being translated into political speak at all.
I would like to fully agree with everything Rick just said.
Yeah, well, here we did it again, with Republicans and Democrats agreeing on balance of power. No one's going to watch this thing if you guys keep at it.
Card.
That's right. You're both fired. Now, look at the statement from Nancy Pelosi today, Brad. Thinking about Donald Trump's return to the Capitol for the first time since January 6th. Quote, today, the instigator of an insurrection is returning to the scene of the crime. The January 6th was a crime against the Capitol that saw Nazi and Confederate flags flying under the dome that Lincoln built. It was a crime, she said, against the Constitution. As we now bring you a live view of the podium at the NRSC, from which Donald Trump will be addressing the nation here any time now. He was scheduled to begin at this very moment. How important, Brad, will it be for Democrats to remind people of January 6th in what's going to be another day here in Washington that attempts to normalize what happened?
Well, look, I was chief of staff to Congresswoman Stephanie Murphy, who served on the select committee to investigate the attack on the Capitol. I don't think it's important to remind Americans just ahead of an election. I think it's important to remind Americans in perpetuity of what happened that day so that we don't ever have it happen again. The Lincoln, when the Capitol dome was being built, it wasn't just a matter of we need to finish this to have as capital. It was that when no one thought the country would carry on, that we were so divided that we would forever be two different nations. He thought it was important for the work on the dome of the Capitol to continue so that Americans felt that there was a future, that there was a country, and he thought the work being done on the Capitol means that the Union would hold. And so I think Pelosi is right. He did instigate an insurrection here. Not only did they fly flags of failed nations on the Capitol grounds, that they defecated on it, they vandalized it, they broke stuff, they stole documents and computers. They essentially raided the Capitol building. And I think it's critical to when folks look back on what happened that day, that they realize how wrong that was. And, yes, it's a good political maneuver to remind folks that Trump ultimately led that. But we got to reflect on what it means as Americans, that a good chunk of people that believe they're patriotic Americans did that. And I think that's the psychological analyzation that we've got to work together to analyze and to prevent from happening again, in that your patriotism is not stewed in violence, that your patriotism is stewed in optimism and hope for the future.
Well, I appreciate that, Brad. What's going through your mind right now, Rick? Because we know how you feel about the events of January 6th. We're going to hear from Donald Trump here in a moment after the Republican caucus in the House sang happy birthday to him. He got a standing ovation from Republicans in every room he walked into today. They presented him with the game-winning ball from the congressional baseball game last evening. There was a time when we didn't think Donald Trump would ever be allowed back in Washington. How do you rationalize this evolution from January 6th to today?
Yeah, I mean, it's fueled in amnesia by party leaders. We've, talked a lot over the years about how Kevin McCarthy swung the, screen door wide open for Donald Trump to walk back in after being pilloried by Republican leadership after January 6th. And look at how it turned out for Kevin McCarthy. You can't feed this beast enough to quench its hunger for power. And I think that today we're, sort of getting back on that slippery slope where we're celebrating party leadership that puts their own power and interests ahead of the nation's interests. And I think that's disappointing. Again, I'm an optimist. I see this as a momentary crisis in confidence in our leadership. And we'll see what happens after that. But we got an election to run, and this is all part of the choreography of that. And everything is being set aside today. Differences in policy, differences in politics, differences in character to basically focus singularly on November's election.
Well, this is an important moment. Our reporters who are following Donald Trump letting us know that senators are leaving without saying much. A lot of rushing senators who don't have a lot of time to answer questions from reporters. And if you're with us on Bloomberg TV, you can see some of those senators, including Rick Scott, said to be potentially considered here as a member of a Trump administration. He's also running for the leadership post in the Senate to replace Mitch McConnell. Mark Wayne Mullen, an ally of Donald Trump, standing by as well. So I think we can assume the optics here, Brad, will not only include the 4 American flags behind the podium, but lawmakers who are going to stand with Donald Trump in a show of unity today. How will this exercise play nationally?
Well, I mean, certainly you're in that moment of where the primary is done. Donald Trump still has a problem with GOP primary voters. I think even when Nikki Haley's not running, she's still getting 15 to 20% in some of these primaries. And so he has a problem with the kind of moderate, what I call the country club Republican, Chamber of Commerce Republican crowd. He hasn't won them over yet. And so he has some work to do, and this is certainly going to help in that effort. I anticipate at the end of the day, they will come around and he'll rally his base. And I think that's why you're seeing his poll numbers go up slightly, is because he's in the rallying the base effect right now. Democrats, we have a lot of work to do on our end too, particularly when it relates to the Israel-Palestinian conflict and that the impact that's having on younger voters and black voters in particular. We're monitoring and working to win the votes over as well. I think they are a group of people that want folks to earn their support and not just expect it, and that's what President Biden is doing. I think you saw big Juneteenth celebration at the White House on Monday. That shows exactly how he's trying to do a lot of that. And so, you're going to see a moment here where both camps are trying to rally their base around their candidate. They've got to do that ahead of the conventions. And then when you hit conventions, you 180 to the moderates, the very, very tiny slither, 6% of 6 swing states that they've got to win in order to win the election. And so I think you'll see a pivot in the middle. And I hope to start seeing some forward-looking plans and proposals from both candidates when we hit that moment.
Other members now of the Senate have joined the group at the podium, including John Barrasso. Senate leadership falling in behind Donald Trump here, Rick Davis. This is the Senate, of course, that you spent many years working in with John McCain, and many of these same lawmakers coming around to support Donald Trump today. One of them is not Rand Paul, who said to Bloomberg News as he walked out of the former president's address at the NRSC to Republican senators, "There are still libertarian-leaning folks like myself who wants some more assurances, saying that he is still undecided on whether to support Donald Trump. He would be the outlier in this Senate, Rick. Correct?
Yeah, Rand Paul is the most unhappy man in America all the time. He's never in agreement with his caucus and rarely in agreement with anybody else in the Senate. But, you know, this does harken back to a moment in 2008 when John McCain got the nomination. He wasn't, you know, the enthusiastic first choice in the United States Senate. His colleagues had a strained relationship with him, Mitch McConnell especially. Had always a tumultuous relationship with John on issues of campaign finance reform and things like that. But they all gather around to, you know, give praise to the new leader of the party. And it does have a impact on voters. You know, voters see this as a positive. If there was any questions amongst Donald Trump's base as to whether or not he could govern, you know, with a majority in the Congress or with his own party in Congress, I think this is part of the messaging that's going to go out. Yes, they will do his bidding. They will be his partner. They will take up his agenda, and they'll try and get it through. So this is as much a message to Congress's voters as it is to Donald Trump's voters. But the idea is close ranks. Only together can we win. And I think that's more truth than not. And that's what we're seeing play out today.
Rick Scott, John Barrasso, Mark Wayne Mullen. I see Josh Hawley, other members. It looks like almost half the Senate is now behind the podium waiting for Donald Trump after his meeting with Republican senators. That followed a meeting with Republican House members, and today also included Donald Trump's address to the Business Roundtable here in Washington, D.C. Brad Howard, recalling your experiences not only on January 6th, but your experience working for former Congresswoman Stephanie Murphy on the January 6th committee. What do these optics mean to you as you watch these senators gather to hear these remarks?
I mean, it's mixed emotions. You expect it as the head of the presumptive nominee of one major political party coming to the Hill. That's certainly something that a lot of them do. Probably every one of them have done. But it also hurts to see him glorified in such a way when I had so many friends who were still struggling with some elements of PTSD from that day, when you saw how embarrassing that moment was on the world stage to see Americans believing through what they believe is patriotism destroying the world symbol for democracy. I think that really kind of hurts a little bit. I think anyone who was affected that day, either emotionally or professionally, this is a hard scene to look at. I mean, you expected, you've come to realize this was going to happen. It'll be even harder if he's sworn in on those steps that same day next year. So, I think it's just, I think would have appreciated a acknowledgement and a reminder, or excuse me, an acknowledgement of what happened that day from someone on the Republican side of the aisle, because they were just as affected as we were, just as scared for their lives, I think, as a lot of my friends were on the Democratic side. That I think as we move forward, it's kind of hard to heal from these moments when you have two different realities, interpretations of that day. One, which is accurate because we all saw it with our own eyes that day, and two, the other one, which has been spun to be some kind of tame event that it wasn't. And so, there's still folks that are healing, still folks that have promise and hope in America. And we'll move through these moments just like we have all the others that have threatened American democracy.
More senators are making their way to the podium where Donald Trump will be speaking any moment now. We'll bring you his remarks live here on Bloomberg TV and radio. John Cornyn, Senator Cornyn, who, of course, is running for the leadership post here to replace Mitch McConnell. Rick Davis just speaking on his way out of the meeting with Donald Trump. He says the leadership fight, the choice of McConnell's successor did not come up at this meeting. He called it encouraging and very uplifting, the session today with Donald Trump. Rick, will Donald Trump choose, if he wins re-election, the next Senate leader?
He might. There's going to be, obviously, right now there's a three-way race. And you would assume that at some point, if Donald Trump is elected, the period between the November elections and the election for leader, whether it's minority leader or majority leader, will will take place. And I can't imagine a scenario where he wouldn't weigh in. And it may not be one of the three that are currently running. There's been some speculation that if they win the majority in the Senate, someone like Rick. Steve, the committee chairman, for the campaign, would be a potential.
Let's listen, Rick, as Donald Trump makes his way to the podium. He just got a big round of applause. This is live sound from the NRSC here in Washington, D.C., the former president, live on Bloomberg.
Money not wasted all over the world. We don't want to see Russian ships right off the coast of Florida, which is what they are right now. That's unthinkable. We want to see just success for our country. And we don't have success right now. We have inflation that's killing everybody. We have levels of inflation that nobody's seen for, they say 42 years, they say 53 years, and they say 75 years. I would say probably all of them are wrong. Probably we've never seen levels like this before. And we're going to end that. We're going to bring back our jobs. We're going to bring back common sense to government. We're going to have strong borders, and we're going to have people come into our country, but they're going to come in legally. They're not going to pour in from prisons all over South America and all over the world. And it's not just South America, by the way. It's all over the world. And we're not going to have them pour in from mental institutions, which is where they're coming from, large numbers, and large numbers are terrorists. And we're not going to have this. So what's happening to our country is of great concern to the group of people standing alongside of me. And I just wanted to say that we have great unity. We have great common sense. A lot of very smart people in this room and a lot of people that love our country. They love our country beyond just about all else. And the only thing that maybe supersedes it is their family and maybe their faith in certain instances, and that's very nice. But they want this country to be great again, and we're going to make it great again. And so I just want to thank the Republican Senate, and I want to thank also the House. We met, as you know, with the full House, Republican House today, and we had a tremendous meeting with them also, and there's great unity. Very similar, different topics actually, but not that different. And there's one thing in common. We want to make America great again. We want to make our country great again. We're a nation that's in decline. We're a declining nation. We're a nation that is being laughed at all over the world. We have a leader that's being laughed at all over the world. And we're going to turn it around. We're going to turn it around fast. The polls are looking like they're very strongly for us. And no matter where you look, in fact, a lot of states that people thought weren't in play are very strongly in play. Some were actually leading in. But we have to get elected. We have to take this beautiful place, and we have to make it really something very special again. Right now, it's not special. Right now, it's being scorned and being used as an example of when they look at the crime on the streets, when they look at all of the problems that we have, they're using us as a bad example of democracy. And they're getting away with murder, and we're not going to let it happen. So I just want to thank you for coming, and I want to thank everybody here. You're all either elected or you're going to be elected again and reelected, and I'm with every one of you, and you know that. I'll be with you always. And thank you very much for inviting me, and we're going to have great success. I think we're going to have a tremendous election. It's November 5th is very important, but we really start much earlier than that. You have North Carolina as an example. You have North Carolina September 6th. You have Pennsylvania starts on September 22nd. These are things different from the old days. We had election day and you had paper ballots and you had voter ID. Unfortunately, maybe someday we'll get back to that, but you don't have that right now. But this is an outstanding group of people. I'm with them 1,000%. They're with me 1,000%. We agree just about on everything, and if there isn't, we work it out. And I've had a really great relationship with just about everybody here, and just about all of the senators. And if it wasn't fantastic, it gets worked out. And we have one thing in mind, and that's making our country great. So thank you all very much. We appreciate you being here. Thank you very much.
Donald Trump speaking from the NRSC live in Washington, D.C. Not expected to take questions. That was originally billed. What was originally billed as a news conference, just a short set of remarks there from Donald Trump in what is his first return to the Capitol since the January 6th attack on the Capitol, speaking earlier with House Republicans who sang happy birthday to the former president. He turns 78 years old tomorrow. Then addressing the Business Roundtable, where Joe Biden was represented by the White House Chief of Staff, and now, as we see, meeting with Republican senators in a meeting that included Mitch McConnell. Some were surprised to see him attend this, as well as Mitt Romney, after his flight to Palm Beach was canceled. And no excuse to not be at the NRSC today. I'm Joe Matthew in Washington. Thanks for being with us on Bloomberg TV and radio as we reassemble our panel for a quick swing on this. I want to know what Rick Davis thinks about what we just saw and heard. Bloomberg politics contributor, Republican strategist, joined today by Brad Howard, Democratic strategist, the founder of the Corcoran Street Group. Rick, there you have it. We should note some of the things that Donald Trump said, referring to the U.S. as a declining nation. He opened his remarks, as he has been typically doing recently, with criticism on the border and Joe Biden's policies. He referred to migrants coming from mental institutions and prisons, as we've heard Donald Trump say before, which is something that Bloomberg cannot confirm. But he talked about the great relationships that he has with everyone in that room. He said, just about everyone. We agree 1,000%. Rick, was he right?
He's right for today. Everything is situational. There was no issues really being discussed. He, I thought, took off after inflation, the number one issue in America, at the top of his comments, and then sort of got into the MAGA speech. But you're right. I mean, even when people ask the campaign, can you justify these claims that other countries are pouring immigrants from their mental institutions and prisons into the United States, the campaign itself can't justify their claims. And other organizations like PolitiFacts have called it false. So it's just a campaign event for Donald Trump. And if you try to fact check his campaign events, you're going to go crazy. So I think today is just a reflection of his talking points or his talking points, whether they're true or not.
So he's back. Brad Howard, I wonder your thoughts on what we heard today from Donald Trump on his return to Washington.
Well, look, I think what you saw was someone who's trying to be a party conciliator, trying to bring his party together and show unity in a party that has had a terrible reputation for dysfunction over the last 2 years. I mean, ousting a sitting speaker and not being able to decide who to lead the party in the House, and then, of course, you now have got a very uncertain era in the post-Mitch McConnell era, who's going to lead the Republican conference. And then you've got Donald Trump, who's been at consistent odds with the mainstream kind of D.C., inside the Beltway Republican circles since he came to power. So, I think it behooves the Republicans to show some unity here, because they've had nothing but disunity ever since Donald Trump shook the snow globe of American politics. And I think the snow is still coming down to the ground here as we now look to what was unthinkable decades ago for Republicans, the party of free trade, to come in and start supporting increased tariffs to the point where we increased tariffs so much that could potentially drive the cost of goods and products in the U.S. to dramatically new heights, leading to increased inflation and higher deficits. And that is the most anti-Republican principle I can think of in the old school kind of Republican Party. So, there's a display of unity. I don't know how long it's going to hold, and it would be interesting to see really who takes McConnell's place and if they're willing to stand up for the traditional Republican principles of free trade, free enterprise, and global dominance in the global economic marketplace.
Well, it'll be interesting to see the unity around Joe Biden as an answer to this, knowing that many progressive Democrats have been upset with the president here about his policy in Israel, among many other issues. Brad Howard and Rick Davis, thank you for staying through the remarks from Donald Trump today. A great panel and a great conversation here on Bloomberg TV and radio. I'm Joe Matthew in Washington, as we add the voice now of Saleha Mohsen, who is not only a seasoned reporter here in Washington, but hosts our Big Take DC podcast. It's great to see you. We should note Joe Biden is just about to hold a bilateral news conference, and if you've been waiting for him, we thought this could be a split screen. It's been delayed, and we expect it will begin around 2 o'clock Eastern time, about 10 minutes from right now. The contrast could not be greater. with this incumbent and the former president we just heard from today?
There's a huge contrast, but there's also some similarities there. We have two men who have already served almost a full term for Biden and a full term for Trump, both, hitting some high numbers in terms of their age and vying for a second term. But yes, we have also just a drastic difference. Someone who is trying to persuade the American public to come back for his brand of, like our guest said, shaking up the snow globe of American politics versus someone who is just trying to say, hey, let's just calm things down, bring the temperature down, and hold on to the new status quo that we have.
Think of the difference in messaging. To your point, the president, Joe Biden, the sitting president, is going to be holding forth with Volodymyr Zelensky in a bilateral news conference from the G7 in Italy. You couldn't think of a greater contrast with the optics of what we just saw at the NRSC. Saleha, what did you make of all these Republican senators going out of their way to applaud Donald Trump and to stand behind him as he addressed Americans today? Some of those lawmakers never imagined they'd be in the same room as Donald Trump after January 6th.
It goes to show that the Republican Party will stick together and stick behind their own when it comes time to cast votes, when you have to put your money where your mouth is. And I think Democrats have so far shown that they're willing to let some of the fighting play out a little bit longer. And we'll see whether that strategy bodes well for either the Republican candidate or the Democratic candidate.
We had an important Supreme Court ruling today. I bet it's going to be a forthcoming Big Take DC podcast. Mifepristone, access to the abortion pill upheld. President's going to have to deal with answering questions about this, about a ceasefire in Israel, even as he tries to deliver a message about Ukraine and the business at hand today in this new loan program for Ukraine. That's the job of being president. He's going to have to spin all these plates during this news conference.
He is, but he needs to do that without a gaffe. Both of these candidates are prone to gaffes.
Or getting angry.
Or getting baited into something, or struggling to keep up with this shifting tone and different policies. We're going from something very much domestic policy, health related, and to Israel Hamas is international politics, and Russia assets is like international financial and economic diplomacy.
Point was made in one of the tip sheets this morning that one thing Joe Biden is not doing right now is rehearsing, preparing for a debate. This is probably the most important date on his calendar this summer. While the G7 brings the benefits of incumbency and important work that he must do as the elected leader, at what point does he get in the room and do murder boards, as we call them, in a mock debate to get ready for this?
I think the minute he lands, he probably should be focusing on that, but also I think sparring with the press, as he's going to in the next couple of days.
Is that a good warm-up?
Yeah, exactly. And chatting with his G7 counterparts. That's a good warm-up, I think.
Well, I suppose that's true. What are you looking for on takeaways here beyond the photo op? Does Joe Biden need to deliver something beyond support for Ukraine in this?
I think it's unity. We've got Europe coming apart. He can be the voice of unity.
That's perfect. The podcast drops today, partly why we talk to Saleha Mohsen every week at this time. The Big Take DC. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington. I'll meet you back here for the late edition at 5 p.m. Washington time, only on Bloomberg.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
The top names in business are on Bloomberg.
The valuation environment has fundamentally changed. Private equity sponsors are just going to have to hold companies longer, are going to need to take on equity to get some refinancings done, and returns are going to be lower over the next few years.
If you go back all the way to 2007, we used to have a high interest rate environment. We used to have high prices, and if you look at those vintages, even the GFC vintages have done actually pretty well in the end.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on Bloomberg Television, Radio, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Masser along with Tim Stenevec. And let's get to the setup on what is turning out to be a pretty busy Thursday on this June 14th. 13th. 13th.
Yeah, 13th.
How did I do that?
Thursday the 13th.
I was thinking, it's not Flag
Friday
Day
the 14th,
yet.
Tomorrow.
It's
I know
not.
where your head is, Carol.
Although politics kind of front and center. So we've seen a lot of flags, U.S. and others today. We're going to get into that in just a moment. We did also have, Tim, another inflation print.
Yeah, that makes the case for a Fed rate cut this year. And so yields moving down, 10-year breaking below 4.3%. Treasuries rallying after that strong $22 billion sale of 30-year bonds. We're going to have more on the markets in just a minute.
Yeah, kind of interesting. We're seeing some of the market moves here, so we're going to get into that in just a moment. As I said, busy hour ahead. As the expected U.S. presidential candidates, we've seen them kind of go head-to-head today. I heard Joe Matthews saying, I thought we were going to have a split screen of Donald Trump on one side and Joe Biden on the other. That hasn't quite happened. We've heard from Donald Trump because he has been meeting with some of the best-known names on Wall Street, corporate America. So we're going to get kind of the postmortem on that. And then we are still awaiting President Biden at the G7.
Plus, a question that we've been having as we've seen some Fed-friendly data come in is, what's it like for small businesses out there? How are they really doing right now? We're going to be joined by Frank Sorrentino over at Connect One Bank. He's the CEO there. He's going to give us some information about what they're seeing when it comes to their lending environment and what he's hearing from the CEOs of these small businesses that he works with each day.
He's been pretty robust and upbeat, if you will, over the past year or so. Also, we're going to get into the commodity markets. Deadliest metal that is booming. This is one of our most read stories on the Bloomberg today.
And one more thing. Did you even know that this was a thing, Carol?
What?
These programs that simulate keyboard activity?
What?
Yeah.
Wait,
Makes
you
it look
mean-
like you're working when you're not really working.
Don't get any ideas, anybody.
It's our one more thing among the most read on the Bloomberg terminal today.
Because you might get caught. All right, we're going to get into that in just a moment. First up, though, quick check on the trade and your top business stories. Here is Charlie Fowler.
Hi, thank you very much. Here's what's going on. Right to the numbers. We've got a decidedly mixed market right now on this Thursday. PPI Thursday with the Dow down 127 right now, lower by 0.3%. S&P little change, struggling for direction. It's been swinging between gains and losses. Right now, higher by 1 point, little change there, up less than 0.1%. NASDAQ up 26, up by about 0.2%. 10-year 4.24% with a 2-year that's now yielding 4.69%. Gold now down $23 the ounce to $23.01, drop there of 1%. West Texas Intermediate crude just about flat on the day, $78.47 a barrel. Broadcom, after earnings, a chip supplier for Apple and other big tech companies, seeing its biggest surge in 4 years. Shares of Broadcom today up now by 12.4%, also announcing that 10-for-1 stock split after NVIDIA. And after the bell today, we will be hearing from Adobe. Adobe shares are lower now by just about 0.2%. Briefly, Netflix has announced a live hot dog eating competition featuring Joey Chestnut that will be broadcast on Labor Day. Chestnut will be competing against competitive eater rival Takara Kobayashi. Netflix shares today, they are trading higher by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you might have seen the headlines or heard about them earlier. BlackRock, Global Infrastructure Partners, Brookfield Asset Management pledging $4 billion as part of the Group of Seven's effort on infrastructure spending and investing, paired with the private sector specifically. BlackRock's Larry Fink was speaking, Tim, at that G7 meeting.
As for G7 leaders who are there, many face political struggles back at home amid the rise in populism that we've seen around the globe and difficult domestic environments. That includes U.S. President Joe Biden, who, Carol, it's safe to say, had a pretty rough week.
Yeah, safe to say. We head to Italy, where we find Bloomberg Surveillance co-host Anne-Marie Horton. Anne-Marie, great to have you here. Already a long day for everyone involved, including you. What's been the big development so far, and what's kind of the mood on the ground?
Well, the big development was what happened this morning, and the president's obviously going to tout that as he prepares to take the podium next to Volodymyr Zelensky, the Ukrainian president. And this was the fact that the U.S. was able to get the G7 to sign off on something that they've been trying to for months, and that was to tap the Russian frozen, these immobilized at the moment assets that are sitting in Europe, $280 billion worth. What the U.S. wants to do, different from what the Europeans were doing, is that they want to tap the future interest on these securities, that money that may accrue over the forthcoming years. They want to tap it right now and front load that money to Ukraine. So they'll be sending $50 billion worth of U.S. dollars approximately to Ukraine through a loan. So the president is going to tout this clearly today. And one key issue, of course, is the fact that, as you mentioned, a lot of these leaders are coming here that are dealing with mounting pressures back at home, besides one, Italian Prime Minister Giorgia Meloni. So for them to coalesce around this, they're almost election-proofing this financing to Ukraine, because Ukraine would get it before the end of the year. So regardless of what elections may be taking place in which countries and what leaders may be showing up and not showing up that are here today to next year's G7, they are going to be getting this money to Ukraine as soon as possible.
It's so interesting that you talk about this idea of election proofing, because here in the U.S. there's been pushback, especially on the right, over U.S. support of Ukraine. Are we seeing similarly that around the world with the rise of populism in some of these European countries, Anne-Marie?
We are in some of these countries. I would note that after the European parliamentary election, specifically in Germany, we saw the AfD have a very good evening. It was a huge blow to Olaf Scholz and his coalition. And what we saw happen this week was when Zelensky went to Germany and he spoke to the Bundestag, some members of the AfD, as well as also some members of far-left parties, these lawmakers decided to protest and not show up for Zelensky's speech. In some of the co-founders of the AfD's caucus, they're talking about the fact that they want not a wartime president of Ukraine, they want a peacetime president of the Ukraine. At one point, someone called him a war beggar. So you can see there are some of these concerns brewing in some of these nationalistic far right and some lawmakers far left about their concerns about sending more aid and money to Ukraine, which is why this G7 is trying to show a unified front
but obviously these discussions have been clouded by what they are dealing with back home.
Well, that's what I wanted to ask you, Anne-Marie. You have traveled the world. You have followed these meetings over the years. I am curious how distracted it seems the G7 leaders, the teams of these G7 leaders, considering what they're facing on a domestic front. How united are they? So how distracted do they seem to be? How united do they seem to be?
So around the table, they seem united on what they wanted to try to accomplish at the G7, even though there are obviously nuances, say China, how the U.S. is dealing with 100% wall on Chinese EVs, while you just saw the EU come out after their commission's probe, looking at a little bit more of a nuanced approach. One company maybe 17.4% in terms of a tariff on Chinese EV imports to as high as a different company, 45%. But around the table, they're collectively trying to show a united front. Individually, if we just take a look at some of the three top leaders of Europe right now, Rishi Sunak comes here, potentially not going to be leader of the UK in 3 weeks' time exactly, when the British electorate goes to the polls. You have Emmanuel Macron, who was beaten down after the European parliamentary election, so he calls for a snap legislative election, and then rumors start to swirl this week that he would potentially resign if he was dealt another blow, and he had to come out before he came to Puglia to talk about the fact that he will not resign. And then Olaf Scholz, who was dealt a massive blow in the European parliamentary election and who's not doing very well. Record low polling for him and his coalition. Not to mention Trudeau, who's also dealing with very low polling and a lot of rise in the conservative movement in Canada. And of course, President Joe Biden, which if you look at the polling similar to Europe when they went into these parliamentary elections and to the United States, the top issue remains the economy and inflation for all of these countries. And then other issues like immigration and migration. And that's the gap you see with what leaders are discussing around the table, and that they want to tout standing strong for Ukraine, but really what the electorate is focused on domestically.
Yeah, I feel like all these leaders, they know how to deal with stress, but I feel like they're dealing with stress on a whole other level right now, especially when it comes to kind of their home fronts. Having said that, the United States, what is the role for the U.S. in the Western world and globally? Is it a different role going forward, perhaps?
Well, President Biden came to his first G7 in Cornwall, the United Kingdom, and he said America is backed. Now, of course, since many are viewing the U.S. election as an absolute coin toss, Europe is starting to prepare for potentially what a Trump 2.0 presidency would look at. Many Europeans were caught on the back foot in Trump's first round. What unnerves them is some of the criticism Trump has pointed to when it comes to NATO, calling some countries who have not met their target delinquents. At one rally, he had talked about that he would potentially tell Russia they could do whatever hell they want with some of these countries, his words, if they didn't meet their NATO targets. So that kind of rhetoric unnerves European allies, and they are preparing potentially for Trump 2.0, which is why they wanted to get the $50 billion loan to Ukraine done, as well as why Biden and Zelensky will be signing a bilateral security agreement that will last about a decade. Now, it's not a treaty, so a future president could pull out of it. It doesn't need congressional authority, but it is a security agreement that would be more of a keystone feature, something more solid that Ukraine can hold on to, regardless of potentially who the next U.S. president is.
Anne-Marie, before we let you go and before we do hear from President Joe Biden, just give us 30 seconds on the conflict in Israel and what leaders are saying about Gaza and the conflict there.
Well, President Biden said he doesn't think there's going to be a ceasefire soon. We do know that this deal is on the table. He wants to see Hamas act. I imagine, even though the president is going to be squarely focused on Ukraine as he stands next to Volodymyr Zelensky, a lot of domestic pressure in the room, and this is a hot-button issue. The G7 would like to see that deal the president outlined at the end of May go through.
It all certainly feels very heavy. All right, Anne-Marie, thank you so much. Bloomberg Surveillance co-host Anne-Marie Hordern in southern Italy. All right, now we go closer to home where we normally find President Biden, and we're talking about Washington, D.C.
Donald Trump's brand on Wall Street, once tarnished by the U.S. Capitol attack and his bombastic political rhetoric, has made a near full recovery. It's evidenced by the lineup of bank industry chieftains attending an event earlier today with the former president. And then after that, just moments ago, we did hear from the former president at the NRSC, the National Republican Senatorial Committee on Capitol Hill. For more on that, we head to our DC News Bureau, where we find Bloomberg News senior national political correspondent Nancy Cook. Nancy, the names on this list: JP Morgan Chase's Jamie Dimon, Citigroup's Jane Fraser, Brian Moynihan of Bank of America, Tim Cook of Apple. Who was there? How long was the meeting? What went down? What do we know?
So Trump spoke to the Business Roundtable. They have a quarterly meeting, and they invited both former President Trump and President Biden. President Biden is in Italy, as you were just talking about, so he sent his chief of staff, Jeff Zients, and then Trump came. They both spoke this morning. The conversation with Trump was really a fireside chat with his former National Economic Director, Larry Kudlow. It was very friendly and did not make news, but the big thing was that he basically spoke in front of 100 CEOs, some of whom you've already mentioned, also the heads of Cisco, American Express, NASDAQ. You know, there were a ton of real powerful CEOs in the room. And, you know, this is pretty key for Trump as he tries to really line up a bunch of support from Wall Street and the business community, both politically, but also to help fund his campaign.
Nancy, just the visual, we have it up right now, looking at the event earlier, you know, and in terms of Trump, you know, meeting, just the visual significance of, or just knowing that former President Donald Trump is meeting with the likes of someone like Jamie Dimon, who, as you know, if there's a story, Jamie does something or says something, it's among the most read on the Bloomberg. We're going to talk about it a lot. These are a who's who of Wall Street, the business sector. The visual significance that is happening is this, should we read this as investors, as individuals, as voters, that this is just business as usual? I mean, the business community will meet with all political candidates.
They are, but I think it's a real recognition. You know, the business community in Wall Street really turned away from Trump following January 6th and that attempted insurrection. And I think a number of Wall Street people in particular were flirting with backing other candidates during the Republican primary, like Nikki Haley or Florida Governor Ron DeSantis. You know, Trump really swept those early contests in New Hampshire, Iowa, Nevada, South Carolina, and really solidified his support very quickly among Republican primary voters. And I think establishment, Wall Street, business community people are really now just seeing, well, he's going to be the nominee. They have questions about Biden's record, and a bunch of them are back to backing Trump, or they're at least like open to it because they feel like there's a 50-50 shot that he could be president, and they don't want to be caught out in the cold if he is.
And to be fair, my understanding is White House Chief of Staff saw and spoke to the group earlier in the day, right? Obviously, Joe Biden couldn't because he's at the G7, but my understanding is that the White House also saw or met with the Business Council as well.
I said that already. He spoke at 9 a.m. Jeff Zients, the White House Chief of Staff, talked early in the morning. You know, President Biden was invited, but obviously he's in Italy at the G7, and last week was in France, so he's had his own really packed schedule. And so both men were invited, and you know, but it was just a really key chance for Trump to appear before a bunch of CEOs, and they have the Trump campaign has been very eager to sort of put him in the position of sort of meeting with CEOs and visually looking like he has the backing of CEOs, the oil and gas industry. You know, he's increasingly getting some support from Silicon Valley, and they're very eager to showcase that.
How would you, Nancy, explain I don't really want to call it a reversal yet, because it's not like we've seen widespread embracing of the former president at this point, but I think it does speak volumes that so many of these folks who did denounce what happened on January 6th end up in the same room as him a little earlier today. Not to mention the folks who have come out and said, yes, we didn't support him post January 6th, but we are fully on board with the former president right now. How would you explain that reversal?
Well, I think two things are happening. One, I think that in the Republican Party, there has been a wholesale rewriting of what happened on January 6th. And it's been something that's been really interesting to watch as a reporter. I think that Republican primary voters were the first people to sort of rewrite what happened, but I'm hearing from, you know, wealthy Republicans, donors, folks on Wall Street, that what happened on January 6th was not that bad. It was not an attempted insurrection. It was more like a mob. You know, these are people that are really, you know, trying to cast what happened on the Capitol and people trying to overturn the election as a whole different thing. just to justify their support for, the former president. And then secondly, I think that there's a bunch of people in the business community who feel like the Biden White House has not done a sufficient job of reaching out to them. They want lower taxes. They want less regulation. And even though privately they may still have some reservations about Trump, they're willing to give him a second chance just because they feel disenchanted with Biden. And I think that's that's where the business community is at this point, or a lot of people are.
Well, the race is on right now. We're focusing on a lot of fundraising efforts. That's to come right next, Nancy, and that we'll be watching quickly, in the future, and that'll give us an idea of kind of how things are laying out in terms of the money that starts to come in on both sides.
That's right. We're expecting the next Federal Election Commission reports to come out a week from today. I can tell you that since Trump's conviction in New York in the hush money trial, he was found guilty on 34 counts, including falsifying business records. The campaign has raised $15 million. And it will be interesting to see next week if he has closed that fundraising gap with President Biden, who does have his own deep well of support in Hollywood, in tech, on Wall Street, but the money race is also getting tighter.
All right, absolutely. All right, great stuff. Thank you so much. We know a busy day for you, but really appreciate that we could check in with you on this. A lot going on, obviously, in the nation's capital. Nancy Cook, she's senior national political correspondent at Bloomberg News. She's joining us again from our Washington, D.C. bureau on a day where we've seen, once again, yields backing off a little bit. Another weaker, if you will, inflation print, PPI, coming out earlier this morning. And you've got kind of a mixed market, slightly higher on the S&P, call it little change, unchanged almost, and the NASDAQ just up about half a percentage point.
Yeah, S&P 500 up 0.1%, a little bit of green right there. As you mentioned, the Dow down 0.2%. Hey, coming up in just a few minutes, the commodity market's deadliest metal that's booming. The Bloomberg Big Take is straight ahead.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. From the world of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern. Only on Bloomberg TV and radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesday.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The world's biggest bond market climbed after a $22 billion sale of Treasuries saw strong demand, adding fuel to a rally driven by bets that the Fed will cut rates this year amid signs of disinflation. Stocks are trading mixed. The Dow lower now, down 0.2%. S&P advancing, trading at a record right now, up 5, up 0.1%. NASDAQ also trading higher, up another 42 points, up 0.2%. Any advance today for both the S&P and the NASDAQ will be a new high. 10-year, 4.24%. That 2-year, 4.69%. We've got spot gold down 1%, 23.01 the ounce, while West Texas Intermediate crude right now unchanged, 78.50 for a barrel of WTI. Tesla shares are gaining. We've got Tesla shares up now by just about 4%. Tesla higher after Elon Musk said shareholders voted by wide margins in favor of reapproving his compensation package and moving the company's state of incorporation to Texas. Ford, meanwhile, will sell its lineup of electric vehicles through all 2,800 of its American dealers in a bid to boost sales of battery-powered models now being shunned by mainstream buyers. Ford shares today down 1.3%. Again, recapping, looking at a mixed market on this Thursday here. S&P up 6, up 0.1%. Adobe, by the way, and RH after the close of trading. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, today's Bloomberg Big Take is on the uranium fever that is underway and how the commodity market's deadliest metal is booming. With radioactive metals price, uranium, it is up about 230% over the past 5 years. That's more than triple the gains in gold and copper, even after declining a bit in 2024. Tim and I, like, what we love about this story, it's just Bloomberg at its best. Takes you to a part of the world you probably don't know about, but you should.
With more on this most read story on the Bloomberg today, we welcome Bloomberg News equities reporter Jeffrey Morgan in our Toronto bureau. You can read Jeffrey's story and more from Bloomberg The Big Take on Bloomberg.com and at Bloomberg.com The Big Take. Welcome, Jeffrey. We talked recently with Will Wade about the recent huge party down in Georgia to celebrate the first new reactors in more than 30 years in the U.S. You get into this so-called rebirth that's happening, not necessarily here in the U.S. yet, but certainly around the world. And a lot has changed in just a few years when it comes to the way people think about nuclear power. Give us an idea.
Yeah, so the change in attitudes towards nuclear power has been quite dramatic in the last few years. And we saw this kind of at the COP climate conference at the end of 2023, where there were 23 countries that agreed to triple their use of nuclear power. And so this brings up the question of, well, where are they going to get all of their fuel for these nuclear power plants from? And this is what took us to the extreme northern reaches of Saskatchewan, which is home to kind of the most prolific basin of uranium in the world. Since the 1940s, it has produced more uranium than anywhere else. It's currently not the largest producer, but if all of the mines that have been proposed there are built as planned, it will retake its place as kind of the top of the charts from Kazakhstan, which is currently the largest producer in the world. And this is a place that really has a lot, it's got a lot of projects that are being considered, a lot of exploration, but it's a very difficult place to get to.
Well, take us there and the difficulty you had in actually getting there, if you would.
It was a bit of a harrowing journey. It took us 2 attempts. You have 2 options to get there. You can drive 9 hours down a small gravel road from the nearest city, or you can try to take a helicopter about an hour from an airport on the Alberta side of the border in Fort McMurray. And if you're doing this in April through a snowstorm, it's a bit of a harrowing journey. We emerged unscathed, and we enjoyed being able to see what will be. This is going to be the world's largest uranium mine if it is built as planned. But the part of this story is that this journey, while it was difficult, is in a remote place. In the world of uranium, it's actually maybe one of the more accessible locations. Kazakhstan, for example, which, as I said, is the world's largest producer right now, they had been shipping all of their uranium through Russia to the port of St. Petersburg. Now there's sanctions in place on Russia, and they've got to find a new way to get their uranium to market. So it's going out the Trans-Caspian route. Niger, a country in Africa, West Africa, there was a coup there last year, and now there's problems with that country getting its uranium out. So by comparison, yeah, we had a very difficult journey getting there, and in fact, I lost my lunch. I didn't lose my head during the trip, but
You're here talking to us. You survived.
Well, what does it feel like, Jeff, to pick up a small black radioactive bar of uranium with your hands?
Yeah. So wear gloves, and we had a bit of a comparison. So it's interesting. What's interesting about this location is it's so dense. We pick up, first of all, they hand us a small gray bar, which has a low concentration of uranium, about the size of a phone, and it weighs about as much as a phone would. Then they hand us this black bar, and it is thick. They say it's about 60% uranium, which is an order of magnitude larger than most other places. And this feels like a 15-pound dumbbell. It's, again, just the size of a phone. But it is heavy. If they hadn't warned us, we probably, I'm not expecting something that small to weigh that much. It's a surprisingly heavy chunk of rock. And that is really why this area has kind of taken off, and why there's so much more interest from major investors in New York and Australia and Hong Kong in investing in this area, because the resource is just so dense, and really, I wasn't really prepared for something that small to weigh that much.
Given that it's highly radioactive, how is it mined? What's the process? How do people get it out of the earth?
So this is an underground mine, and in this case, they're going into the bedrock. So the rock is hard. There are a couple ways to mine it. In this case, they're chipping away at the rock with face protection, ventilation, etc. There are a few stages in terms of getting a uranium ore out of the ground and then to a nuclear power plant. It needs to be milled, then it needs to be converted, it needs to be enriched. And in this case, the uranium is so densely packed that it actually needs to be diluted before it's sent to an enrichment facility or a conversion facility. So this is the way that it's being done in this part of northern Saskatchewan. In Kazakhstan, it's being kind of leached out of the ground with they call it an in situ method. So they're using, a series of pumps to kind of leach this out of the ground. They're using acid to pull it from the rock.
Right.
But this is this is a typical mine.
Hey, Jeffrey, one thing I want to get into, and you get into in your story, is that this mania for uranium has spilled over into the stock market. And you talk about traders bidding up shares of uranium companies. Many of the miners in Canada have soared more than 400% over the past 4 years. And yet, you also remind us that we're kind of always just one bad accident, nuclear accident, away from kind of everybody pulling back again.
So and that is what happened with this sector, back in 2011 with Fukushima. And some of the uranium ETFs that are out there that had existed pre-Fukushima haven't actually regained their previous pre-Fukushima levels. Even though we have this mania, even though companies like Cameco have been some of the top performers in Canada over the last couple of years. And you have this company, which we visited this mine site, NextGen. This is going to be a site that produces about 13% of the world's uranium. This is a pre-revenue mining company with a $4 billion US valuation, which is kind of unheard of. You don't really have these types of pre-revenue unicorn companies in the mining space. That's kind of something you see in the tech space a little bit more. And so it is unusual, but it speaks to this kind of the supply deficit that's coming for this commodity.
Jeffrey, how much uranium is needed to power a reactor?
That does depend a little bit on the size of the reactor. So the U.S. Nuclear demand overall is about 50 million pounds a year.
Okay.
And the U.S. production is less than 1 million pounds. So this is a huge source that needs to be imported. old mines that had been mothballed because the price of the commodity had fallen so far that miners just mothballed their projects for a few years. Those are being reopened, so the U.S. production will rise. But in this case, this mine that we visited will produce 30 million pounds a year. So that is, over half of the U.S. demand. It's a shocking amount that could come out of this mine.
So one thing I wonder too, and I think about going up to the Bakkens in North Dakota in the fracking craze, and I just remember sitting at a little diner, and the folks are like, "We're so kind of negative and subdued." The locals are like, "We've seen this energy rush before. I know you're all excited, and this is, but we've seen it before." How much or how soon before this kind of supply-demand gap that we see currently that's pushed up these prices for the commodity and the companies that play in this space, how long before that gets kind of more in balance?
So the outlook right now, because it takes so long to build a uranium mine and because it takes so long to build a nuclear reactor, the outlook is that this supply-demand balance will kind of close at about the year 2030, which is roughly when this mine that we visited will open, but then it will really widen again. This is
the NYMEX WTI crude oil futures settling at $78.62 a barrel. It's up 12 cents or 0.15%. The gasoline July futures settle at $2.42. Diesel July futures at $2.49. Natural gas July futures settling at $2.96.
A few others, Egypt, Turkey. But the supply response has not really happened yet. Like I said, those mines were actually shut down and mothballed rather than being, new mines reopened. There are not a lot of mines around the world that have been permitted through this previous period where we had the bear market that lasted so long.
You didn't bring any small black radioactive bar home, I suppose.
Please no.
I'm just kidding.
I did not, no.
Listen, love this story. It's among the most read. It is the Bloomberg Big Take.
You're right. It's so Bloomberg, Carol.
It's so Bloomberg. It just, like, we've all learned something. So appreciate it. Bloomberg News equities reporter Jeffrey Morgan on today's Bloomberg Big Take.
Hey, let's get to world and national news. We got Nancy Lyons down in the D.C. newsroom for an update on world and national. Hey, Nancy.
Thanks, Tim. The Supreme Court today unanimously preserved access to a medication that was used in nearly 2/3 of all abortions in the U.S. last year. Brown University professor Wendy Schiller says the case was basically thrown out because the justices said the plaintiffs had no standing. But she says this is not likely the final word.
Republicans can breathe a sigh of relief because the Democrats cannot make this another issue on top of abortion access. But on the other hand, pro-life groups will now push Republicans on the campaign trail to say they'll do something legislatively about this rather than through the courts.
Wendy Schiller is the director of the Taubman Center for American Politics and Policy at Brown University. Donald Trump is back in Washington today. He's been talking about his agenda with lawmakers. He spoke after meeting with Senate Republicans.
We have great unity. We have great common sense. A lot of very smart people in this room and a lot of people that love our country. They love our country beyond just about all else.
Earlier in the day, he met with House Republicans and discussed with them ways they can help him in his legal cases. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Coming up, the U.S. Open golf update brought to you by Audi. Don't let anyone else drive off in the Audi model that you've always wanted. Visit your local Audi dealer to get behind the wheel of yours today.
The French left-wing parties agree on an alliance ahead of the snap vote.
you actually offer a payout at 7 years to encourage people to explore if they don't find themselves in management position. I mean, what's the thinking?
Yeah.
I mean, like, what's that about?
We're not forcing everybody to be kicked out, right?
But you encourage people to explore.
Exactly. We encourage people to think about their, because sometimes it's easier, even for me, if I don't need to change everything, it's easier, right? Change is really tough thing for everybody. Should I do this job for next 5 years, 10 years, or should I try a new thing? If I had to think, that is a great opportunity to think about it. We need to think about what kind of talents I can have for the next 5 years, 10 years. What's the best way to contribute to the world?
The top names in business are on Bloomberg.
They're kind of predicting a soft landing, and you see that in both stock price, which are kind of high, credit spreads, which are kind of low, markets, which are kind of wide open. That's all good. Doesn't tell you what the future is going to be. I think there are a lot of inflationary forces in front of us that may keep it a little bit higher than people expect. My view is whatever the world is pricing it for a soft landing, I think it's probably half that. I think the chance of something going wrong is higher than people think.
Bloomberg. Context changes everything.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Invest, don't trade. Invest for the long term, i.e. when markets are challenged, don't get spooked. Don't get involved in investment hobbies. Investment hobbies are generally not profitable.
It's 2:40 on Wall Street. We do check markets all day long at Bloomberg. We've got the Dow lower, the S&P, NASDAQ, both pushing higher, both at records right now. 10-year, 4.24%. The 2-year, 4.68%. S&P up 6, a gain of 0.1%. The Dow slumping 90, lower by 0.2%. NASDAQ up 45, now up by 0.2%. Again, that 10-year, 4.24%. Spot gold now trading down by $23 the ounce, $23.02. A drop right now of 1%. West Texas Intermediate crude oil down 0.1%, 78.41 a barrel. Broadcom, a chip supplier to Apple and other big tech companies, seeing its biggest surge in 4 years after its latest results topped estimates lifted by robust demand for AI products. Shares of Broadcom right now, they're up by 12.6%, also announcing that 10-for-1 stock split. After the bell today, we will be hearing from Adobe. Adobe ahead of earnings, down 0.8%. Also after the bell, RH, Restoration Hardware. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, you know, when we look at the markets generally, Charlie, of course, just giving us an update on this Thursday trade, but we've talked about small cap stocks. They have way underperformed large cap names this year. Little change on the year, in fact, as the S&P 500 continues to take out one record high after another, it seems. The S&P 500 now is up about 14%, Tim, year to date.
Well, with a view on small business and the lending world, we have back with us Frank Sorrentino, Chairman and CEO at Connect One Bank. It's the publicly held New Jersey-based community bank. They've got a $677 million market cap. He joins us from Long Island. Frank, good to have you back with us. That Fed decision yesterday kept rates unchanged as expected. Do you believe the Fed is behind the curve, in your view?
Well, good to be back, Tim and Carol. Thanks for having me. You said the magic words. This was very much expected. I don't think the Fed is behind the curve. I've always said that the Fed is data dependent. And I think I said a year ago on this program that the economy is robust, and it appears that that happens to be true. So I think the Fed is doing exactly what they should be doing, watching what's happening. They are seeing signs of inflation beginning to come down. However, employment is incredibly strong. Small businesses have a high degree of optimism. Business is strong in many, many segments. And so those who were predicting 3 or 4 rate cuts earlier this year, I don't know what data they were looking at to make those predictions. My prediction has been rates would stay generally where they are through this year, through the end of this year.
Well, it's interesting. And, we went back and listened to our last interview with you. I think it was back in February. And you reminded us that, listen, the year before, or in 2023, late 2023, you were giving this outlook of being robust. And you said how, everybody's like, you're crazy, and you've stayed upbeat. You've confirmed it again. I mean, here we are in mid-June. Everybody's still confident, still upbeat. I mean, you work with home builders, you work with, the construction folks, the manufacturers. Everybody is in a good place?
Look, I think, again, we need to talk about it in different segments and or, different parts of the economy. But if we just want to stick with interest rates for a moment, I have been saying for the last year, and what I believe is true, is if you look at historically over the last, you pick a time frame, 10, 20, 30 years, this is not a high interest rate environment. It is a higher interest rate environment than what we came from. And so when you think about a 4.25% 10-year, and you think about even the 5.25% or so overnight rate, these are not extraordinarily high interest rates. So it is natural that businesses that came out of COVID, businesses that had supply chain interrupted, a housing shortage across this country where we just can't build enough houses or apartments, that we wouldn't have a more robust economy. All the infrastructure spending that's going into the economy, all the climate issues, the military spending. You just think about everything that's happening at this moment in time, and to think that we'd have anything less than a robust economy, I just don't know where you would be getting that data from.
Frank, we apologize. We've got to cut it short, but for a good reason. President Biden getting ready to make some comments. So hopefully we will come back to you very, very soon. Frank Sorrentino, Chairman and CEO at Connect One Bank, joining us from Long Island, New York. We are
Brent crude futures settle at $82.75 a barrel. That's up 15 cents or 0.18%.
President Joe Biden and Ukrainian President Zelensky. Of course, as we heard from our Anne-Marie Horder earlier, that was a big part of the early sessions, if you will, at the G7 in terms of what aid and how they get the money that is needed for Ukraine.
And as we await a quick check of the markets, the Dow is down 0.2%, while the S&P 500 up 0.2%. The NASDAQ Composite higher by 0.3%.
Yeah, so we'll look for some more color in terms of some of that announcement. Right, on a day, where we are coming post-Fed, a lot on the minds of investors. But to be fair, and you know it from the conversations that Tim and I have had, certainly I feel like all this year, and even at the end of last year, that geopolitics is front and center. And so the alliances that have been in existence for years, for decades, certainly in the Western world, they are stressed. There's a lot of pressure for many leaders, Western leaders, when they get to their domestic issues and their home front. And new alliances are being formed. We've seen China and Russia become much closer. And so it's an interesting time for global leaders, but in particular, some of the stress points that you're seeing on Western leaders.
I think also one thing top of mind, certainly, and we talked about this with Anne-Marie, is the rise of populism that we've seen in recent elections in Europe. Kind of mirror what's happening here in the United States and what has happened here in the United States since the 2016 election. But the way that voters in other parts of the world are reacting to what's going on in their local economies, including inflation, notes on immigration from all over the world, as we do see migrants move from one country to another country, and the result of what happens in elections when voters are voting on those issues.
Yeah, absolutely. But the business of global politics and global alliances must continue. And, many have said it'll be interesting to see when we in November go to the polls. We've talked about what's top of mind for a lot of voters, and that is whether or not they feel. Right now, we do want to head a bilateral news conference between President Joe Biden and Ukrainian President Zelensky, expected to make some comments about some of the aid that will continue to flow to Ukraine to help them in their war against Russia. For those listening on radio, the two stepping up to the podium. Let's go there. And actually, before we start to hear them speak, they're signing, obviously, some kind of agreement between the two, part of what we heard from Anne-Marie Horton earlier. So tapping into certainly monies that will continue to flow to Ukraine to help them in their fight. So again, the visual, for those who are not actually watching right now, a handshake between the two leaders as well, and now stepping up to the podium to make some comments. Looks like we will hear from both of them. Let's head back to Spain. To Italy, excuse me.
Last year at the NATO summit in Lithuania, the United States brought together every member of the G7 to sign a joint declaration of support for Ukraine. 25 additional countries joined us quickly. Each agreed to forge a long-term bilateral commitments with Ukraine. President Zelensky and I have just now signed that agreement between the United States and Ukraine. Our goal is to strengthen Ukraine's credible defense and deterrence capabilities for the long term. A lasting peace for Ukraine must be underwritten by Ukraine's own ability to defend itself now and to deter future aggression anytime in the future. The United States is going to help ensure that Ukraine can do both, not by sending American troops to fight in Ukraine, but by providing weapons and ammunition, expanding intelligence sharing, continuing to train brave Ukrainian troops at bases in Europe and the United States, enhancing interoperability between our militaries in line with NATO standards, investing in Ukraine's defense industrial base, so in time, they can supply their own weapons and munitions. Working with Ukraine's partners to build a future force that is strong, sustainable, and resilient. And supporting Ukraine's economic recovery, as well as its energy recovery, after Russia has repeatedly targeted Ukraine's energy grid with massive attacks in the futile attempt to break the will of the Ukrainian people. All these lines of efforts and others are laid out in this agreement. Additionally, the G7 achieved a significant outcome this week on the matter of Russia's frozen assets in Europe and other places outside of Russia. Back in 2022, 2 days after Russia's invasion, members of the G7 and the European Union worked together to freeze $280 billion in Russian central bank funds outside of Russia. I'm very pleased to share that this week, the G7 signed a plan to finalize and unlock $50 billion from the proceeds of those frozen assets, to put that money to work for Ukraine. Another reminder to Putin, we're not backing down. In fact, we're standing together against this illegal aggression. The agreement that President Zelensky and I just signed also lays out our shared vision for a just peace, a peace rooted in the UN Charter and the principles of sovereignty and territorial integrity, a peace with a broad base of support around the world that holds Russia accountable for the damage it has done in this war. We will see this vision strongly affirmed at the historic peace conference happening in Switzerland this weekend, where Vice President Harris will represent the United States. Finally, this agreement accelerates Ukraine's integration into the European and transatlantic communities. It includes major commitments from Ukraine to implement democratic, economic, and security reforms in line with the European Union's accession goals and NATO's programs of reform. While we take this step, the United States is also intensifying pressure on Russia. Yesterday, the U.S. Treasury Department made clear any bank anywhere in the world that deals with sanctioned Russian banks, companies, or individuals risk being sanctioned themselves. And we announced roughly 300 new sanctions on individuals and companies that are helping Russia with the war effort. They include key parts of Russia's financial sector. I'll wait till it goes over. As well as individual and entities that supply Russia with items critical to its defense production, like microelectronics, machine tools, and industrial materials. We also sanction more Russian future energy projects, that Russia's natural gas oil projects that are under construction and are not yet fully operating. Putin is counting on revenues from these projects. Our sanctions will disrupt those plans. Plus, at the G7, we discussed our shared concern about countries like China for supplying Russia with materials they need for their war machine. And we agreed to taking collective action to push back against that activity. Let me close with this. We've taken 3 major steps at the G7 that collectively show Putin we cannot wait us out. He cannot divide us. And we'll be with Ukraine until they prevail in this war. First is the bilateral security agreement just signed. Second, historic agreement to provide $50 billion in value from Russian sovereign assets to Ukraine. And third, an agreement to ensure our sanctions efforts disrupt third countries that are supplying Russia's war efforts. That will increase pressure on the Russian economy. Collectively, this is a powerful set of actions, and it will create a stronger foundation for Ukraine's success. 2.5 years ago, Putin unleashed a brutal war in Ukraine, and it's been a horrifying ordeal for the Ukrainian people who are so brave and incredible. It's also been a test for the world. Would we stand with Ukraine? Would we stand for sovereignty, freedom, and against tyranny? The United States, the G7, and countries around the world have consistently answered the question by saying, yes, we will. We will say it again. Yes, again and again and again. We're going to stand with Ukraine. And thank you, and I now yield to my friend from Ukraine, President.
Thank you so much, Mr. President Biden, dear President, dear journalists, dear Ukrainians, dear Americans, and thank you so much. Thanks, Italy and Georgia, for an invitation. Dear friends, today is a truly historic day, and we have signed the strongest agreement between Ukraine and the U.S. since our independence. And this is an agreement on security and thus on the protection of human life. This is an agreement on cooperation and thus on how our nations will become stronger. This is an agreement on steps to guarantee sustainable peace, and therefore it benefits everyone in the world, because the Russian war against Ukraine is a real global threat. I thank you very much, Mr. President, for your leadership, which is reflected in particular in this agreement and in your years of support for Ukraine. I thank our teams, both teams. Thanks very much for making sure that the details of the agreement are really good. And of course, I want to thank every Ukrainian soldier, all our people whose courage made this level of alliance between Ukraine and the United States possible. And I'm proud of our people and what Ukraine can do, and I'm very grateful to all Americans, to everyone in America who strengthens American leadership. So, under the points of the agreement, first, the agreement contains a very detailed, legally binding part, and this means the credibility of America's support for our Ukrainian independence. Secondly, security commitments from the United States are based, among other things, on the sustainability of security and defense support, not only for the duration of this war, but also for the period of peace after the war. And we will definitely ensure peace. Third, it clearly states that America supports Ukraine's efforts to win this war. Fourth, the agreement has good provisions on weapons for our defense, whereas specifically on the Patriot systems, whereas specifically on the supply of fighter squadrons to Ukraine. That's right, plural squadrons, including but not limited to F-16s. We have worked for a long time for this. The agreement is also very specific about the supply of the necessary weapons, joint production, and strengthening of the defense industries of our countries through our cooperation. And this is something that will not only provide security, but also new, good jobs for Ukrainians and Americans. The agreement also outlines what is needed in terms of intelligence information. The agreement contains key aspects of protecting the lives of our people. Fifth, it is very important that the agreement also addresses the issue of Russia's just responsibility for this war and its attempts to destroy Ukrainians. America supports both fair compensation for the damage caused by Russian strikes and working out ways to ensure that frozen Russian assets are used to protect and rebuild Ukraine. The agreement also includes sanctions and export controls that will make Russia feel the pain for what it is doing against the freedom of peoples. And two more things. I'm grateful that the philosophy of our security agreement is in fact the philosophy of the alliance, and that is why the issue of NATO is covered through the text of the agreement. It states that America supports Ukraine's future membership in NATO and recognizes that our security agreement is a bridge to Ukraine's membership in NATO. It is very important for all Ukrainians and for all Europeans to know that there will be no security deficit in Europe, which tempts the aggressor to war and makes the future uncertain. Now we are clearly defining everything. We will cooperate for the sake of victory, make peace guarantees effective, and provide the necessary security for our people. And thank you, Mr. President, for your leadership in the G7's decision on $50 billion loan for Ukraine. It's a vital step forward in providing sustainable support for Ukraine in winning this war. Russian immobilized assets should be used for defending lives of Ukrainians from Russian terror and for repaying the damage aggressor caused to Ukraine. It's fair and absolutely right. Mr. President, thank you, your team. I would also like to thank the United States Congress for their support, both parties, both chambers. Thank you, and thanks to every American heart that does not betray freedom and supports us. Slava Ukraini!
Now what we'll do is we're going to take two questions from American reporters and a question each from two American reporters and a question each from two Ukrainian reporters. The first person I'm to call on is Colleen Long of the Associated Press.
Thanks, Mr. President. About 2 weeks ago, you changed course to allow Ukraine to fire U.S. weapons into Russia. Given the reported successes, would you consider further expanding the parameters on U.S. weapons into Russia, even despite your concerns about escalation? And on the news from home, you're going through something that so many American families go through, the intersection of addiction and the criminal justice system, but you're not like most families. Was your son able to get a fair trial? Do you believe the Justice Department operated independently of politics? And for President...
Let me answer your question and you ask his question, okay? With regard to the first question, it is clear that the near abroad, meaning just across the line of the border with Russia and Ukraine, that it makes a lot of sense for Ukraine to be able to take out or combat what is coming across that border. In terms of long-range weapons, longer-range weapons into the interior of Russia, we have not changed our position on that sort. With regard to the question regarding the family, I'm extremely proud of my son Hunter. He has overcome an addiction. He's one of the brightest, most decent men I know, and I am satisfied that I'm not going to do anything. I said I abide by the jury decision, and I will do that, and I will not pardon him.
President Zelensky, a number of leaders here in Italy, including President Biden, are facing upcoming election challenges. How will the security agreement signed tonight and the other promises of support continue if they are not in office? And what's your contingency plan if they don't?
Thank you for this question. May I ask? First and foremost, I'd like to thank the people of the nations, first and foremost, to the United States, to the countries in Europe and on other continents who have supported us since the very beginning of this absolutely unjust war of Russia against the people of Ukraine. That is it. They've been killing people, that homes and territory, all that is very important. It is part of life, but first and foremost, we're speaking about people and lives of people. You understand? And this war was unjust since the very beginning. The war of this evil, whose name is Putin, the war against the people of Ukraine, and he has killed so many people. To say that it is not him, there was a military man who did it. The last one is just an instrument of his, and he's playing this instrument, and therefore it is important for us that since the very beginning we were supported by people, by nations, because they understood that we share common values. We simply want to live, and the people understood. They imagined what will happen if such evil attacks them, and therefore we were supported by people. And I thank President Biden and other leaders who, since the very beginning of the invasion, Putin's invasion, started to support us. They, based on their values, they were based on the voice of their people, and it is impossible without people. And I am sure that this nation chooses leaders and presidents, and it seems to me that no matter whom the nation chooses, first and foremost, it seems to me that everything depends on the unity within this or that state. And if the people are with us, any leader will be with us in this struggle for freedom.
Yeah, with pleasure. Thanks so much. Так, будь ласка, телеканал Інтер.
Yes, please, Inter.
Irina Ivanova, Inter TV Channel Ukraine, and I have a question for both leaders. So today, during the G7 meeting, the discussion focused on developing Ukraine's air defense system based on the most advanced Western complexes and also on enhancing long-range capabilities. So my question is, can you provide any details on the initiative and about the readiness of our allies to take part in it? Thank you.
Be happy to respond to that. We have acquired a commitment from 5 countries so far for Patriot batteries and other air defense systems, as well as we've let it be known to those countries that are expecting from us air defense systems in the future that they're going to have to wait. Everything we have is going to go to Ukraine until their needs are met, and then we will make good on the commitments we made to other countries.
I think President Biden already answered your question. Really, he knows, and all other partners, they know that urgently we need 7 Patriot systems. Yes, to save our cities, not all of them. It's a pity, but urgently 7. And we discussed the possibility of having 5 of them. It's true, but the partners work on it. It doesn't mean that tomorrow we will have these 5 systems, but we see in the closest future good result for Ukraine.
You'll have some relatively quickly. American reporter, Josh Weingrove, Bloomberg.
Thank you, Mr. President. I have a question for President Zelensky shortly on the announcements, but if you don't mind, I'd like to ask you about your discussions on the situation in Gaza here at the summit. You were asked just a short time ago about it after the skydiving demonstration. Can you give us your assessment of Hamas's response? And do you believe that they are trying to work towards a deal, or is this response working against a deal? And what is your message to allies, including those here at the G7, about what more, if anything, the U.S. can do to drive towards a peace agreement? Thank you.
I wish you guys would play by the rules a little bit. I'm here to talk about a critical situation in Ukraine. You asked me another subject. I'll be happy to answer it in detail later. But the bottom line is that we've made an agreement. I've laid out an approach that has been endorsed by the UN Security Council, by the G7, by the Israelis, and the biggest hang-up so far is Hamas refusing to sign on, even though they have submitted something similar. Whether it now that comes to fruition remains to be seen. We're going to continue to push. I don't have a final answer for you.
And to President Biden's point, a question about today's discussions. President Zelensky, the $50 billion today, you've had the supplemental, of course, from the U.S. Congress recently. Can you give us an assessment of the situation on the battlefield right now and what has been given now? How long will this get you in terms of either stopping the Russian advance or making headway on this? And how long will it last you if indeed future leaders or current leaders are unable to reach consensus on further aid packages? And President Biden, I'd welcome your assessment of the situation currently on the battlefield and what difference the supplemental has made as well, sir. Thank you.
Thank you for your question. Indeed, we were expecting the fundamental package of the support within the Congress of the United States of America, and truly it was a long pause for our warriors first and foremost, but it is important and we are grateful that in the very end we have this supplement, and this will for sure strengthen our warriors. Yes, this has given the opportunity to the enemy within this pause to try to occupy Kharkiv, but that attempt was stopped by our warriors. They were repelled. The enemy was repelled, and we, despite everything, disrupted all their plans, and it seems to me that that is the most important thing. What this supplement that will arrive gives us, it enables us to fully equip the reserves, those guys, those brigades that are ready, so that they provide for the opportunity to rotate our units on the battlefield, so that they can have some rest, so that the brigades can regenerate, so that other brigades enter the battlefield instead of them with equipment. This is what the supplement gives them. So the raise of morale but also the raise of strength of our brigades. And it seems to me that this is the most important. For how long this will be enough? Look, we without package have been holding the lines for 8 months, and the Russians had no successes. And therefore, the question for how long it will be enough. No, I think the question has to be for how long the unity will last. The unity in the United States together with the European leaders. How these or those elections will influence this unity. It seems to me that we should look on this exactly this way, to preserve unity, to preserve the integrity of the world, integrity of the democratic world, because if Ukraine does not withstand, the democracy of many countries will not be able to withstand, and I'm sure of that.
By the way, the idea that we had to wait till we passed the legislation overall, even held up by a small majority of our Republican colleagues, was just terrible. And there's a lot more money coming beyond what's already come in the other tranches that are available now that we've passed the legislation. So they'll have what they need and get it there as quickly as we possibly can.
Thank you so much, Mr. President. Telegraph, будь ласка. Telegraph, please.
Good evening. My name is Yaroslav Zharin of Telegraph UA. Thank you for this opportunity. I have a long way from Kyiv and have enough time to prepare such long question. Firstly, to Joe Biden. Mr. President, the additional Ukraine Supplemental Appropriations Act that you signed mandated the submission of strategy war for the war in Ukraine within 45 days after its enactment. This deadline passed on June 8th, and now yet the international community has not seen this strategy. Has it been developed? And if the strategy is classified, what step does your administration plan to take to hasten Ukraine victory in the war? It's my first question. The second will be to the President.
What was the last part of your question?
Has it been developed, this strategy, and what steps does your administration plan to take to victory Ukraine in the war?
The steps we're going to take to make sure that Ukraine has victory and that Russia does not prevail is continued support. What we just signed. We signed that, and a significant number of nations have signed it. We have convinced the G7, we've got support of the G7, and quite frankly, 48 other countries. We sat with the Prime Minister of Japan, South Korea. We have 50 nations have signed up beyond the NATO and the G7. And so we're going to stay as long as it takes. With regard to the plan, that is a plan in process now. We're discussing with our Ukrainian friends exactly what it would be. We have a lot of movement toward that. We know the outlines of it. We have not done the detail of it all. But we know what Ukraine is capable of doing when given the material to defend themselves, and that's exactly what they're doing now.
І друге запитання до президента Зеленського.
And my second question is to President Zelensky. It will be in Ukraine. And recently you have made a couple of sharp statements regarding China, and there are rumors in press regarding the possible supplies of Russia's weapons to China. Apart from that, China is actively promoting its own peace plan among certain countries. What are the motives of Beijing now, and would it be possible to change the vision of China regarding our war, and which role the US can play in this? And the final question is China a partner of Russia in these crimes that it commits?
Yes, I understood that your trip was long. First of all, I had phone conversation with the leader of China by phone. He said that he will not sell any weapon to Russia. That is the first. We'll see with you. We'll see. But he said to me, if he is a respectable person, he will not, because he gave me the word. The second, you know very good with details our peace formula is very open for everybody, basing on charter, yes, UN nation, and you know that it bases on next principles: territorial integrity, sovereignty, nuclear security, food security. if China has alternative view on it, it can prepare alternative peace formula. If we share common views on it, like with globally with all the world, I think so. So if they share the same way to peace, we will find dialogue.
By the way, China is not supplying weapons, but the ability to produce those weapons and the technology available to do it. So it is, in fact, helping Russia. Thank you all so very much. Appreciate it.
This concludes our press conference. Thank you, everybody.
The President of the United States, Joe Biden, there shaking hands with Ukrainian President Volodymyr Zelensky on the sidelines there of the G7 summit, coming off a historic agreement, a bilateral agreement between the U.S. and Ukraine, 10-year agreement that the U.S. will provide some assurances to back Ukraine in its efforts to fend off Russia. According to the President of the United States, Joe Biden, telling folks in that press conference that, quote, "We will be with Ukraine until they prevail in this war." Romaine Bostick here alongside Alex Steele. This is the close on Bloomberg as we count you down to the end of the trading day here on this Thursday afternoon, Alex. And it's been quite a day. I mean, I think we should kind of start overseas because we continue to see European markets really on the back foot, not necessarily because of what's going on between Biden and Zelensky, but a lot of other things going on at the G7 today, particularly with Emmanuel Macron.
Yep, you have European equities getting hit pretty hard. You have the left and you have the right really taking force when it comes to those legislative elections that are coming in the next few weeks over in France. The market's responded in kind, right? Yields have really shot higher and the equity market has declined. Now, for the most part of the day, that sort of continued the theme within the markets. Yes, the S&P is at a record. I get that. It's up 0.1%, but it wasn't always like that. It was flat for most of the day. The Dow Jones Industrial Average have also been trading pretty heavy. What has really stood out, though, Romaine, is bonds. And bonds continue to get that bid. We had the 30-year. It went really well, really solid demand. Real estate and utilities really outperforming within the S&P. That feels like a safety trade.
And we talk about that bond move here. That really is setting up maybe the potential for a showdown between the markets and Jay Powell.
All right, well, joining us now from the G7 is Bloomberg's Anne-Marie Herdern, who was in the room during that news conference. Anne-Marie, what were your takeaways and what happens next?
Well, I think the big takeaway actually was at the end there. Biden could have stopped when Zelensky said that he had a call with the leader of China, Xi Jinping, and that China is not selling weapons to Russia. Biden actually came back and said, by the way, China's not supplying weapons with the ability to is not supplying weapons with the ability to produce those weapons. The technology, though, available to do so, it is in fact helping Russia. And this gets to the core of some of the deliverables the U.S. administration wanted to see at this G7. One was trying to tighten the screws on whether it's the chips that Russia has access to or whether some of the financing that Russia has access through third countries and third-party lenders. They're trying to go after broader scope so that Russia is unable to get access to some of this, whether it's U.S. technology chips coming via a Chinese company or smaller Chinese lenders or individuals dealing with Russian banks. So I thought that was interesting at the very end there. And then, of course, really what Biden wanted to tout at the very beginning of this press conference was the $50 billion front-loading the assets that is accruing from these frozen Russian assets sitting in Europe. They were able to get it over the finish line. And that's really important for a lot of leaders here because they're very unsure of what potentially the next 6 to 9 months may mean, not just in the U.S., but other elections around the world.
But I want to talk about that. We're just looking at a picture there, Anne-Marie, of those two leaders signing that agreement here. This is not necessarily a binding agreement. A new administration in the United States could make this agreement moot. New administrations over there in Europe could make those bilateral agreements moot as well.
That's right. President Zelensky signed a number of these bilateral security agreements with other leaders before he signed this important one, which he called unprecedented with the United States. He said in his comments there, Volodymyr Zelensky, that this was legal, but it's not a treaty in the sense that Congress needs to sign off on it. It does give a 10-year security pact, but you're absolutely correct, Romaine. A future leader could back out of this. What this does set the stage for potentially is more cooperation between Ukraine and the United States, potentially sets the stage for joint military exercises or drills, but it also means that in favor of this and in lieu of this, the Ukrainians would also need to have more reforms. So that is something the U.S. is doing. But this is another provision, like that $50 billion that Ukraine is going to get before the end of the year by tapping the future interest payments of those assets. This is potentially them trying to set up Ukraine and election-proof whether or not who leads the future of the United States, if it is a President Donald Trump next year or if it is once again President Biden.
And that's just the U.S. I mean, there are questions about will Macron have a mandate in the next couple of weeks? Olaf Scholz also definitely in the hot seat after those parliamentary elections. I'm wondering about the circumstances there, right? At the one hand, you have a commitment of these G7 leaders right now in the here and now, very committed to helping Ukraine. Then you have the economic ties. No doubt, tariffs are going to be back in a big, big way if President Trump wins the White House on pretty much everything that the U.S. imports, which would 100% hit Europe as well, not just China. Europe also ramping up its pressure on China imports. The economic and the geopolitical cooperation and conflict. How does that play out on the ground?
Well, there's two things. One, all of these leaders are dealing with a lot of issues at home, whether or not it's the United States, France, the United Kingdom. Rishi Sunak may be out of a job in 3 weeks to the day exactly, or Germany. You see the electorate across the world really concerned about two main issues, the economy, and that comes down to inflation, as well as immigration. And then when you look at potentially what can happen, wanting to combat China and the tariffs that are going up, you have to, one, look at what Trump is calling for. 60% imports on China and a 10% tariff ring around the United States for all imports. Obviously, that unnerves European leaders, but some may question whether or not is Trump actually going to do that, or is this just rhetoric to try to use to get a negotiation and a deal potentially when he would come into the White House? But regardless, you're absolutely correct. There are going to be more tariffs. There's going to be more tariffs out of the United States, whether or not it's Biden or Trump. There's a nuanced approach, though, that I think we saw take place this week. The United States put 100% tariffs on EV imports of Chinese cars into the United States, which, by the way, there isn't a single one there right now.
Yeah.
What you saw the Europeans do after the investigation from the Commission is they took a nuanced approach, whether or not it's 17.4% for one company, as high as 45% for another. And this was difficult because you have the likes of Olaf Scholz saying that these don't work. Tariffs don't work. They make everything more expensive, people more poor. And what's going to happen is that the access we're going to have in those countries is going to be much harder if we put up our walls. So you can see there's very fraught negotiations, and all of this is tremendously more difficult given the fact that a lot of these leaders came into the meeting this week weakened at home.
Anne-Marie Hordern out there in Italy on the sidelines of the G7 conference. Historic agreements, bilateral agreements being signed by the president of Ukraine with several of the developed nations out there, including Japan, the UK, and the U.S. And Anne-Marie there at the end was talking about some of the discussions over there at the G7 about trade and tariffs. So let's continue that conversation right now with the former Commerce Secretary of the United States, Wilbur Ross, joining us right now, who served in the Trump administration. Prior to that, he ran W.L. Ross and continues as chairman, president, and CEO of Ross Acquisition Corp. Mr. Secretary, great to have you here on the program. Kind of fitting that the G7 is talking about a lot of those tariffs that originated not only from the Trump administration, but specifically from your department as well.
Right.
We now have an ability to look back over the last 7-8 years. Have those tariffs been effective?
Oh, I think they definitely have been in several regards. One, it let everybody know that the president was serious about fixing the balance of payments problem, and two, that he was willing to break with the tradition that prior presidents had set up. So I think these present tariffs that President Biden is putting in are really just an extension of the thinking that we had before. The auto vehicle tariff on electric vehicles, for example, we started, and in those days, there weren't even any electric vehicles sold to the U.S. from China. And so it was easy to get it into the agreement because it didn't hurt their then exports. But it set the pattern, and I think this is what's now being followed through with.
There's been a big question as to what, if anything, gets us to the point in our relationship with China where maybe those tariffs could either be reduced or even eliminated. How do you feel about the progress of our relationship with the Chinese and whether we are going to get to a point where it is more amicable?
Well, I don't think there's ever been proof that running a big trade deficit with another country makes them a true ally. I think that's one of the many fictions that the so-called free trade people had prompted over the years. I think that it's essential that Biden took the steps that he has taken. I wonder a little bit why it took 3.5 years to get there, because China has been ramping up the EVs for quite a while. But at least he's now doing it. And I think that's good. And it's consistent with trying to create a better climate situation, but to do it without hurting our balance of payments.
Secretary Ross, President Trump floated to lawmakers today higher tariffs in exchange for lower taxes. Does that make logical sense, or does that create a different economic problem?
Well, remember, tariffs go into the federal budget as receipts every bit as much as taxes do. So in an arithmetic sense, it's clearly correct that one could very well offset the other. President Trump has always liked the idea of tariffs as a revenue source, and that's why he went with the idea of tariffs on products from day one, rather than having quotas, and if the country exceeds those quotas, then putting in the tariffs. So he views it and has viewed it partly as a revenue measure, but more than that, it's to make a fair arrangement between the countries.
Mr. Secretary, there seems to be a lot of questions now as to Trump 2.0 economic plan. Is that inflationary? When we talk about tariffs, and there's a lot of debate as to whether or not tariffs are inflationary or not, but there's reduced immigration, which you could argue shrinks the workforce, renewed tax cuts with more fiscal stimulus, and the questions about Fed independence. What say you?
Well, that's a whole lot of questions all in one question, so I'll try to answer them one by one. Go back to the Trump years. There was no big runaway inflation. So the idea that the tariffs that we put in were somehow going to hurt the working people, charge them too much for goods, proved to be incorrect, despite the fact that we had unemployment down below the 4% level. So there is no evidence that the Trump tariffs really were inflationary. And second, the reason for that is, to some extent, the other countries absorb it themselves, that either the exporters or in some cases the governments there providing them with subsidies. So it's just not the same thing as the naysayers had anticipated. That's not what the record shows.
Mr. Secretary.
Then I think your other question was about what does that do to relationships? It seems to me that we've done at least as much damage in relationship by constantly provoking China with Taiwan and with some of the other actions that the government has taken. This administration's policy toward China and frankly toward a lot of other countries has been a little bit schizophrenic in that on the one hand he sends Janet Yellen, he sends Anthony Blinken, sends all kinds of people over there to negotiate, and then he keeps attacking them verbally. I think a better solution would be Teddy Roosevelt's solution: speak softly and carry a big stick, rather than speak loudly and carry a little stick.
Okay. Are you still, I'm curious, Mr. Secretary, are you still advising Donald Trump in his campaign and his potential candidacy here for president?
Well, I certainly have been supporting him both in terms of my endorsement quite a few months ago, and in terms of monetary contribution. So yes, I'm very much in favor of his re-election.
There's a meeting that was taking place earlier today in Washington. The Business Roundtable hosted it. I know these meetings are pretty standard during campaigns. They meet with both of the major party candidates. Today was Trump's turn here. What is the message that you would want the business community to hear out of this Trump campaign as they decide what the outcome might actually be?
Okay. Well, first of all, quite a few senior business people are in fact supporting Trump. A number of them formerly had been much more in the free trade camp than they are now, because they've seen the actual results of the Trump policies, and they've seen the Chinese government and others taking more control of the private sector, and that is worrisome to them. You probably saw that some of them are moving big facilities to India, and others are moving them to Vietnam, and quite a few moving them to Mexico. So they're still looking for low-cost production, but they're being weaned a little bit of the idea that you can have a really complicated and really elongated supply chain.
Secretary, one last question. Bill Gross, legendary bond king, wrote in an op-ed in the FT, and he said that Trump is the more bearish of the candidates for treasuries, is what he meant, simply because his programs advocate continued tax cuts and more expensive things. Both candidates, the idea, are going to be negative for the fiscal deficit. The budget deficit will continue to rise, but Trump will be worse. What do you say to that?
Well, that's Mr. Gross's opinion, but the truth is that deficits are running very, very high under President Biden. The difference is that these measures, these expenditures to the public, are putting money into the pockets, for the most part, of people not working, as opposed to creating jobs for them to fill. And I think that's part of the reason why inflation has been as sticky as it is. And as you know, the Federal Reserve just decided not to make a cut because of worries about continued inflation. I think it's inherently more inflationary to put out money from the government that does not go to productive use than it is to put out money that goes to productive use. So I would argue that the inflationary pressures are much more likely to be severe under President Biden than they would be under President Trump.
All right, Mr. Secretary, I have to leave it there. Appreciate you taking time for us. Wilbur Ross there, the former U.S. Secretary of Commerce, as we count you down to the close here on this Thursday afternoon, a fourth day of gains in the S&P 500 and a fourth day of declines for U.S. Treasury yields. This is Bloomberg.
your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg.
Treasury says large deficits are to keep the U.S. debt burden rising after November's elections.
Unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
All right, let's turn to another big story today, and that involves Tesla. Its annual meeting taking place today as investors are waiting on pins and needles to find out the results of a final vote on Elon Musk's $56 billion pay package. The shares higher after Musk claimed on X that the vote is shifting in his favor. The final say, though, will probably come around 4:30 p.m. New York time. Let's get some context for this from an expert in the space. Charles Elson, consultant over at Holland & Knight and a founding director at the Weinberg Center for Corporate Governance at the University of Delaware. Thanks for being here, Professor. This case is a little complicated because we talk about a $56 billion pay package. This was a pay package that was approved something like 5 years ago. It's been caught up in the courts. It's now back to shareholders. If you believe Elon Musk, shareholders have now said, we're good with this. Does that mean this is settled?
Not at all. One correction, I was a consultant at Holland Knight, kind of spun around this particular case. But no, the vote is kind of interesting, but it's really not really meaningful in terms of the court case. The judge found, and this was, I think, quite interesting, that given the substantial equity given to Mr. Musk, given how much equity he already had, did not provide incentive to him. In other words, it lacked corporate purpose. Therefore, it was a gift to him. And a company can give money away without corporate purpose, but every shareholder has to approve it. It has to be a unanimous approval by the shareholders. That didn't happen here, and would probably almost never happen in a large public company like that. So it really doesn't affect the case. This is more of a get people angry and talking about it as opposed to having real legal significance. The judge, as I said, found that that it was provided no incentive, therefore was a gift. And that's the ultimate way to analyze this thing. The vote is kind of interesting, I guess, but it really ultimately is meaningless in the ultimate resolution of this case.
This gets to a broader question, though. And I mean, once you get through sort of the weeds of the actual case itself and sort of the dynamics of it, it gets to a broader question about corporate governance and just about the idea here that once the board signs off on something, once investors sign off for something, in theory, that should settle it. Now, we can sort of look back in history and say maybe he didn't deserve that pay package, but isn't that sort of moot?
Well, think of it this way. Delaware has always been very investor protective, both majority shareholders and minority shareholders. And to give corporate assets away, to give away a minority shareholder's money without their approval really is problematic in the long term because it means it's going to be much harder to raise minority capital. And frankly, if you didn't need their money, why did you ask for it to begin with? And that's really what this is all about. That if it is purely a gift, and the judge reviewing what the board did, reviewing the entirety of the package, found that it was in fact a gift, then appropriate governance is that everyone has to vote to approve to give money away. It's their money. Now, if there was corporate purpose to it and there was something there, then you're right. Majority vote would in fact be successful. But in this particular case, because she found it was a gift, at least so I argue in my brief, that it had to be unanimous. And think about it this way, that's to protect minority shareholders. And if we don't do that, our whole system stops. And I think this is much bigger than Elon Musk. This is a very important legal point.
Well, Charles, also what's a bit bigger than Elon Musk is just the idea that the board was too much in Elon Musk's pocket. And you can make an argument that there are other companies that you may look at and wonder the same thing. How do you view that?
Well, that's what the judge found. She found that they weren't independent, and that the idea of the package came from him. There was no negotiation. I think there was a famous line somewhere where they were effectively was negotiating with himself, and that's not what shareholders bargain for when they elect a board. The board is there to protect their interest, the interest of all holders, not one, not the majority holder, not a particular holder, but everyone. Because if they don't, then no one invests, and that story has been kind of lost in the theater of this whole thing. And if you don't protect all shareholders, the system basically stops, and that's the problem. That's why you want strong, independent boards who work with management, monitor management, and if necessary, terminate management, because they are there to protect the wealth of the shareholders, the owners, the investors in this company. And I think that's really the point, and that gets a little lost in the volume here.
Well, that gets lost in the key man risk. Like, you can make the argument that Tesla's unique in that way. All right, Charles. Hey, thanks a lot. We got to leave it there. Charles Elson, thanks for being patient with us. Founding director of the Weinberg Center of Corporate Governance at the University of Delaware. All right, time now for top calls to look at some of the big analyst movers on the back of recommendations. And we are less than 30 minutes away from the quarterly results out of Adobe. Investors very eager to see it. The stock has been hit by the lull in AI efficiency that's been plaguing the software sector. There's competition issues, there are recurring revenue questions. Tyler Radke is director and co-head of U.S. software at Citi. He has a neutral rating and a $529 price target on the stock. What are you expecting when the numbers cross?
Yeah, good afternoon. So we're looking for a slightly better quarter than we saw last quarter, but we still think there's a lot of reasons to be cautious as we look towards the rest of the year, their outlook. It's been tough out there in software, right? You've seen a lot of big companies, be it Salesforce, some of the HR software companies like Workday have disappointing results. You're starting to see some softness on the consumer side. Digital native companies are hiring less folks, and everyone is pivoting investments towards AI. So we saw a softer quarter than we expected last quarter from Adobe. And then these macro headwinds kind of hit the rest of the software sector. So I think the big question is, was Adobe the canary in the coal mine? Did they see it first when they reported 3 months ago? Or is there another leg down in terms of the weakness that's impacting the results?
Well, I mean,
we're also keeping an eye. Sorry, go ahead.
Well, just on that point, though, Tyler, because, I mean, that really has been the question now for the last few weeks, not just for Adobe, but for really this entire space here. And it gets to the idea here as to whether this is a speed bump or this is sort of that material, I guess if you want to call it a cyclical downturn that we often see in this space here. I thought Adobe was supposed to be somewhat, or at least a little bit more immune to that.
Yeah, so it's a good point. Obviously, Adobe is less of your enterprise software company, right? They're not as exposed to Fortune 500 IT budgets. They have a lot of consumers. They have a lot of influencers, creative professionals that are using their software. I think the other thing to keep in mind is on the competition side, right? So historically, Adobe has had nearly a monopoly on the creative segment. You're seeing a lot of upstarts, whether it's Canva, Figma, who Adobe tried to acquire. You also have some of these AI-backed startups like Midjourney that we see in terms of the web traffic really starting to eat into the share of those new users that Adobe is relying on to keep this growth engine going. So I think you combine a little bit of the macro softness, which again does include some of that consumer weakness with the rise of competition. That's kind of what's underpinning a lot of the weakness that we're seeing.
All right, Tyler, we appreciate it. We know you're going to run and get a look at those numbers. We look forward to your research note. Tyler Radke over at Citi joining us there. But, you know, one thing it has going for it, it hasn't had a run up.
Yeah.
in the same way that, say, other stocks have.
Well, that might be better, right?
That's what I'm
Because I
saying.
feel like we've seen that a lot this earnings season, right? Those companies that didn't have that run up, they get the big pop. The companies that had the run up, they don't.
Not a buy the rumor, sell the news for Adobe. So we'll look at that. All right, coming up, we're going to continue to count you down to the closing bells. Jeff DeGraff is head of technical research over at Renaissance Macro Research. Record close after record close. We'll break it down. This is Bloomberg.
Of politics to the world of business. 2 times a day at 1 p.m. and 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world twice a day at 1 and 5 Eastern, only on Bloomberg TV and radio. Context changes everything.
Saturday mornings, I understand you have off.
Yeah, Saturdays is always a day where I power down. So I run at a relative high pace throughout the week, try to wrap things up, and Saturday is a quiet day for me in terms of work. And I start typically by playing tennis with my wife. We go for a swim all year round. After that, have a nice lunch, and then I'm on to a good trajectory for the weekend. And then Sunday, I try to prepare for the coming weeks. But through a weekend, I would send either no emails or very few emails, because I want to drive a culture where all get an opportunity to spend the weekend as they fancy. I think what we do is so difficult, and it takes so much creative thinking to succeed, that if you're always on, always busy, the bandwidth of your reflection is just too narrow. And I generally believe that Monday mornings I'm a better leader than I am, say, Friday afternoon. I also take all my vacations. I generally believe I'm a much better CEO right after a vacation than I am before vacation.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Morning from our world headquarters in New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg, context changes everything.
So we're looking now to the market on close imbalance. So all buy sides across the indices today. The S&P 500, 813 million to the buy side. And NASDAQ 100, 408 million to buy. Dow 30 around 428 million to buy. The Mag 7 stock seeing $223 million in buy-side orders.
About 10 minutes, Alex, until we get to those closing bells. And I don't know if you call this a great day. It looks kind of ugly to me, but I'm looking at an S&P, and That's a record high.
I know. Tell me if you heard this before. Yields are lower, we're at a record high, and tech is outperforming.
Yeah.
What a surprise.
Yeah.
But obviously, you lower yields, and then you get the likes of like utilities and real estate doing really well. But can we just talk about Broadcom for a second?
Broadcom or Avago?
Yeah, which other one?
Okay, sure.
Record high. At one point, it rallied the most today ever. I mean, and that's a deliver solid earnings, super solid move on the stock, despite closing at a record high before the numbers came out.
And what's crazy to me too, I think we were talking about this yesterday, how some of these kind of like older kind of tech stocks from kind of the last big sort of cycle that we had in the tech space have now sort of reasserted themselves, where you're talking about Broadcom, Oracle at a record high yesterday, and of course last week, that big rally we saw in Dell.
Yep, what old is new. The old is cool.
All right, well, let's stay in the cool here as we count down to those closing bells. 9 minutes to go, and we want to get a read here on what the markets are doing right now and maybe potentially where they could go next. Jeff DeGraff is the co-founder and head of technical research over at Renaissance Macro Research. And Jeff, I was just kind of trying to make some sense, at least on a technical basis, of what was really moving this market. And you go on the Bloomberg terminal, you can see all the factors. You look at long-short factor, momentum. You look at pure factor, momentum. You look at long-only factor, momentum.
Yeah.
I'm going to ask you a dumb question. Is this a momentum-driven market?
Well, it hasn't been, and in fact, we made a call back in March that we thought momentum was peaking in terms of the factor, and that has played out for the last 2 to 3 months. We went from essentially it was the 94th percentile of momentum down to the 18th percentile. So definitely it fell apart. It didn't fall apart in NVIDIA, and it didn't fall apart for a lot of semis. And I think that's kind of what people associate momentum with, and so that became a little bit of a tug of war there. But it happened in software, it happened in some of the financials and other areas, and really the lower part, the anti-momentum names had done well. So the materials, the utilities, those things had done well. It's interesting, if we get oversold in yields, and we're not quite there yet, but if we get oversold yields on the 10-year, and I suspect it's going to be somewhere around 420, maybe 423, something like that. Oversold conditions in the 10-year yield tend to reassert the momentum trade. So I think we can start to get back to momentum if we get these yields oversold. We're not quite there yet, but I think, call it the holiday weekend around the 4th of July, and I think we're probably in that zone.
Yeah, we're getting close there. The 10-year right now kissing that 424 level right now. And can you draw a distinction for me, though, Jeff, between that momentum trade and some of the trend following trades that I don't know if they're still sort of asserting themselves here, but are you seeing a significant divergence between those two trades in terms of what's happening, what's being bought, and the direction?
Well, it's a good question. It gets a little dicey. Momentum for us is really about rate of change, right? It's how much are you up over a certain period. Trends are kind of the path of least resistance. And what you're seeing, and this is always the challenge in bull markets, in fact, it's one of the ways that we determine if we're in a bull market, there are a lot of absolute uptrends. Energy is an absolute uptrend. Utilities are an absolute uptrends. Materials are an absolute uptrend. So you're making money in almost anything that you own here, which is good news, and that's the definition of a bull market. Are you outperforming, right? Are your relative performance trends in place? And that's where you really start to make the distinction, where utilities are just trying to make that turn in terms of that relative performance. Energy is not making that turn in terms of relative performance. So it's a fine line, but the momentum, most of the momentum names are still in trend, and that's one of the reasons why when they get oversold, they're buyable, because those trends are so powerful.
54.33. That's where we sit on the S&P, Jeff. How much more upside until we technically got to take a break?
So back on the 13th of December, I know this is very specific, but we had 71% of the names within the S&P 500 make 20-day highs. That had only happened 6 times since 1957. When we looked at that, and that's one of our internal momentum indicators, when we looked at that, it implied a 22% return over the next 12 months. It implied a 9% return over the next 3 months, which we got, and it implied a 14% return over the next 6 months, which is today, 6 months from December, and it's almost exactly 14%. So we would look at around that 5,800 as the level for the end of the year, if that's in fact going to hold. Now that's going to be selective as we get there. We expect that we're going to get breadth divergences and those things to happen, but for the overall headline on the market, we still think that 5,800 is doable. It's going to require some help from yields. We think yields are going to have to stay below essentially 435 to have that tailwind, and frankly, we don't want to see them drop much below 380, but we do think that that's still in place.
What's oversold at this point, knowing that a lot is in an uptrend and a lot has momentum? I mean, banks have gotten hit quite hard in the last couple weeks.
Yeah, that's one of the groups that is oversold. There still are in uptrends. Things like State Street were actually an optimal entry for us yesterday. So we think there are some opportunities that are brewing in financials. It's a very good point, and it's an important one, because if we don't have help from the banks, and we don't need it today or next week, but we need it, for call it the month of July. If we don't have support from the banks as the market's moving higher, then I think we have to truncate our expectations on, one, the duration of the rally, and two, the magnitude. Right now, we're still okay. It's an uptrend. It's oversold. That should respond. If they fail to respond, and we'll know within a couple weeks, then we'll have to do some reassessment and rejigger our expectations.
When you look at sort of the trends, and I should say the general sort of movements that we're seeing in the markets here, is there a sense here that the broadness, or maybe lack thereof, the lack of breadth, ends up fueling that or hindering that, or does that not matter?
Well, breadth gets a lot of play, and it's not as useful as the play it gets. So I would look at breadth. Overall breadth is still okay. It's not phenomenal, but it's good enough. And that's really what you need. You just need breadth to be good enough. And we worry when cumulative breadth starts to decline and the market continues to go up. That's not happening. It might not be keeping pace. It might not be as robust as the overall market itself, but the breadth lines are still ascending.
Money market assets hit record $6.12 trillion in the week to June 12th, according to ICI.
We're in a global bull market. This is not an uptrend that is unique to just the S&P 500 or the NASDAQ 100. We are seeing uptrends in France, in the UK, in Japan, in Canada. It is global in nature. We think actually China is turning and Hong Kong is turning. So you've got kind of this global breadth, and we would look at global breadth as being at least as important as U.S. market breadth. And really, I think what's happening in terms of breadth and the concerns that people have is you've just experienced relative underperformance in the Russell 2000. You've made money in the Russell 2000 owning it, not a ton by any means, and certainly it's there's a fear of missing out there. But it's not as if it's in a bear market. It's just been not as robust as what the large cap names have done.
Jeff, great stuff. Got to leave it there. Up against the clock, Jeff DeGraff, head of technical research at Renaissance Macro Research here with the S&P 500, up about 0.3%. Not a broad-based rally, but NVIDIA is doing what it's supposed to do. Stick with us. Full coverage coming up right now on Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alex Steele. And they'll take us through the closing bell. It's a global simulcast, Alex.
It is. It's
joined
hard.
right now by Scarlett Fu in our TV studio. Carol Master and Tim Steiner. I just read what's in the prompter, Carol. They changed it up for me. I don't know. I'm lost. I'm just like a robot.
I'm Romaine Bostick.
Yeah.
Puppies. Anchors are puppies. We're puppies.
We're puppies.
Chased our tails.
That's right. There. All right, let's get to the markets here. Record high on the S&P 500 and NASDAQ, also up 0.4%. Bond yields down once again. Carol Master.
Yeah, don't you feel like that's the big story? I mean, whoa, another, softer inflation print, and you've got, a 10-year note now at 4.23. I mean, whoa, whether or not we get some data points next week or in a couple of days or in 2 weeks, whether that I would say yes, because we've seen a lot of volatility in this trade.
Given CPI, what we saw with CPI yesterday, PPI today, I'm starting to feel like, and jobless claims today too, I'm starting to feel like that Friday number that we got for payrolls was kind of the outlier here, Scarlett. It seems like everything's moving in the direction that the Fed wants to see it move in, except for that one number that we got last Friday.
Yeah, and we keep hearing how the jobs numbers may be not corrupted, but may be affected by the whole migration situation as well. I feel like we get some data tomorrow. We get import prices, we get Michigan consumer confidence, but it's going to be a bit of a snoozer because the Euro Cup begins tomorrow afternoon, and you know that the trading floors will all be tuning in the final hour of trading.
Womp womp. Totally just phased right out there. Bank of America, though, guys, talking about the pain trade, second half, cyclicals. That's going to be what we're in for.
All right, well, we get the closing bells here in New York. You're looking at an S&P 500 up about 12 points here on the day, a 0.2% gain. That doesn't mean much. In fact, it actually does. That is a record high, a modest one to be sure, but I think a lot of folks will take it as we now enter into new territory and new heights for the benchmark index. The NASDAQ composite also at a record high today, a 59-point gain, up about 0.4%. Meanwhile, the Dow Jones Industrial Average is going to close out in the Russell lower on the day by almost a full percentage point.
I got to say, Romaine, I think it's safe to say that the S&P 500 limping to another record, because if you look at the internals within the index, you've got most names lower, about 314 to the downside, 185 gaining ground, Scarlett, on this day, 4 unchanged.
Record high, doesn't matter if you limp there or you march there. You take a look at the best performing sectors. There's actually only 4 out of 11 sectors in the green. Tech is up 1.4%, so that is a decided rally there. REITs up 0.5%, utilities barely higher by 0.25%. In terms of decliners, energy and communication services each losing about 1%, and industrials also trailing behind, losing 2/3 of 1%.
All right, guys, to the individual gainers we go. Broadcom certainly atop that list, finishing off the high of 16%. That's where it was at its best point of the day, or its highest.
So the S&P 500 and the NASDAQ both register record closing highs for the 4th session in a row.
500 at that record close. This is after the company, you know the story, delivered strong results and upbeat forecasts lifted by robust demand for AI products. B of A saying Broadcom has a pathway to, quote, join the Trillionaires Club, as it reiterated a buy rating, raised its price target to $2,000 from $1,680. The stock closing at $1,678, almost $1,679 a share. All right, to Tesla we go. That stock way off its highs of the day, was up almost 8% at its highs, finishing the day with about a 3% gain. Among the top gainers in both the S&P and the NASDAQ 100. This after, of course, we know Elon posting on X that the 2 key proposals to re-ratify his pay package and move the EV makers' legal hub to Texas from Delaware are passing by wide margins. 4:30 is when we actually get some of this vote, so we'll wait for that confirmation. But nonetheless, investors bullish on Tesla today. And NVIDIA also continuing to move ahead, up about 3.5%. Again, a top gainer in those major indexes, rallying to a record. This is where we had, of course, the 10-for-1 stock split this week taking effect. Stock is up about 35% since announcing that split back on May 22nd. We did have the company, I believe, coming out and talking about kind of some of the outlook, but nonetheless, investors upbeat once again on that one.
Hey, Tim, before you go on negative on me here, Apple, did you see this? Overtaking Microsoft as world's most valuable company.
It's neck and neck.
That happened out of the blue.
It's neck and neck.
Yeah, it did that right intraday, right earlier this week.
Yeah.
But closing, I guess, right?
Yep, now we're on a closing basis.
Okay, can I be a downer?
You be a downer, go ahead.
Media stocks in the S&P 500 at least got beaten up today. The worst performer, Paramount, but the one I want to talk about that was down 6.66%, WBD, Warner Brothers Discovery. Shares actually closed at a record low. There was a little bit of news earlier today. The company did sell its stake in Formula E, that's the electric version of Formula One, to Liberty Global. It's going to boost its share of ownership to 65%. Shares of Warner Brothers Discovery down more than 35% so far this year. Another one of the worst performers on a percentage basis in the